What up? What up? It's Big Chad Saturday, March 4th, 2023. This is going to be a replay of a Twitter Spaces. I'm trying to get caught up on Twitter Spaces. It's going to be a replay of a Twitter Spaces from all the way back December 18th, 2022. It actually went almost 6 hours. It was a really great chat, really kind of a good convo, and I wanted to get it uploaded. While you're here, just kind of reminder, go to my YouTube, check out the different playlists. This would go into Twitter Spaces. Check out the masterclass tutorials. If you're looking to learn how to do TA, check out the free version of my book, Trading Wisdom. It's available on Amazon right now. I also just published trading quotes recently. Anyway, let's. I'm gonna get this conversation started. I hope you enjoy, and I'll be kind of dipping in and out of the chat. All right, here we go. What's up, everybody? It's Big Chads. Just hanging out here on a Saturday night, December 17th, 2022. I thought I would hang out with you and see if anybody wants to talk about Bitcoin, talk about the market. This is going to be episode 27 in the Twitter Spaces Ask Me Anything series. This would go to my YouTube channel. It's Ched's Trading. There's a playlist called Twitter Spaces, so this will be uploaded to it after we finish talking. It's going to take a few minutes for people to join the room. So if you're listening now on the replay, or if you're just listening now live, just give me a few minutes just to attach a few tweets and kind of get things started. So hang out here for just a minute, and I appreciate your patience. I'm going to attach a few tweets. The first one is, well, let's do all of these. So I'll attach my cancer book first. If you are fighting cancer, get me your email address. I'll send you a copy of my cancer book. That's book one. Secondly, I published Trading Wisdom. You can get that book for free on my YouTube channel, Ched's Trading. And I just published Trading Quotes. Awesome book. It's 365 original quotes from me, Big Cheds. And that's available on Amazon. So check out my YouTube stuff. If you're brand new to trading, you're just kind of learning. Technical analysis. Check out, there's a playlist called Masterclass Technical Analysis Tutorials. I think you'll really enjoy that. And I'm also a founding analyst at Bitcoin Live. For almost 5 years, I've been providing a twice a week full market update. I'm really proud of the work we do over at Bitcoin Live. I'm one of several analysts. It's a world-class team. And if that's something you're interested in, definitely check that out. Again, folks, be patient here. It's going to take a few minutes to get the conversation started. This is going to be one of those more candid conversations at night. In the afternoon ones, a little bit more business. This one's a little bit more relaxed. I have a glass of wine in my hand. And I'm just hanging out with you. So if you want to talk, I'd like you to step up and to say hi. I'd like you to kind of step up. Let me know what you're thinking, how you're feeling. There's the button there in the bottom left, which is like to request to speak. There's a button there in the bottom left to request to speak. So I'd like you to do that. If you've never spoken before, this is a great opportunity for you to do it. We're just hanging out. I like going live. I like the ability to, at any, hit a few buttons on my phone and I get to talk to people, kind of real, kind of one-on-one conversations. And I love this. So this is your opportunity to talk to me, right? So I'm just going to send one more tweet out to invite people to join. Hang on, folks. Share via tweet and join now and ask me questions. Having trouble to ask me questions. BTC. All right. I sent out that tweet. We got a couple requests here. We need more, even though it's a small group, only about 43 of you folks. We usually have a couple hundred. It's Saturday night, kind of impromptu, but I'm going to need more than 2 people requesting to speak. Hit that button in the bottom left, which says request to speak. These conversations are about you bringing your issues to the table and talking to me and kind of bringing, adding your perspective to the table more than anything. So just need a few more of you requesting to speak and we'll get this Twitter Spaces rolling. So just hang on there, folks. I'm doing a couple things in the background. All right. Let's get this started. Let's bring a couple of you up here on stage. Please wait until I call you, until I call your name, and we'll go from there. Why don't we start out with up only? What would you like to say? And Mickey, why don't you hang on there,
Hey,
Mickey, for a minute?
hey, Chaz. Hey, what's going on?
What's up, buddy?
Hey, I'm a big fan.
Thank you.
I'm a Bitcoin Live member. I've been following you
Oh,
for a couple
oh,
years.
Are you here? Are you here to? No, I'm just
Huh?
kidding. How's that work? Tell us about Bitcoin Live. How do you like it?
Yeah, I mean it's pretty good. There's a lot of authors there. There's obviously you, Bob Lucas. A couple other. I like Axel a lot.
He's
He
really
normally
good.
just he just Axel's more like straight to the point. He just gives charts and an explanation. Like no BS.
Yeah.
You are more like I kind of want to I don't want to say short term, but like a little bit like relatively shorter than other chartists, like
Mm-hmm.
Peter Brand or Bob Lucas is more of a swing trader and
Mm-hmm.
does cycles.
Yeah.
Peter Brand is like more long term,
Yeah.
and I think it makes sense. Peter Brand, I mean, he just doesn't care about like daily or even hourly. He don't really look at that.
Have you read his book, The Diary of a Commodity Trader?
I have not. I
I
really
think you'd
want
like
to.
it. It's a pretty kind of easy book to get into with any kind of background, and he
Mhm.
likes like a 12 to 14 week range. You know what I mean? Like he's trading
Right.
over like a pattern on the weekly chart, and that's pretty cool. That's pretty cool.
Yeah, and one thing that I learned from Pure Brand is like he would look at the weekly close and buy or sell. He
Yeah.
doesn't even look at like daily
Yeah.
or hourly. So that's like that one thing was like, wow, that kind of like blew my mind. So that was really cool.
I think it's cool how you get the weekly, monthly. You get me. I'm giving you the kind of channel trade.
Yeah,
You get a lot of everything there.
yeah. So I think
Good.
yeah, it's good. Initially found out from Bob Lucas because he posted Bitcoin videos on YouTube in
Yeah.
2018, and then he
Yeah.
called the absolute bottom. I personally bought it at 10K and 20K, and then sold uh,
Nice.
40K. So 2-3x, just a little bit.
Not bad.
Yeah, and then I recently got in. I know you. I know you want to check the sentiment, but I've been doing pretty decent thanks to you guys. So I bought in last month at 16K.
Wow.
So I'm up. I was up a decent amount. That was like a decent chunk of my net worth, and then it's going down a little bit now, but I'm holding that for 6 months or a year. I think we're just gonna zigzag from this point. I mean, it might go down to 15.5. I don't know, and go lower. Maybe I
Mm-hmm.
don't know. Nobody knows.
Mm-hmm.
But I bought in, and then I'm just playing with NFTs right now. I saw your tweet about Trump NFTs.
It's crazy, right? It's crazy, right?
Yeah, I'm in Bahala. That's an NFT that I bought in last week. It pumped from point 0.5 to 1.5 ETH, and then now it's back to like 1 ETH. I bought a couple of those.
So what's your game?
I'm sorry, that broke up a little bit. Did I just get rugged? Can you hear me?
I can still hear you. I think Ched's dropped off. I can still hear
Oh,
you.
okay. Chance.
I lost you. My wife called me. Go ahead. What'd you say?
Oh no, what was the question? You said something about gains.
So like I'm trying to understand. Like, are you like trying to buy? Are you like stacking NFTs for 10 years from now, or do you want to buy for 1 ETH and sell it for like 2 or 3
No, no,
million?
no.
You know what I mean?
So
Like, what's your?
yeah, so I'm a Bitcoin Live member, so I kind of swing trade, and I mean I work right. I work 9 to 5 in finance. So I trade like after work, look at charts, look at NFTs.
Yeah.
Uh,
Daily close? Do you need the daily close using the 4 hour? Like you're a day job guy, so like
yeah,
how do you
no,
do that?
I mostly I do watch your videos, but I mostly look at daily, weekly, monthly.
Yeah.
I can't do day trade, obviously. Like I can check the price at work. I mean, but and I can't trade. I can't. Like I'm looking at monitors, but I'm looking at different things at work.
Yeah.
Um, so I come home and then mostly swing trade. because I don't want to pay attention to the market as much.
So how many Trump NFTs did you buy?
Right, that's the correct question. Zero.
Right.
I completely faded it, and then I was making fun of with my friends who are into NFT.
Everybody does, because you never. It's such a weird. You never know. Like, I mean, you kind of.
For NFT. So I did make decent amount of money in NFT. I held Azuki. I held Moonbirds. I sold all that in April and May. So I did good on that. I sold everything when I was selling my Bitcoin and ETH in April. I sold all my NFTs too, because I realized that if crypto crashes, then NFTs are going to crash too.
Why'd you sell your ETH in April? Like, what was the well, for you, what was that straw that broke the camel's back?
Because I knew that I got into crypto in 2017 January. That's when I started like researching and learning about Bitcoin, and I saw the price go from 1,000 in January 2017 to December to 20x. Right, it hit 20K. Right,
wow.
And then. Yep. And I was like, what the fuck is this? Is this a scam? What's Bitcoin? And I was like kind of searching through it, and I saw the price crash to 4,000, 3,000 in 2018, 2019, right? Yeah. And then I was like, I kind of faded it, and then I saw the price go up to 5,000. I was like, what is this? It just, I kept on researching it.
It's resilient. It doesn't die.
Exactly. It's like Phoenix. So it comes back. I was like, okay, what is this? So I realized that, okay, it's 2022. Same thing's going to happen. Double top. 60K, 69K. So when it broke like 40K, I was like, we're not gonna have double bottom at 30K. That doesn't make sense to me. So I just sold everything because I was scared, and that was good. In 2018, I saw the price crash. I was like, oh, okay, same thing's happening again. So I sold everything.
It's smart. Yeah. That's a really smart timing. Like that was when the longer time frame started to break down. Like if we were going to ascending triangle to 100K, like that's a hold there.
And that's when I realized, okay, I have a business degree, so I was like, if crypto is gonna crash and macro kind of sucks, I'm not like macro analyst, but I just look at it. Okay, macro sucks, crypto's gonna crash, NFTs they're gonna get fucking destroyed because it's the most riskiest asset in the world.
So are you ear to the ground on NFTs? Is that like how would you describe it?
Say that again. Sorry.
Are you like ear to the ground?
Yeah. I got into NFTs in like July. I faded the Bored Apes. That was super dumb. I kind of play around August of 2021, and then I saw the Bored Apes at like 1 ETH. But then at that point, Bitcoin and Ethereum was like 1,000, and I was buying Bitcoin and Ethereum at that time. I should have just bought a Bored Ape, but didn't buy Bored Apes. I made transactions doing some stupid meme NFTs that doesn't really mean anything. And then after like 6 months, I was like, okay, there's some quality projects like the Punks, the Bored Apes. There's some projects that are kind of legit. And I got into Azuki, sold that for 5x. I got into Moonbird, sold that for 2x.
Good for you. So let's wrap it up here because I'm really glad I heard from you. What do you think with Bitcoin? Are we going 12K? Or are we going 20? Like what's next?
So you tell me, Chaz. You're I've been talking for a lot. I was here trying to get your opinion.
Well, bro, you heard me 2 nights ago. You heard me 3 nights ago on my Wednesday report. So you know what's up.
Wait, before you leave, why didn't you buy a Trump NFT?
It's why.
So I saw it, and then I saw it at 0.05 and 0.07, and I made fun of it. Like politics aside, NFTs are meme, and all you have to realize is like, oh, it's trading at $100 or $200. That's relatively cheap, and it's Trump. That's all you have to realize. And you just bought into it. But I was like, it's 45K supply. It's still minting. I don't know. I'm going to go to sleep. And then I wake up, it's like 10x. So that's why I middle IQ'd the play, obviously.
Yeah, so I did, I think, worse than you, right? Like I saw them, and I'm not really a fan of him. And, I was like, oh, he's personally, I think a little grifty sometimes, whatever. They're $99, they're whatever. No. I found every reason not to. And I didn't just zoom out and be like, what the fuck? It's 4.5 million market cap, and he's like one of the most famous guys in the world. Like literally like top 10 most famous in the world, right? 4.5 million market cap. Like I was like, oh, 10% creator fee, this is too much. I found every reason not to. And then finally today I looked, I was like, what the fuck am I doing? And I went and bought them at 5x.
So yeah, I mean, obviously, I mean, at least you bought it. I didn't even buy it. I mean, if you bought it at 5x and sell it for 2x, you still have made money. But I realized that he was ex-president and he got like 50 million voters. I mean, that's a fact. You can make fun of that. You cannot. I mean, you can make a meme out of it. But at the end of the day, people like this guy. Whether you're, libertarian.
It's a brand.
Exactly.
It's a hella strong brand.
It's a
right?
super high, IP, intangible property. It's his brand.
Yeah.
So you can't fade the meme and you can't fade the brand, right?
Yeah.
So whether you like him or you hate him, hey, he was the freaking president of the United States. And he's a billionaire. Yeah. That's it. That's all you have to think of. And then obviously I'm super middle IQ, so I faded it. So I missed on the generational wealth. So
I mean, I'm not convinced he's a billionaire, but he was a president.
Right.
You know, he's probably at least close to a billionaire. He might still be a billionaire. Who knows?
Right.
He might have been at one point, but like 4.5 million now it's at like 20 million. Come on.
Yeah.
Yeah.
Hey, up only. Yeah. Thanks for stepping up,
Thank
bro.
You.
All right.
Yeah.
Thank you, man. Thank you so much, Tommy. You shuffling chips, Tom? What is that? I feel like you're moving around 100 stacks. What's going on over there?
Yeah, I wrote a thread. I wrote a thread talking about these Trump NFTs actually because I felt so dumb.
What? So tell us. Give us the TLDR from your perspective.
I mean, I usually when I think I've found some alpha, I'm wrong. So this is probably one of those. Like I would say 75%. Like maybe it's 90% that I'm wrong. So like people will probably lose, but I think at least 10% of the time you 10x. Like the dude's one of the most famous people in the world. Like,
crazy.
Right now it's 20 mil fully diluted. And I think there's going to be a lot of people like me. Like I would like to think I'm very middle of the road. Maybe I'm a little left leaning. I don't know, but I don't really like him. I found every excuse not to buy. And then at a certain point I had to pay attention. And I was just like, too many smart people are saying this is like a really clear play. And I thought about it for a minute and I was like, what am I thinking? The dude had like 100 million Twitter followers. The initial buy-in was like $4K to meet him. A lot of people would pay that.
It's easy to talk yourself out of something, right? That's the thing, right?
Sure. And generally people probably should when they're being shilled something.
Exactly. Yes. You are.
But when it's at 4 million market cap and the dude's like one of the most famous in the world, like, yeah, he might go shill other people later, long enough.
Do you want to? Is there anything else did you want to talk about? The stuff we talked about, BTC, BNB, or what's in your mind, if anything?
No, I'm in a game, so I'll just listen. I'll just comment. If you guys are talking about something.
Appreciate it, man.
But leave me speaking if you don't mind. I'll jump in.
I don't.
Something interesting.
All right. So listen, folks. Just quick reset on Big Chads on Twitter. I'm gonna mute you, Tommy. Jump in whenever you want. That's Tom Dwan. He's a friend, poker player. Anyway, so if you want to talk, I want to bring you up. Like, the conversation's like infinitely more boring. Like me just talking about like dry academics of technical analysis. It's Saturday night. I got a wine glass in my hand. The other, just hang out. Let me know what you're thinking, what you're feeling. Mickey, and hit that request button, which says request to speak. I want you to come up. Mickey, what's up, Mickey? What would you like to say, buddy?
Hey, bud. Well, to start with, I'm kind of jealous. Like, you're hanging out with a glass of wine, and I've just woken up. I'm on the other side of the world in Australia. So there you go.
You have time. You have time to pour a glass of wine.
Oh, I don't know about drinking in the morning, my bud.
I know. You're smart. You can't. I wouldn't drink.
I'd be going to AA meetings if I was doing that. But anyway.
I know, right? Coffee. You pour a nice cup of coffee, though. That can feel just as good.
Absolutely. Just had one of them. Absolutely. Chaz, I've got a question for you. So, we see BTC doing what it's doing. First question, when you break a diagonal, you run your line on two highs and you break a diagonal sideways without volume.
There come the boring academics. Go ahead.
Yeah, I just wanted to get it out. I noticed that it was a Saturday night chill, but I just wanted to know, like, when it breaks, when it runs sideways and there's no volume and it cracks through that line, that means nothing, correct?
No, it means something.
Okay.
It means you should start to look for a horizontal break. It's like the first clue to start to look for something more substantive. It's to start to look for that like clearly defined lower high break. It's not actionable. You shouldn't go long on a diagonal break
Gotcha.
because the diagonal, like, how are you drawing your lines? Is it candle body? Is it candle wick? Like, that's not important. It's about the trend. You just have a downtrend. So just going,
Yep.
long on a downtrend is risky. But if you break a lower high, now you have a clear level to say, my idea is good above and, bearish below or bad below.
Gotcha. My question was more probably bigger picture. Like, I wasn't around. I've only sort of played around in crypto the last 6 months. So I wasn't around when you guys talk about the FUD of 2018 and the FUD of 2020. But the FUD I'm seeing now, like, gee, it really gets you thinking. Is this just one big play, one big agenda play so the institutionals can come in and pick up
Ignore
all
that.
the cheap?
Take that word out of your mind. Institutions, because it's such a word that it's like so abstract. I'm gonna mute you while I respond because there's a little bit of background, and then but I want to hear more from you. When you hear the word institution, the institutions are coming. Like, what does that mean? What institutions? And are they buying with retail? Like, you got to avoid that thinking because that leads you towards narratives and stories and ideas. It's just momentum on the chart. It's just supply and demand. The price holding support or not. And by the way, Big Chonas has joined us, who's a veteran trader. He's a good friend, and we'd love to hear his thoughts on this. But like, FUD is good, and like panic is good. Like, we have a sentiment type of bottom, and so you're gonna get stuff like this, but it's never as coordinated. Like, it's not neat. It's not a neat and orderly story. What I'm trying to say is it's not like the quote unquote institutions are putting out bad news so they can buy lower and sell higher. Like, that's not how it works. It's still a trend. Ignore institutions. Like, you're not trading the institutions. You're trading your chart, your trade, your risk. You just gotta, like, the word
Keep it
institution. There's
simple. In
no
other words,
benefit
keep
of
it
it.
simple.
Yeah,
Block
there's
the
no benefit.
noise. Keep it simple. Watch the
Jonas, what do you
chart.
think about institutions, Jonas? Can you hear me?
Yeah, I mean, I was institutionalized for years, so I know all about that.
This is the first time you've said this in public.
Listen, I agree. I agree that it's one of those terms that we've thrown around crypto for years. When big institutions, when corporate America, when Wall Street money dips its toe into crypto. What's interesting is we have Fidelity finally offering in a very small way, but growing, offering the ability for their clients to buy Bitcoin and Ethereum, and that's the first step in that endeavor where we think about how shady um, conservatorships have been of the crypto companies that have just imploded over the past several weeks and months. So to have a Fidelity, which frankly, if can be assumed to be a much stronger, if
Stability.
the vanguard, if you will. But yes, in a market now which seems to lack that significantly trust, right? Who can we believe? Who's solvent? How leveraged to the tits are some of
Correct.
these
Yep.
things? And that, I think, just all the Binance stuff can really be summed up in one question. If FTT's implosion, if that is what really blew up FTX, they couldn't support any of their grift. Would a BNB implosion, take Binance down? I mean, regardless of if they're hedged and blah blah blah, if BNB, which was like $20 for quite a while, which is now still over like 280, some of that. I mean, that could fall precipitously, and you're telling me that's not going to blow up Binance? And what is this market like when that potentially happens? Quick thought about Bitcoin, just the thought about, like, which side is max pain, like who gets more max pain if Bitcoin drops to 15K, or 14K, 13K, or rips to like 22 to 25K. Like, which side of that is max pain? And we think about, like, what's the easiest direction to flow, supply and demand here. We're still not seeing significant demand at these prices, and the vulnerability of this market is still yet to be tested. and I can't see how.
Wait. The vulnerability is yet to be tested. What does that mean? Talk us through. What does that mean?
So we're so young in a time perspective past the implosion of one of the biggest players in crypto, FTX. We're months away from the other biggest thing that imploded, with the Celsius, Voyager, Luna, all that stuff, crypto.com. Are we going to see FTX badges on Major League Baseball umpires next year? I don't know about that. Is the Miami Stadium going to be, named FTX Stadium? We'll see about that. This is so new and so young and hasn't really rippled, no pun intended, through the economy yet. And the notion that Bitcoin and crypto is under $1 trillion, and how could it possibly have any systemic risk to the overall
That's
economy?
what JC Perret says, right?
It's about trust, though. It's about the notion of trust, and that is lost. I mean, a lot of
every cycle it's lost, though. Isn't it lost every cycle, Charlie?
Yeah, but it's the little guy. It's the kid who gets in at the top, and for a moment on paper he's doing okay, and then it all implodes. And but he's young and he has his whole life ahead of him. This cycle's different. There were people, middle age, older families, that had money, real money invested, and thought it was in a safe investment. I get yield, and it's so much more than what a bank would pay me for cash, and this is great. Of course, this is a no-brainer. I'll put 6 or 8 Bitcoin into this, and it yields 9%. Like, it's a no-brainer. What could possibly go wrong? It's the upper middle class to low wealthy people that got screwed in this endeavor, this cycle, that's different from the last cycles, and such a broader spectrum. And the resonance, the effects of this are so early. So we talk about the market hates uncertainty and stuff. Now, that's not to say that the vulnerability of Bitcoin price action, the lack of liquidity, and the ease to pump it, right, is always going to be there. So every single pump in the past year almost has been a selling opportunity and just a liquidity grab. Until that's proven otherwise, this market is bare and will continue to be so. Now, time can fix that. Time can eventually heal these wounds, but I don't think we had enough of it yet.
All right, that's big choice. Mickey, anything before we move on? And thanks everyone for being patient.
Nah, thanks, lads. That was good. It's block out the noise and focus on the chart. Thanks, boys.
Thank you very much. We have another speaker. Just hang on there, Mike. I want to take this gentleman who's been patient. FOMO, you're up next. And you have the opportunity to hear from any number of great speakers. What's up, man?
How you doing, Cheds?
Good to hear from you, buddy.
Thank you, brother. Yeah, I'm on the same page as you. Sort of, I don't like these buzzwords too much. Institutions just focusing on what's in the four corners. I wasn't looking for bullish opportunities. I'll be honest with you until late on Friday. Something clicked on Friday. I'm sure you've had that experience.
The blood, right? There's so much blood. You're like, there might be opportunity.
Something is exactly, and the way I look at the chart, man, I posted it. If anyone wants to take a look at it, I think we could have a serious fucking pump into the end of January. Like, I'm talking 24,000 between here and February 1st.
24K.
That's what I'm seeing. I'll tell you exactly what I'm seeing.
Isn't that a lot to ask for? Wouldn't you say?
Here's what I'm seeing, Chats. I can explain it. I'm seeing the mirror or the echo of the June rally, which the stock market did in October to November, right?
Yeah.
But which the crypto market has not yet done. Mm-hmm. And I'm seeing that just happening late. That's all. I'm not seeing.
All right. I'm losing you on the audio, but it's great to hear from you. And I hope you will join us next time, brother. All right. Thank you, man. Mr. Mike Alfred. It's great to see you, buddy. How you doing?
Hey, good, Cheds. I don't think we've ever actually spoken, but it's been a joy following you over the last month or two. And
I appreciate you taking time in between your Bloomberg and CNN and like BBC News interviews to hang out with us.
I'm doing BBC live tomorrow night, 2 different segments, but it's actually early morning, Monday morning UK time. It goes national at like 5:45 in the morning, 6:15
Mike,
in the
isn't
morning.
that cool how we're all kind of on this like international, like no matter what, like it's 24/7. You know what I mean? There's someone in Perth, and
Like I play a
yeah,
little bit of poker. I'm in Vegas, right? I know some of the poker guys here. I see Tom on the stage right now, but
yeah,
then poker crosses over with crypto, which crosses over with TradFi, which crosses over with a bunch of other stuff, right? Like
yeah,
tech and
yeah.
so it's just been fun to see on Twitter in particular how those graphs kind of start to overlap.
We're all here for the action, man. Mike, you're in the know. What's going on, man? What do you think is the most important to talk about right now?
Well, I mean, look, you see my tweets, right? And
Yeah,
unfortunately, I don't think there's that many things to be excited about in the short to midterm. I'm ultra long term bullish on Bitcoin, as you know. And I think what Bitcoin actually needs, though, is for more of these centralized entities that are fraudulent, that have no domicile, that have no audited financials, that don't follow any regulation, no CFO, right? No internal controls, no corporate governance, no board of directors, no listed investors, et cetera. These businesses that are advertising themselves to the public as safe businesses and putting their names on sports stadiums and showing up at the World Cup and all this stuff, they actually need to go away, because they are misrepresenting the safety of their business. They're not J.P. Morgan or Wells Fargo or Goldman Sachs. They're literally just a couple of kids with a spreadsheet.
yeah.
And so, look, I see the influencers out there that are being paid. There's a lot of people that have basically been bribed and compromised because they're being paid off by some of these platforms, right?
Kevin O'Leary. Kevin O'Leary.
I mean, that's just the tip of the iceberg. It's the Peter McCormicks, right? It's the
Hold
Palms.
on.
It's the
Peter's a
Invest
friend. Peter's
Answers.
a friend. I got to stand up for him. I got to say,
Yeah,
from
you
my
can.
experience,
That's
a
fine.
really solid guy.
Yeah, that's fine. I mean, this isn't personal. People take money from bad platforms. It doesn't mean they're necessarily a bad person. But if they do it repeatedly, right, and those platforms go down and cost consumers money, like there's a real consequence for that. And so, like, I love drinking, having a beer with any of those guys, but I would never trust them with my money because I know they don't know anything.
Mm.
Like, you shouldn't take financial advice from people who have no financial experience, right? Like, you wouldn't get heart surgery from a dentist. So why do people think that influencers that have podcasts can teach you anything about which platforms are insolvent or not? The other thing I'm seeing now is people downplaying stuff. They're saying stuff like, well, just because you called Celsius right, and you called Terra Luna right, and you called BlockFi right, doesn't mean you can call something else right. And that's not really the point. The point is if there's a fact pattern of fraud, if I can point to 150 things in a row that suggest that a company may not be behaving properly, it doesn't matter whether they go down tomorrow. What matters is that the risk factors are there, and you as an investor need to be aware of them. And a lot of people want to put their head in the sand because, again, they're conflicted. They're being paid by the platforms. They have money on these platforms, right? A lot of people tell me they can't pull money off of Binance because of different fees and different issues that they have related to kind of perverse incentives that are set up with their trading with those platforms. And so it's very clear to me that a lot of people would get hurt by that, and most of them will not be able to get out because they have some incentive that's misaligned with making money in the long run. So that's what I'm spending time on. It's not what I want to spend time on for the next 5 years, but I think at least for the next 6 to 9 months, it would be delusional to not be aware that a bunch of these firms are literally hanging by a thread right now. There's several firms, including Crypto.com, that I think are technically insolvent right now.
So you think it's best for the space to kind of clean house right now is kind of how you're approaching it. There's strong underpinnings for the long term, but there's perhaps bad actors who haven't been called to account. Is that kind of how you're viewing this, Mike?
Yeah, that's it. And I think this hand waving away of bad behavior by influencers on this site is terribly hurtful to the space, right? So just because you like somebody doesn't mean that if they're not doing an audit, right, and that they don't want to announce who they are, they don't want to have a CFO, they don't want to have a board.
Respond real quick.
Sure.
So like the only person I've seen who like hasn't said like this is absolute horseshit is Kevin O'Leary. So like I don't see anyone defending FTX. If that's, or am I missing the kind of?
Oh no, I'm not talking about FTX. I'm talking about any of the firms, including Celsius.
Yeah.
Right, including Crypto.com, including Nexo, including the ones that haven't necessarily harmed consumers completely yet, but are doing the exact same thing. They just haven't been caught, right? And so, like, people, there's just a lot of people that have no skill set or experience in this area, and they're opining on it as if they know something, right? And like, the other thing I'd say to you is there's a bunch of echo chambers on this website, And so you're seeing Kevin O'Leary right now,
Mhm.
but I'm seeing a lot of other big name people in Bitcoin who are standing up for fraud, basically, and money laundering, and they're saying it's okay because they're essentially getting paid by Tether, and so they're okay with it because they are being paid off. And
Yeah,
so
I
you're
think
not seeing those people because you're not following them, hopefully, right? And you're not in that echo chamber. But I literally talked to Ledger Status in Alabama 6 months ago, right when I was driving through there, and I said, "Hey, have you ever heard of?" And I named off like Max Kaiser and a bunch of other Bitcoin people. He never even heard of them. He's got 200,000 followers on Twitter. He has a huge crypto podcast. He's never heard of any of the Bitcoin Maxi influencers because it's literally a separate echo chamber. He's
Mhm.
not even aware they exist. And the same thing is happening for Bitcoin people. They're
Let
not
me just
aware of
let
like a
me
whole
just
bunch of
briefly
people.
set the table
I
here. Let me
I
just set
think
the
it
table, Tom.
depends.
Tom, let me set the
Okay,
table real
okay.
quick. I think so. Yes, there's all these concentric circles for sure. And by the way, Ledger Status is a good dude. He's very smart. Mike Tom, who's a friend, a poker player, he wanted to respond to your comments. Tom, go ahead if you don't mind.
I was just gonna say I think it depends a lot why people are doing that. Like I personally, I don't think Binance is bust. I'm getting $0 to say that. I could be wrong, and I'll need to eat my hat. Right? Like I know actually, like I gave Binance more FUD than I ever gave FTX, and I'm a little more friendly with people there than FTX. And like one of the reasons I don't think they're bust is I got zero flack. Whereas FTX, when I gave even the slightest bit of flack, even though I didn't know them, I had all kinds of randoms coming out of the woodwork to message me, and it was just like, why do you care? Like what? Because I've met random people from FTX 2 times or played poker with them once or whatever. I'm not allowed to say something doesn't seem right. And Binance, like no one has said like, can you stop fudding? That said, like the strongest point, while I think Binance is fine, the strongest point I would see against Binance is it does seem like there's some paid shills defending them, and that's a little weird.
Yeah, and so I think that Tom, that's super helpful, and I actually think anecdotal evidence can be quite good. Like Elon knew that SBF was a fraud because he talked to him, and SBF talked about himself for the entire phone call, and he
He
knew that
didn't
was
know.
weird, and he knew that something was wrong with SBF, and so you saying that hey, Binance is behave better in your view is helpful, but I would also just add to that that there are some things that are just part of the fact pattern that are just flat out true that I just get the sense there are a lot of people who don't have a finance background don't understand. Like it is a very serious thing to not have a CFO, not have a board of directors, right? Not have any named investors, not have a named corporate parent, not have an auditor, right? These are all by themselves. Maybe one or two of them are probably fine, but collectively, like I think the risk is much bigger than people think. Nobody's saying that they want Binance to go down. Nobody's saying that they think it's going to go down tomorrow. It's only people lacking in nuance who are interpreting it that way. That's not what I'm
Well,
saying.
I
I'm
mean,
not
to be
saying it's going to go
clear,
down tomorrow.
I would take 20 to 1, in the next 2 years that they have a problem, right? That I happen to think if they did, customers still get 80, 90 cents, right? Like
Maybe,
personally, I
yeah.
think it's probably 80 or 90% customers are going to have no problem. They haven't touched funds. Maybe they haven't in years or hopefully never. I would
If
guess
you
at
will
least.
lay me to 20 to 1, Tom, I'll take that.
No, I'm saying I would take it. I'm saying that, right? I'm saying I would take 20 to 1 that they have a problem. And I'm saying, personally, I don't think they do, right? But I happen to think there's like, it depends a lot what kind of people are, right? Like SBF, when there was a problem, he seemed like he didn't mind making it worse, right? He was using customer funds to defend FTT at 22,
Did you
right?
see
And
CZ on CNBC this week?
I saw like one or two of them on the
I mean,
Twitter things.
you should watch the whole thing, and then you also need to look at his tweet where he claimed to have done a full audit, and then he said transparency. I mean, that is flat out lying to the general public. I mean, there's no other way to put that. And then the Mazars, their auditor, who didn't actually do an audit, did a partial proof of reserves, pulled the report off the website yesterday morning. So
You're
I just think
probably
it's
way
a
better research than me, so I'm not trying. The only point I was trying to make is if people are speaking without an agenda, I think that's reasonable, right? If people are defending and they're getting paid for it, or if they're attacking and getting paid for any of those things, that I think is like not great. And obviously, the defending is even worse because if you're flooding and getting paid, it's not that big a deal. If you're defending and getting paid, like I think that should happen with SBF a lot, and a lot of people got hurt because of it.
And
well.
I'll
Well, so can I just add one thing, Chad? I'm sorry, I'm monopolizing a little bit, but
Ayrton, I want to hear this.
the
Please,
the
you
the
I want to
finish
hear
problem
it too.
the
It sounds
problem
like you
with
researched
Binance.
it.
Oh, I've spent like a tremendous amount of time. I mean, that's why I keep getting invited on Bloomberg, because they can't find anyone else who's not being paid by anyone who's actually independent to talk about this stuff. And I got calls from maybe 5 or 6 hedge fund managers this week. A couple of them were very angry with me for talking about this, and they all admit that Binance has not behaved properly. But every single one of them has like 50 investments that are exposed to Binance, and so nobody is willing to actually admit that there could be issues here because it's so systemically important. It's like 50 to 70% of the trading volume for most of the pairs. They're intertwined with almost every other asset. If Binance were to go down, it would destroy the performance of every single crypto fund in the space for a year. It would ruin their high watermarks and their incentive fees. And so it's not that people are always directly paid. CZ isn't handing out $1 million checks to people to go on Twitter and defend him. But because of the systemic tie-in to every single part of the ecosystem, there's literally no one who has the guts or the ability to speak publicly. And I'm telling you, there's 100+ things that are a fact pattern that if it was applied to a pizza company, a plumbing company, a trucking company, an airline, and I gave you the same fact pattern, any good investor anywhere in the world would know immediately that it's a likely fraud. The only reason why we allow that in crypto is because we view these cryptocurrencies as magical beings that basically grow to the sky. And so therefore, behaviors that would never fly in any other context in corporate history, in human history, period, are being allowed to go on. I don't think that's going to continue, right? Like, so I would take any bet that in the next 3 to 4 years that Binance has severe issues fulfilling their liabilities to people who have deposited coins on their platform. They're systematically redenominating almost everything that comes into the platform into their own homegrown coins, BNB and BUSD. They're also taking USDC, right? That's sort of like real money because it actually ties one-to-one back to the dollar, and they are converting that and then either lending it out or trying to get dollars with it. And so it's very clear to me that they know something's wrong. Just today, they sent $10 million to Binance US of Tether because each of their subsidiaries, which are supposedly supposed to be separate companies, are all just part of the mothership, and they keep having liquidity issues because they don't have the coins in the right denominations because they've auto converted so many of the coins into different denominations than they originally came in. So this idea that they have $50 billion in assets might be true, and that's part of the reason why it won't go down tomorrow. But if there was any sort of run in terms of pulling specific types of coins out, they're not going to have all those coins, and it's going to create distress. And that'll probably start with BNB and BUSD, as we're seeing. If BNB were to fall far enough, it would turn out that they weren't as solvent as you think they are. Right?
So
Again, this is just
can I give you a
one last
follow-up
comment, which
question?
is, yeah, but can I just finish my
Yeah,
thought
yeah.
on this?
Sorry.
And
Go ahead. Go
at a
ahead.
very
I thought
high
you were
level,
pausing.
I think what's going on is that people are taking what are very legitimate substantive concerns and they're turning it into, because of CZ labeling everything FUD, they're assuming everything is FUD. Everything is somebody making something up to make money off of it or to scare people or whatever. And that's simply not true. All I'm saying is that the expectation that the general public has about the likely solvency of Binance is far away from the reality of how likely it is that they'll be able to fulfill their obligations. There's a gap there, and it's much, much bigger than the average person understands. And sorry, I'll stop there.
No. I thought it was great. Sorry, I'm in a poker game. I walked away from because I found it interesting and stuff. So I thought that was great. But I wanted to give you like 2 pointed follow-ups just because I want to learn. And just to give you like a little disclosure, I have a small BNB long. I don't care. Like if I've learned something, I'll just close that. Maybe I'll short it. Right? Like that. I don't really care about the systemic risk to crypto. I happen to think if there's people like SBF touching customer funds, if Binance or CZ or whoever's doing that currently, I think it's better to out it earlier. Right? I believe in crypto a bunch long term, and I think exchanges should never touch customer funds. I expect a lot of them have done that in the past, but whether or not they're doing that currently is a big difference, right? And I would hope a lot of the bigger ones are making enough money that currently they aren't, and hopefully in the future they won't, right? Personally, my guess, a week ago, 2 weeks ago, I would have guessed 80-90% Binance had full customer assets pushed to the side. I think I would still guess that, but it sounds like you're saying you think they don't, right? Like that you think there's certain coins or whatever they don't have.
Tom, when you're referring,
Sorry about that, gentlemen. Please continue.
Yeah,
I
so
can't hear you. Nick too. I couldn't hear you.
so Tom, I think you're thinking about it the right way. right? And the thing to understand about all of these exchanges that are offshore, they've intentionally chosen to domicile in places where they don't face any traditional regulation whatsoever. So Binance has actually domicile hopped 5 or 6 times in its history because every time they get into a certain jurisdiction, they realize, oh shit, this regulator actually wants us to give us a balance sheet, or they actually want us to prove that we segregate
See that
the
argument I
assets.
don't fully agree with, right? Like I'm not saying that
Well,
there's not that they shouldn't, but Madoff was the chairman of like some stock thing. The U.S. government acted so one really big example like FTX, which was smaller but was full tilt poker. I was actually sponsored by, right?
yeah, I
And
know.
when it went down, I felt this super sick to my stomach feeling of like, fuck, what did I do wrong? You know, like, and I do think in hindsight I was naive. Some people got an amount hurt. Now, obviously, I tried to deal with that at the time and after, and I tried to take the steps I could. I think I did pretty well to make sure that I wouldn't, have benefited unless people got their money back, and do what I could to help people get their money back, right? And I'm not saying I didn't make mistakes or whatever, but I think I was pretty good, right? And everyone did get their money back. It's still not cool that they had to wait 2 years, but they did. But for example, full tilt, like the DOJ acted against the interests of American citizens and poker players, and also worldwide. But maybe they only care about America. Even just American, they acted against the interest of 1.5 million or whatever it was Americans because they wanted promotions. And then at a certain point, or I don't know, because why is I'm guessing, but I'm guessing it's promotions. And at a certain point, they realized that was like too big of a political issue, and that's why they let Esai bail everyone out, right?
So my
So I
argument, my
think
argument,
there's
my argument wasn't that domicile hopping by itself is a problem. My argument is more broadly that all of these companies have essentially commingled all of the assets because there is no regulatory framework to not do that. So like even in the US, yeah, I love when people use Madoff because that's an extreme outlier and people use it as an example of, hey, regulation doesn't always work. Of course, my argument isn't that regulation always works. It's that if you create some gates around regulation, some gates around audit, some gates around internal controls, having a board, having some oversight whatsoever, it turns out that on average you get better outcomes. If you give a bunch of 20 and 30-year-old kids billions of dollars and no rules, the money disappears almost every time. That's what's happening with these exchanges. It's not an outlier when FTX goes down because Celsius also went down and BlockFi went down and Mt. Gox went down and Quadriga CX went down. And there's going to be 3 or 4 others that go down because they're all structured exactly the same. The fact that Binance is bigger doesn't make it safer long term. It just makes it a bigger risk. And so like the idea that they're moving around maybe isn't a problem on its own, but at this point, they don't even identify a single location where they operate. So if they were to go down, there's literally no place that you could actually hold them accountable. And we're seeing that with Three Arrows right now. The guys are like literally surfing somewhere, even though they lied and committed fraud against their lenders, and they're still surfing because you can't track them down because they have so many corporate entities and they're in these jurisdictions where there's no extradition treaty. At least with SBF, he was in a jurisdiction where in 1990 we signed an extradition treaty with Bahamas, and so he can't get out of it. He's going to get shipped to the U.S. and he's going to face trial. Nothing like that could happen with CZ, even when the DOJ almost inevitably files criminal indictments against Binance, given the amount of the sheer volume of money laundering that's already been proven. So I just think, again, there's more risk here than people think. I don't know what you should do or what anyone else should do, but I think it's sort of bad for business for people who actually know this stuff and see it clearly to not say something because they like the people or because they don't want to hurt the price of Bitcoin in the short term. Like I don't fucking care about any of
I
that. I
think
just want a healthy
morally,
business.
morally, I'm with you that personally, if Binance did or even still is doing some illegal stuff, money laundering stuff like that, I don't like it. I wouldn't want to do that, but that's not my business. But if they're touching customer funds, I consider that my business, right?
But
Like,
there's
I
no
just
bright line for
personally.
that, Tom. There's no bright
No, no,
line for.
I'm saying no. I'm saying I'm not saying they are or aren't. Personally, I happen to think they aren't, but I agree with you that obviously offshore places and stuff, it's more likely, right? All of that. Like I think the way you laid it out, that's very reasonable. And
So Tom,
I think you and I
can
have
I
a
just
very different percentage here. But I'm saying the idea that like people, if they have a fear, they should speak up, or a doubt, they should speak up. That I agree with very much.
can I just address the touching customer funds because I think people are missing stuff around this. There's no bright line on that, right? With these unregulated offshore, they're essentially taking all the coins that come in and they're denominating them however they please on the back end, right? It doesn't always connect with what the original liabilities are. Remember, nobody other than CZ knows what the real true liabilities are because only he knows which coins people put in, right? So people may have put in $20 billion of Bitcoin, but we only see 10 on chain. And so they say, well, we only owe people 10, but people actually put in 20 because there's no way for us to know that. Only CZ knows that. And so they're taking all of it in a sort of a giant honeypot on the back end, and then they're redenominating it as they see fit for their own interest. So when they lost 500 million in that Binance Smart Chain hack, it's the same thing that happened to Celsius. Celsius lost 75 million in Stakehound, 50 million in Badger DAO. They lost 50 million in the spring of 2021 on GBTC and denominating Ethereum into shitcoins that perform worse than Ethereum. So they kept blowing a bigger and bigger hole in their balance sheet, and they hid the hole in the balance sheet with the Celsius token and redenominating customer assets into other tokens, right? So that they could try to hide all of the losses that had already taken place. Binance actually admits to just doing that. When you say touching customer money, that's exactly what they do every day. They say it's their business model because in
What do
an
you mean?
unregulated environment, I'm saying they take the coin. You think you have X number of Bitcoin or X number of ETH in there. They may have already taken those funds and redenominated them. That's what they do right now
Wait,
with
no, that one I'm pretty sure
stablecoins.
they say that no, the stable coins is different. So okay, to give you another disclosure, there's like some people close to Paxos I'm friendly with.
Yeah, I know
So
Paxos.
maybe I'm wrong there or whatever. But personally, that one, when you send money and they tell you like, just so you know, if you send this in, we're changing it to BUSD, and I happen to believe at least ERC20 BUSD is supposed to be New York regulated, right? I happen to believe it's almost for sure safe,
That
right?
is true. That
The
Ethereum
rest
based.
of
Is that ERC20 BUSD the same as what you see on the screen on Binance or not?
Oh,
It
real quick.
depends.
Sorry, real
Depends.
quick. Gentlemen, sorry to jump in. That's my friend Nakamoto. I can vouch. He's a smart dude. He jumped in, but he's in the conversation. But please, I'm really enjoying what you two gentlemen are bringing to the table. So I'm going to mute again and listen right now.
So Tom, some of the BUSD is not. It's wrapped on other chains, and it's not always clear whether that ties all the way back to Paxos. Some people argue that that's the case, but you are relying on information
no,
provided by Binance about those reserves.
so to be clear, I don't know the mechanics there. I'm not saying maybe there's a problem, maybe there's not. I have no idea. I've never dived into it. What I'm saying is, for me personally, if I send USDC, it says just so you know, if you're sending, we're turning it to BUSD, right? Personally, I'm like, okay, well, I happen to trust ERC20 BUSD. I might have a bias because I'm friendly with some people there. Okay, to me, this isn't a big deal. That one issue, like people are saying there's smoke. Personally, I don't see that much, right? Maybe I'm wrong, maybe I'm missing something. I don't see that much. However, if there's supposed to have X amount of Cardano or X amount of Ripple or whatever shitcoin, let alone if it's some real coin that could actually pump Bitcoin, whatever, right? Like I'm not the biggest maxi on Cardano or Ripple, and they don't, right? If they're that's a way bigger difference. But I haven't seen credible stuff of that. And one point I want to say here is when people say I haven't seen evidence, so that means there's nothing there. I think that's retarded, right? Like, of course you haven't seen evidence. You don't see evidence until after the fact when everyone's money's gone, when something has happened. So personally, I happen to believe like Binance is 95% plus fine, but I would never make the argument of like I haven't seen evidence. I think that's just like a straw, like that's the kind of argument people that are being paid would make, right? Like, of course, you're never going to see evidence they're not fine until they're not fine, right? Now, I happen to think that they actually are fine, so probably that won't come out. But you get what I mean? Like, I'm not trying to make that stupid argument of like, oh, I haven't seen evidence. I'm just saying, you know, if they were redenominating weird, like if someone had proof of that or whatever, that's way different. And I've heard like some suspicions and stuff. That's, you know, if that's happened in the past, or especially if it's still happening, that's like a way different story. Even if it's
Now, hang on, how much BUSD is there on Ethereum? Because I'm looking at the contract now, and I'm only seeing 169,000 BUSD on Ethereum. So
Yeah,
literally,
I don't
so
know
I'm
the
literally,
exact number, but they wrap BUSD on Smart Chain, Binance Smart Chain, as well as Avalanche, and a couple of other chains, right? And that's what I'm saying is it's sort of unclear whether they're using kind of the Paxos regulatory brand to give people confidence that that money's really one-to-one when you're relying on data from Binance about the reserves. And the problem is they keep moving money around. Like there's a bunch of large USDC and USDT transfers from other exchanges all of a sudden recently. They're also experiencing periodic liquidity issues with USDC, not just on the main Binance platform, but also with Binance US today. And so like it's just very clear to me that like you wouldn't run into liquidity issues at all if there weren't denomination issues. And that's the biggest like the difference between Coinbase and Binance fundamentally is that Coinbase is a fiat on and off ramp and Binance isn't. Binance is tied into the fiat system through their relationship with the Paxos, but they themselves have no direct connectivity with the banking system. They're sort of like going around that part. And so all of Coinbase's liabilities are denominated in US dollars because they only take US dollars as an input, right? Like you're taking in a specific coin like Bitcoin, and then they're leaving it one-to-one. It's never transferred. They don't do any lending. Binance admits to doing lending, so we know that some of the coins they say they have are being lent out to other people. They just admitted that in the Mazars report. The report has been withdrawn because the auditor is not comfortable with the report anymore, but the report admits clearly that that's what they do. They're fractionally reserving, they're lending out assets. It's not clear to what extent. It's not clear exactly what the mechanism of BUSD is, and it's not clear how dependent they are going to be on BNB if BNB were to start to crack and there was a run on it. And that's Tom. That's it. Like, I'm not saying that I didn't say once over the last 6 months is going to go down tomorrow or that you're going to lose all your money in the next week. What I said is it's much, much riskier than most people think it is. And I'll just leave it at that.
Yeah, I mean, the weird thing is I'm looking at the contract for BUSD, which is OX4FABB, etc. I'm only seeing 169,000 BUSD. So I don't know if anyone who knows a bit about this stuff can tell me whether I'm making a mistake, but that's minuscule, right?
That might be one of their hot wallets though. Like I doubt they have it all in one contract, right? There's a lot of different variations of BUSD. So I don't know which one you're looking. I mean, their hot wallets. They keep running out of different coins. They were running out of Cardano the other day.
Just so you guys know,
they ran out of USDC.
I gotta grab jump in a car, so I'm gonna be like not talking for 10 minutes or so. I don't want people to think I'm running away.
Thanks, buddy.
I got to tell you, Cheds, this is pretty cool to get to chat with Tom for a little bit. I mean, obviously, I've been watching Tom on High Stakes Poker for like 20 years.
Yeah,
when he was just coming out.
Get you guys on my YouTube to hang out. Tom's a solid dude, man.
Yeah, I'm in for that. If that's ever a possibility, and then we can maybe talk about something besides Binance because I don't think that's the most interesting thing in the space. It's just the biggest thing that could potentially break, and therefore it's stupid to downplay it, right, and not be aware of the risk. And that's what I see people doing. They don't want it to happen. They really don't want it to happen, and so they really hope it won't happen, and then they don't want to hear anything, even if it's factual. Like you could dispute my conclusion, but you can't dispute the fact that here's a company that has no CFO. You can't dispute the fact that it has no audit.
I love it. Hey, can I introduce you to my buddy Big Chonas? Chonas, do you want to say anything real quick? We got a moment. Mike, this is my great friend, longtime trader who introduced me to crypto, Big Chonas.
Hey, buddy. Yeah, listen, the notion of trust, right, and the thought about how can Binance survive? And I think we're gonna know this. I mean, I almost feel like we're weeks away, not years away, from fully understanding if Binance can survive this. The notion that the understanding of why FTX failed, and if think about it, if we lived in a world right now where FTT was still $50 and Bitcoin was over 25,000, would FTX still been able to kind of keep it going? And I think maybe as long as BNB is where it is currently, maybe this is just enough of the running room. But the CZ reassurances and everything like that, like it just feels like it's about trust. And the vulnerability, the potential for that run on BNB is there, and the vulnerability of the market is there. And I think it's fascinating to think about how much hedge fund exposure there could potentially be through Binance, and that the fact they kind of haven't had the normal banking, relationships that Coinbase does. And that's a really interesting point about how we can separate the feasibility and the viability of Coinbase versus Binance, where how much derivative exposure could Binance be in, and then you take, a BNB dropping, 20%, 50% from here. What does that do to that stability?
Let me just say it a different way, right? So I've studied companies for 20 years, right? I love markets. I have never seen a company of this size. I've never read about a company of this size that has literally checked 0 out of 100 boxes of what a reputable company would do or behave in certain situations, right? And so you just look back in history, you just can't find one. You can't find anything that looks like Binance historically, because nobody's ever gotten that big without doing very basic things that even private companies typically do. And what I'm noticing recently is that CZ is on the apology tour right now. He's telling people in AMAs, just like Mashinsky, that everything is okay, but things might be tough for us and we need to fight back. Like basically, CZ admitted in an AMA a couple days ago that things are going to be really bad for a few months. Now, how would he know that things are going to be really bad for a few months? Well, obviously he knows everything about what happened at FTX. He probably knew more than most people about FTX before it went down. I doubt he knew that it was going to go down. But he knew how they operated because FTX is structured almost exactly the same as Binance, with the exception that Binance doesn't have a stated hedge fund. They work with external hedge funds to make similar trades, right? And so they're not dumb. They're using incentives however they can to get people to trade and hold and lever up BNB. They're getting people to take on certain trades even if they don't use their own capital. And FTX, unfortunately, because of Alameda, from the very beginning, they had a proprietary fund that represented a huge chunk of the volume. I don't think Binance has that exact problem, but otherwise the structure is almost exactly the same. They just commingle all the assets in the back end. They lend out whatever they want to lend out to other traders, other big institutions, other firms, et cetera, and they try to generate fees any way they can, and they try to incentivize people to hold their homegrown token, just like Mashinsky did. So the CNBC apology tour, the AMAs, and all of the stuff he's been saying recently ring a lot of alarm bells, because it's almost exactly like the behavior of Mashinsky and SBF previously. And if everything was completely fine, then they would have just done an audit before. It takes 6 to 9 months to do your first crypto audit. I've talked about this with Coinbase. I've talked about this with some of the biggest crypto hedge funds. They'll all tell you it's not easy. It's not fun. Nobody wants to do it. But the only way to get comfort with your investors is to show them that all the assets are actually there and that all the assets actually match the liabilities. And part of a real audit is looking at the internal controls. Like they actually need to talk to a CFO. Binance's CFO, the last one that they ever reported, resigned in June of 2021 suddenly. I posted about this a few weeks ago. There's a big CoinDesk article about it.
The CFO resigned?
Yeah, June 2021. I'll send you the tweet after I hop off here, so you can see it.
How long were they there? Do you know?
They were there for 3 years, and it was a growth business, right? It was in the middle of a downturn in the midst of a broader bull market. But you know what happened in that period was that everybody got run over in that Grayscale Bitcoin Trust trade. Everybody, including Three Arrows, BlockFi, and Celsius, were all in that trade in the spring of 2021. And that's when I believe 2 or 3 of those firms initially became insolvent. BlockFi and Celsius were able to raise capital and extend. And that's when I started talking about those 2 firms in particular last summer in Spaces and saying, hey, these firms are much riskier than people think. So the CFO of Binance resigned basically simultaneously with that drawdown that effectively wiped out some of the biggest traders in the ecosystem. I believe that it's possible that he knew of those insolvencies, or he knew that Three Arrows and other hedge funds, because remember, Binance has a lot of relationships with hedge funds. Raoul Paul just yesterday on Scott Melker's live stream with me said that he thinks the hedge funds were working with Binance to help Chinese citizens essentially remove money from China, and then actually his view is that Binance is directly connected and maybe an appendage of the CCP. I don't necessarily take that view because I don't have any evidence of that. But it wouldn't be surprising given just the set of events that happen. But Tom, when I say there's no CFO, I'm saying that there was a CFO, but the CFO resigned suddenly and they never replaced them. There's no list of executives, so you don't know who else is running finance there internally. But an audit would reveal that. A real audit, not a fake proof of reserves report from a shady tier 3 auditor based in Paris called Mazars. A real audit with Deloitte or KPMG or Ernst & Young would actually uncover all of these issues, which is why Crypto.com, Nexo, KuCoin, and Binance can't do one. Because if you actually did an audit and the public saw that audit or heard about the results of that audit, people would pull 90% of their assets out and it would become a self-fulfilling prophecy. And so I'm not suggesting you should, like, there's going to be a bank run tomorrow. What I'm saying is if those facts came out, it's inevitable there'd be a bank run. I don't even need to talk about it because big funds would look at that and say, holy shit, this company's not operating properly. My suspicion is that most of the big hedge funds sort of know this, and even some of the market makers, which is why Jump and Wintermute, after getting blown up a little bit in FTX, sort of precipitated that bank run earlier this week when they started to remove capital quite quickly from Binance all of a sudden. Of course, they started putting capital back in the next day as Binance probably called them and said, hey, we assure you that everything is there and we'll give you certainty, so please deposit your coins back in. And now if you look at Binance's website, there's a bunch of offers for higher interest rates and other incentives, right, if you put your capital in. Right, they'll give you Bitcoin basically if you deposit Bitcoin type of thing. And
that's higher than it was. Is that higher than it was like a week or two ago?
Yes, correct. They have new deposit incentives, and BlockFi did the same thing. Yeah, BlockFi did the same thing, by the way. Right after Celsius went down, they got the fake bailout from FTX US that never obviously came through. They got the $250 million credit line, and then they started coming out in the market and saying, we've raised our interest rates. Please deposit more coins into BlockFi. It was one of the biggest signs that something was severely wrong and that they were.
Wait. Can I just pin you down on this for a sec?
Sure.
So, it sounds like you've looked into this more than me. The interest rates on products they had went up, or new products came out with higher interest rates than normal? Because it's a pretty big difference, right? If the interest rates went up, maybe that's because people pulled money out that had their money deposited, and they had a set amount they're giving. If it's new products that came out with like an absurdly high rate, that's pretty fucking sus. Like, I might need to increase my.
So in BlockFi and Celsius case, it was just raised interest rates, right? And Nexo's doing it now. Nexo has some of the highest incentive rates because they're probably insolvent. There's a whole fact pattern around Nexo too right now that's pretty clear that they're in distress.
Yeah, Nexo, come on, that's way higher. Like, I would.
I agree because
on Nexo over Binance in the next few months.
It's only because they're smaller, Tom. This is what people they're missing this. Everybody's almost exactly the same in terms of the way they behaved. The only differences are around size because Binance is so much bigger than everybody else, and they do have tracked assets on chain that approach $50 billion plus dollars. Putting aside the fact that 70% of that is their homegrown shitcoins in Tether. And of course, they have Tether and Binance have a very incestuous relationship, which was revealed in the Signal Group exchange coordination that was blown up by the Wall Street Journal and New York Times over the last few weeks. And you read some of the interactions between SBF, CZ, and Paolo from Tether, and it's pretty clear that they're colluding to do various different things. Now, not all of that necessarily needs to be nefarious. Some of it is the same stuff that the Fed does, coordinating bank activities, right, et cetera. But some of it appears to be essentially holding up insolvent players, right? It's the same way that Gate and Crypto.com were sort of colluding to do that. They were sending large token transfers to each other, probably to fulfill short-term obligations that they had or to satisfy proof of reserves type of audits where either of those firms were lacking certain coins, and so they send the coins to each other to essentially check a box with a fake auditor that says, hey, look, we had these coins there, but then within days those coins are transferred elsewhere. In the case of Binance, what's been reported today and yesterday is large new deposit incentives that did not exist before. And I don't use Binance, thankfully, so I can't personally confirm because I can't log into an account there because I would never do that at this point. But from what I'm seeing repeatedly from people, there's people posting screenshots of the new incentives, and it looks pretty high and pretty different from what they were offering before.
It feels like we're in that movie where the question was asked, has the music stopped? And the guy says the music is just slowing. If it stopped, it would be far, far worse. And it feels like Binance's and the incentives to bring capital into versus all the billions we had seen, the outflows this week. I mean, how do you stem this tide? I just don't see how you can change the narrative of safety and stability and trust in something like Binance in its current form.
Well, here's how you do it. You choose a domicile. You tell people that the parent company is Binance Investments Inc., right? You hire a CFO. You hire Deloitte or KPMG or some auditor to do a real audit. You establish real internal controls. You prove that you have true segregated custody, because it's very clear they don't, but they keep saying stuff like that, right? It's also clear that they've never done a real audit, even though they lied about that all week this week, including their chief strategy officer getting caught, quoted in mainstream media saying, basically, we only said it was an audit because somebody else said it was an audit. We were parroting what they said. Like, that, are you serious? Like, it's insane. So look, I think again, I think there's more risk here than people think. I think the thing that could cause it to get much worse is DOJ criminal indictments, right? And that's been reported in Reuters a couple times now. But this week, it was very clear the DOJ, from multiple sources, is considering criminal indictments. They hired an attorney. Binance hired an attorney in the U.S. to have those conversations. There were talks about certain executives surrendering and potentially serving jail sentences. So, like, just to be clear, like, people don't even offer to settle and serve jail sentences unless the extent of the crimes committed is severe enough, right? If they really thought it was bullshit, they wouldn't have hired one of the most expensive attorneys to have these conversations. This is an attorney that used to work in the DOJ. So they're doing regulatory capture, trying to hire people who have good relationships within the DOJ to try to soften the blow of what they know is something coming. And this is what I think CZ is referring to. He's referring to things that he knows are coming at Binance right now that he doesn't obviously want to precipitate or encourage or tell people about, but he is very clear and coming. He's trying to condition the market right now. That's why he's doing CNBC. That's why he's sending tweets about FUD and all this stuff. He's conditioning the market because he knows in the next 3 months something's going to come down hard, and he doesn't want people to freak out about it. But unfortunately, he's like doing himself a disservice. He's actually making it worse. And as this intel about the conversations he's having with Tether are coming out, it's revealing how frightened he is of Tether's connectivity with the rest of the ecosystem, including Binance, and why he's trying to remove exposure to Tether, but he's not able to do it fast enough because it turns out people still like to hold Tether. They still like to use Tether in the trading pairs. And so if Tether were to start to depeg, and there's several hedge funds, including Furtree, that are actively shorting Tether right now, trying to depeg it. Again, I wouldn't encourage that. I don't want that to happen. I'm simply reporting what has been already reported that's factual. People are trying to depeg Tether, and you can see that with large USDC, USDT trades that are happening. And so if that were to happen, that might be the thing that precipitates sort of a run on BNB/BUSD, which would probably be enough to reveal that Binance is essentially operating in a fractional reserve basis, quite similar to FTX and Celsius and BlockFi and others. But again, because they're so big, you would need some sort of cataclysmic catalyst like that, like a DOJ indictment, criminal indictment, right? Or a Tether depeg. Those are the two things that I can think of off the top of my head that would be catalyst for that.
Would a run on Tether pump Bitcoin?
So can I just jump in really quick before that question? As far as if Binance has all the customer money, I don't think we find that out right now unless Tether breaks, or we only find that out if they don't, right? And my suspicion is they do, and I think regardless, this will be fine, even if they don't, because they'll handle it fine. But if they didn't have all the customer money, most of the time they survive this FUD thing, unless, we find out if they actually have all the customer money if an indictment hits. And my suspicion is even then they might, right? Obviously, you guys might have different views. Not saying I'm right. I could easily be way off there. But, someone had said earlier, like, we're going to find out if they can manage this. Like, I agree with the view that they're big enough that they can manage this, even if they only have, 70% and they're playing games and whatever.
So that may be true, Tom, because if you only have Bitcoin there and they really have all the Bitcoin, it looks like they might have 95 or 97% of the Bitcoin that's been deposited in there, right? And so if that's the case, then you might get your Bitcoin back. The problem is that a big chunk of the reserves that people think they have been denominated in BUSD and BNB, and BNB is an air token. BNB has really no fundamental value. It doesn't have like the mining component of Bitcoin. It basically only exists if Binance exists. If people pull $20 billion out of Binance because of a DOJ indictment, BNB essentially vaporizes. And so if BNB vaporizes, there's going to be a run on BUSD. And so it's a dominoes situation. And so it's like, it's sort of binary. It's either one or the other. Like either Binance is sort of fine and the DOJ doesn't come down on them and Tether doesn't depeg, and then they'll mostly probably skate through this cycle. I think a lot of investors will question doing business with them in the future, which I think is intelligent. But if any of those things that we just talked about happens, I don't believe you should believe that you will get most of your capital out. I just don't think I don't think that's the likely scenario if there really is a run on the company.
But do we really need a Tether depeg for this? Because, you know, I think the probability of a Tether depeg is probably pretty small. Tether's been around for a long time.
I would bet Binance over Tether, personally.
You would bet on Binance folding over Tether depegging?
No, I'm saying if I could, you know, sell $1 of customer assets, like I owe $1 of customer assets on Binance in 10 years, and someone owes me $1 of Tether in 10 years, I would bet that in size. Like, yeah. I mean, I could be wrong.
You think Binance is safer than Tether?
I think it cut out. I didn't hear what you said.
Do you think Binance is safer than Tether?
Yeah, I mean, I'm not saying Binance is safer than USDC, you know, or hopefully BUSD, at least the ETH version or whatever. But then Tether, yeah, personally I do, but I could be off. I don't know.
What makes you say that? I mean, Tether's been around for a very long time. It's been fudded many times, and it's never broken. Why is this time different?
I'm not trying to FUD Tether. I hope they have all the money now. If I said Binance is maybe 5%, I don't know what I put Tether at, but it's not a ton more, you know? Like, but just, that's my view, right? Like, put it this way, I haven't tried to FUD Tether. If I did, I think it moves a few cents at least, right? And I'm not trying to. I'm not, you know, dude, I know a lot of stories about a lot of shit. It's not really my business. I think they probably have most of the assets they're supposed to. That's good enough for me, right?
I mean, what's the legal status of Tether? Like, are they actually headquartered in, you know, a reputable country? They're supposed to have most of their stuff in U.S. treasuries, right? I mean, do we actually know that that's actually true?
I don't think we know for sure because they've only filed like partial proof of reserves type of reports. They've never done a full audit. And the most recent one shows that they've done a good job of transitioning away from commercial paper to like government debt and some other investments in other categories. Like it still concerns me that there's like $5 billion in like uncategorized stuff. But it does appear that they have some real assets, and if enough people came to try to redeem, that there would actually be something there. And that's why I don't think like if it depegs, it's not going to depeg like Terra Luna, because Terra Luna was just like total air.
Yeah.
If it depegs, it might depeg to 60 cents or something, right? And then at some point it would unwind, and then they would just try to take all the assets out. That's what you should be able to do with GBTC, by the way. If there was a mechanism to unwind the trust, if you could force Barry to stop taking the 2% fee, which of course he'll never do because his incentives are not aligned with the people that own the trust. But if you could raid the trust and take the Bitcoin out, if you were an activist investor, then Grayscale Bitcoin Trust would trade to NAV. And the same thing potentially could happen with Tether. If it turns out there's only 70 cents or 80 cents on the dollar there, even if it depegs to 60 cents, if you don't sell and it goes back and it just gets unwound and liquidated, you would get essentially it may take time, but you would get your assets out over time.
Yeah, I mean, what makes me more confident in Tether than in Binance is Tether is basically, you know, they're supposed to hold US bonds and they issue the little green tokens, right? This is fundamentally a simpler business than what Binance does. I don't know what the fuck Binance does, right? I literally don't know all of the things they do.
And that's the problem. Their shadiness, their failure to disclose, not the trust that we can have, and people that have the exposure are afraid to keep their money with them.
Let me just jump right in. I'm Big Cheds. That's Big Chonas, a good friend of mine. We have the poker pro Tom Dwan. We have an excellent research analyst, Michael Alfred Nakamoto, a friend, another fundamental analyst. We're just talking crypto. There's no rules. It's whatever. Saturday night, we're just hanging out. I want to say thank you to everyone hanging out. I'm just happy to be here. So, gentlemen, whoever wants to pick up the ball, it's yours. Go ahead.
I mean, as I said, like the maybe Tether doesn't have any of these treasuries that they say they have, right? It's possible, but it's it's like a machine that can only really fail in one way. They either have them or they don't. If they don't have them, someone probably would have said so by now. Whereas Binance, it's got like all these liabilities. I have no idea what they are. It does VC, does lending. I don't even know all of the things they do. This is what makes me, I'm not holding anything on any exchanges apart from a short on BNB that's on KuCoin. That's all I've got.
Yeah, the one thing I'd say on Tether is that I think there's a lot of toxic codependencies in this space where firms like are literally dependent on each other for growth. Like I think you look back, like BlockFi really used Grayscale as its primary growth mechanism. When Terra Luna got in trouble, or sorry, when 3AC got in trouble, they gambled sort of everything on Terra Luna, right? FTX had Alameda, right? And they were that was really, really codependent because FTX's volume numbers when they raised monies from VCs were being pumped by Alameda's trading, which is really just a prop fund sitting in the same office. And I think the same thing's kind of happening with Binance and Tether, and maybe to some extent with Huobi and a couple of these other firms, where they're clearly collaborating with each other to provide liquidity to each other when they need it for various things. And to an extent, they're masking fundamental insolvency in the ecosystem. I think what's happening is there's not enough real capital circulating in this ecosystem, and there's no real connectivity to the real economy. And so what you have is all these self-referential incestuous relationships between firms where you have intercompany loans, you have loans between different parties, you have Tether investing in Celsius, and then Celsius turning around and providing some liquidity back to Tether, et cetera, et cetera. And so it's hard to actually uncouple like what the real economics are because there's so much Ponzi-nomics going on. And we saw this with the DeFi farming thing where basically people kept building protocols on top of protocols on top of protocols, and there was no real value creation, but people were ostensibly making 100% or 500% a year. Obviously, that couldn't continue. But I think it's bigger than that, right? I think the entire space at this point is built around those types of dynamics. And I think if you actually could figure out where the real capital is, like I view Bitcoin as like one of the only pristine collaterals in this space because it's effectively on chain, nobody else's liability. The problem is we've created all these structures that obfuscate that true underlying pristine collateral and the ownership of that collateral, and it sort of exists partially as paper Bitcoin inside of Celsius or inside of FTX or inside of Binance. And so it's really hard to uncouple these things. I think Tether is at the center of a lot of that obfuscation, and that's why Binance in particular is trying to defend it. Because I think if Tether actually were to start to unwind in any way, it would reveal the full extent of the lack of capital, that real capital that actually exists in this ecosystem. And I know that's not getting into the specific details and the mechanism of it, but I think at a high level that approximates like what's going on here.
And that's the vulnerability of the system. It's the lack of liquidity, and they could only get away with it at a certain point until the valuations and liquidity drop below a certain point. And I think with the withdrawals coming out of Binance and the lack of trust, liquidity is playing a role in that. And this is all still in an environment where the stock market, though down this year, hasn't really crashed, but liquidity is beginning to be an issue in that as well. And to think about where the risk assets are and where people want to keep their money, where does Bitcoin kind of fall on that whole totem pole?
Yeah, the macro overlay is super important here because a lot of these vulnerabilities in these crypto firms would not have been revealed without higher interest rates. And so as rates continue to march higher, it's pretty clear to me that the vulnerabilities will continue to be revealed in sort of a chain reaction. And so the strongest players will last the longest. Binance and Tether are probably the biggest and baddest mob bosses left in crypto. Like, well, even though there's proof of criminal activity money laundering, fraud, etc. There's plenty of proof of that. Like all you have to do is read any of the well-researched articles over the last 3 or 4 years about both companies. But because they have enough of the real capital in the ecosystem that remains, other people have to go down first. And so to an extent, all the gamesmanship between Binance and FTX was just jockeying for that capital. The thing that really pissed CZ off is that SBF went to Washington. He used his lobbying power to convince the Committee for Foreign Investment in U.S. Assets to block Binance's taking of the Voyager bankruptcy assets, right? They wanted to bid for those assets, and SBF convinced the government to block them from doing that. Binance wants that liquidity as much as SBF did. SBF wanted the liquidity from the BlockFi customers. He wanted to convert all the BlockFi customers to FTX. He wanted to take all the Voyager customers and convert them to FTX. It was a money grab to get liquidity in a musical chairs environment with rates rising. That's it. Like that's what's happening here. And Binance is continuing to do that now.
I mean, that's a pretty horrifying picture, because you could have this picture where all of these different exchanges, like, Binance, maybe KuCoin, Gate, Tether, all of these things, they all claim to have these money, and you see it on the screen, but it's all fake. And they're just like, passing around this little tiny parcel of real money that they use to pay out anyone who actually withdraws from the system, so that they can convince everyone who still hasn't withdrawn to keep their money in. I mean, it's going to give me nightmares, Mike. Seriously.
Well, that's what I've been saying, and I just posted in the Nest a tweet I said, which is basically that some combination of Gate, right, Bitfinex, Tether, Binance, Huobi, right? These are the firms that we already have proof that they're sharing essentially balance sheets with each other, right? So it's not the Binance balance sheet I'm concerned about. It's sort of the collective balance sheet. That's why these guys keep talking about saving the whole space. The whole narrative of SBF being JP Morgan and saving all these firms. Obviously, that was bullshit. He was defending his own firm's liquidation levels, and he was money grabbing. CZ is now doing the exact same thing, because he's also aware, he's not dumb. He knows how little real capital there is in the ecosystem, and he's trying to grab at it. And he needs to keep consumer trust, because if people realize that the only real capital in this ecosystem is your own Bitcoin and your own cold storage, and they pull their money, it reveals the extent of the lack of capital. So I think people just need to be more aware. And again, I just want to say this again, because I want to make it very clear for people. Like, I'm not betting on Binance falling. I'm not short Binance. I've never shorted any crypto token. I get paid by no one to talk about any of these things. I do it on my own time, because I think people need to hear this stuff. I see so few people that have the knowledge of what's happening in these companies who also are uncompromised, right, and are not conflicted. I see a lot of people who are smart and understand the space, but they find themselves conflicted because they're receiving money from these firms. It's hard to do business in crypto without taking money from Binance, FTX, BlockFi, Celsius. So I don't blame Pomp. I don't blame Peter McCormick. They're not bad people, but like the reality is, if you talk about Bitcoin and you want to make money, you have to take money from Gemini.
Mike,
you have to take money.
Let me jump in, brother. And I'm so thankful to each and every one of the speakers and each and every one of the listeners. This is special. You're part of it. A friend of mine, a good friend, Mr. Will Clemente. I'm really happy you decided to step up. I can vouch for Will. He's a good dude. Will, what's going on, man? You any thoughts in this?
Hey, what's going on, Cheds?
What's up, bro?
Mike?
Hey, by the way, Will and I, we've done a couple podcasts, right? We've done a couple podcasts.
Yeah, we have. Yeah, I just wanted to come and say what's up. Just enjoying the conversation.
I'm glad you're here, man. What's going on, man? What do you think? You've been listening for a while. What do you think?
Yeah, no, it's just interesting to hear Mike's perspective. I've just been seeing a lot of Mike's tweets, so it's interesting just to listen to him kind of walk through his whole thesis and kind of one, go. It makes it seem a lot less, I guess, as scattered as I had kind of perceived it to be, just going through his tweets,
what's your
through his
angle?
feed.
You're like plugged into more traditional. Like, how do you, Will? Like, you seem like kind of plugged into more traditional crypto. Or is that like a mischaracterization, or like, you know what I mean? Like, you have a lot of information. Like, what's your honest, if you don't mind, like, what are some of your honest thoughts?
Sure. Like, what do you mean? I guess by traditional crypto, I'm happy to answer. I'm just curious. Like, what do you mean by traditional crypto?
You're like a smart guy. You're connected to a lot of people. I feel like you are like kind of plugged in. I mean, I just if I were to put it as simply as I could, you know what I mean?
Oh, sure. No, I appreciate that, man. Thanks for the kind words. And I look up to a lot of the content that you put out. First of all, sorry if you hear my dog in the background. No, I mean, I don't think I have any more information than, anything Mike said. I think it's just kind of like a probabilistic, view you have to have in your head. Um, I don't really think there's like a hard number to attribute to the likelihood of them being insolvent. I also kind of feel like I'm in the camp of it's like a very asymmetrical decision, whether you want to pull your assets out or not. It's like, okay, either you leave the assets on and your downside is 100%, or, maybe you miss out on, some gains in a short term position, or I don't know if Binance even offers any yield products, but the few percentage points that would potentially be on something like that. So that's kind of my
I
view.
mean,
I think from a like on chain data perspective, um, I will say like the main difference is with Binance versus FTX is you can see Binance's balance haven't really dropped versus FTX's in like the months leading up to it were just like perpetually going down. So I know like a ton of assets have been pulled off, like several $1 billion, but their balances are really not that affected as of now, at least. And you can also see like on Nansen where they like basketed a bunch of wallets together. You can see they have about like 60 billion. So I think it comes down to like what Mike was basically saying is that even if maybe they are operating on like somewhat of a fractional reserve basis, it's going to take a lot of gunpowder to get through like 50 to 60 billion dollars in assets. Obviously those are mark to market, so like if you had like some type of bank run, it's like slightly lower than that, but still.
I would just argue that it's a lot lower than that because I think there's no bid on BNB if Binance has a criminal indictment, and there's no bid on BUSD. Like nobody wants BUSD if Binance is under criminal indictment, and that's a binary thing. And I recognize that most people may not believe that, but there's enough signs that that's a probability that's higher than people think. And if that were to happen, right, like the withdrawals this over the last week or 10 days, I think collectively are over $8 billion. So it's not insignificant. It's not a couple billion. It's like 8 billion across the whole platform net. And so, like, if there was criminal indictments, it might be 10 or 20 billion. Can they withstand that? Potentially, right? Like, they probably can call in some of their Bitcoin loans. They can call their friends at Paxos, right? They can call other folks and try to generate liquidity. They can sell tokens. Dylan Leclerc, who's another analyst that Will knows, I've spent a lot of time with him over the last 2 weeks on this, like several hours, just working through some of his insights. And he believes pretty firmly that there is manipulation of Binance BNB token that's taken place over the last few years. That essentially Binance is systematically supporting the price. Now, are they using customer capital to do that? There's no guarantees of that. But if they were to come under enough pressure, meaning like a criminal indictment and 10 or $20 billion of withdrawals in a week, would they use customer capital to defend BNB? I mean, all of the behaviors and activities of Binance historically lead me to believe that would be a resounding yes. Of course, CZ would do that because he's going to defend his platform to death. He doesn't want to be humiliated the same way that SBF was. He didn't think SBF was going to go down that easy. He doesn't think he's kind of fake humble, by the way. This is something that I've talked about with other crypto founders that have talked to him and know him. Like, he fakes humility quite well, but secretly he's highly competitive. He wanted to fucking destroy SBF, right? Like, he wanted to take him down hard. That's not the way that like a truly humble person behaves. And I think if he was put in a spot where he was pressured, he would definitely use customer capital to support the price of BNB if it meant the difference between Binance being solvent and insolvent in that scenario.
I mean, the thing is, I think the people who are keeping dollars on Binance are probably people who are just not very plugged in, because anyone who's plugged in has probably pulled dollars off Binance, right? Even if you have Bitcoin, you've probably pulled it off Binance by now.
It's a retail platform for like Africa and Asia and places that I see a lot of Nigerians and a lot of people like in poorer countries around the world yelling at me because I'm stating facts. Like, there's no CFO and there's no audit. Like, I'm literally just stating facts, but they're angry because Binance is their only option. Raoul Paul said that this week on Scott Melker's live stream. He basically said, look, Binance is big because people in these countries, they can't use Coinbase. They can't use a regulated exchange tied into the US banking system. A lot of people around the world would love to use US dollars every day. They'd love to have a US bank account. They just can't get one. And so they end up using these shadowy offshore casino companies like Binance as an alternative. So I'm not saying that we don't need an alternative to Binance. What I'm saying is Binance is not the answer to solving Nigerians being able to access crypto. It's not
Right.
the answer, right, to helping
Presumably,
Indians and Pakistanis access crypto, right? Like it will go down at some point, and all those people will be fucked. No worse than just living in Lebanon or Argentina or Venezuela or Central Africa and having your currency debased. You literally lose 50% of your assets overnight if Binance goes down.
presumably the point is these people don't have the knowledge to just get on chain, to just, bridge it to Bitcoin, bridge it to Ethereum, and just hold a reputable stable coin on chain. They just do that.
No, because it's a new paradigm, and so while people know what Bitcoin, they think they know what Bitcoin is, or they think they know what Ethereum is, they still want to use a bank, especially older people, right? People over 40 or 50 globally still like to have a financial advisor, and they still like to have a bank, and they still like to go to the branch. And the idea that they can actually self-custody an asset with no counterparty and no liability doesn't even compute. And so like people default to their previous behavior. They had a brokerage account, they had a bank account, and now they have a crypto account. And they keep their Bitcoin at Binance, or they keep their BUSD or their BNB or their Solana or whatever at Binance.
Will,
And so changing that behavior is not going to be easy.
Will, you were trying to jump in there. Will, what did you want to add to the conversation? Will, can you hear me?
Yeah, no, just like kind of to Mike's point, it's not really relevant to exactly what you just said, but yesterday I was watching a podcast with Travis Kling. Actually, like fell asleep watching it. It was from the end of 2018 with Pomp, and he was just talking about how Binance was, again, I don't know if this is true. This is just what Travis was saying on a pod 4 years ago, but that, CZ was signing contracts with different projects to basically like guarantee certain levels of volume and like certain like price increases in terms of percentage terms. And that like this is able to go on just because there is no regulation. I mean, I feel like to some extent, like, things to some degree of that like are kind of just like an open secret in, crypto, but I also wonder if like what he said in that interview is it like that explicit, and like is that type of stuff like still going on?
Well, we know Mithril, the project that gave Binance like what was it, 100,000 or I mean it was like a couple million. It was $1 million of BNB in 2018 as a listing fee, and now that BNB is worth $50 million, and CZ won't give it back because he claims they didn't meet the standards, but still raises the question: why is Binance using their own homegrown coin as an inducement? Basically like a payola payoff scheme, right? To get listed on their exchange. If it's really a high quality asset, there should be a non-paid, right, procedural process that basically is the same for everybody that allows you to list on there, because it's for the betterment of the public and the customers of Binance that good assets are listed on the exchange. Instead, it seems like he took bribes from whatever project was willing to pay them to essentially list their project. And so again, these are cultural elements. None of these by themselves are smoking guns. The problem is, Will, that there are like 100 of these things, and there are cultural things like no transparency, no board, no internal controls. I can go on. Like there's just it's like 100 things. And so when you get to the end of that, if you don't ask yourself what's really going on here, when it blows up, yeah, you should have asked that, right? Like when it blows up, you should ask those questions, because it doesn't hurt to ask the question. And if they're really solvent, then none of these conversations are going to hurt anyone. If anything, it'll raise sort of alarm bells, and it'll allow you to remove capital if it's a real problem. So I look, the listing fee thing is a really big red flag. The fact that he wouldn't give the capital back. It's $50 million in BNB. Can BNB not withstand $50 million of sell pressure right now? I'm guessing maybe not. Maybe the reason why BNB is trading at the price it is now is that it's been systematically supported by Binance algos or affiliated hedge funds that are operating offshore. Again, they have no regulation either, so we don't know. And I think the biggest problem here is that nobody knows any of these things. We only get bits and pieces from the leaked information that comes out from hedge fund managers usually, who've interacted with various pieces of the Binance ecosystem, right? And so like they'll share this, and you can piece it together like a detective if you pay attention across 3 or 4 years. You listen to Travis Kling, right? You talk to other managers that are active in China and in Asia broadly, and you start to piece together a picture of a firm that obviously has good reasons for operating without regulation, because if they had any regulation, they would have been shut down by now.
Just to be cynical, Mike, I would just say on like the BNB manipulation point, I mean, how many other like random coins are also manipulated? Of course, not on that scale, but I mean, I would say like probably on the spectrum of all the tokens on CoinMarketCap, like the majority fall under some degree of that.
Yeah, I mean,
I love that. I love that point because I couldn't agree more.
I mean, the thing is, number go up is the best form of advertising. So if you're a crypto project, you're probably going to try and pay somebody a little bit to make sure the number go up thing is still working properly, right? Like when the number stops going up, this is really, really bad. So that, I mean, if you look at the chart of BNB, and maybe Cheds can confirm this, I mean, it literally looks like the chart of a child who's drowning with somebody just like keeping their head just barely above the waterline, and the waterline is 230. I mean,
it looks like FTT right before.
It looks exactly like FTT right before it rugged, and that's why I'm shorting it on a leverage token. Because if it goes, it's fucking dude. There's no support to 40.
And you shorted Terra Luna, right? Near the peak. I remember you shorting it. I remember being in your space, Nakamoto, and you shorted Terra. You shorted Luna, right?
Yeah, I shorted. Yeah.
But you did it like live. You were talking about it in a space, and it was crashing, and then it like crashed the next day. So you have some high level of credibility about this specific issue.
Well, I just think the risk reward is good, right? Because you look at the chart, and it's the chart of like a drowning child's head being like barely held above water. How much longer can they scam it up above 240?
All right,
I mean,
let's do a reset.
$50 billion worth.
Let's do a
They can
reset.
literally they can expend $50 billion, not 50 billion because a bunch of it's already denominated in BNB, but they could literally redenominate the rest of your coins if they're on Binance into BNB, and that would hold it up.
Let's let this conversation keep flowing. I am blessed. I'm happy to have all my friends joining me. Big Chonis, Will Clemente, Tom Dwan, Mike Alfred, Nakamoto. It doesn't get any better. I'll just speak for like 10 seconds and I'll shut up. I mean, the chart's still pretty good in BNB. I mean, on like a multi-month basis, but you don't want to break below 200. I'll just end my combo there. I'm just really happy. I'm learning so much. This is unbelievable. So let it flow. Whoever's got the next thought, it's on you. Go ahead.
Yeah, I was just gonna say, just going off of Nakamoto's positioning for anyone that's potentially thinking about following him. I have no horse in the race, but I would just say, please don't short BNB on Binance. It doesn't really make any sense. I saw that there's like over $100 million on open interest on BNB on Binance. Obviously, if you are going to short BNB, you should probably do it on a different venue than Binance.
Right, because if BNB does crash and you're right, then Binance will rug you, and if Binance doesn't rug you, then BNB won't crash. So it's like a bet that you can't win. I'm short on KuCoin because I think KuCoin is not under the FUD eye of Sauron at the moment, so it's a little bit safer. But you can also.
Can you short anywhere else, Nakamoto? My gut tells me that KuCoin is in the line of fire.
Bybit also
has issues. Yeah,
Bybit and KuCoin that I know of, and so far the prices are mirroring, and the funding's negative, which to me actually makes me, I have a different view than you guys, but yeah, if those prices start changing, that's different.
Tom, what's your view? Tell us. Lay it out.
Me and you had a call yesterday, right? I said the fact that BNB had dropped so much made me bullish that they weren't using customer assets.
Right.
Like I think if FTT looked like a chart that was being held up, BNB looks like a chart where I'm not saying they've never supported it or even that they're not now, but if they are, it doesn't look like they're going all out.
They look identical, though.
Right. They ripped from 20 to 200 so fast. There's no support anywhere.
No, Joe, I'm not claiming that there weren't shenanigans in the past. That's not what I'm saying. Right? I'm saying if Binance wanted BNB to still be at $300, come on, of course they could have held it there. Right? It doesn't look like they tried.
They really pushed it up, and now that it's not.
That's not what I'm saying. I'm not saying that shenanigans didn't happen in the past. I'm not saying I'm saying the fact that it dropped makes me bullish on their solvency. That's my view.
It only dropped the line at 240
from 800 to 200.
240, right? It's been supported at 240. 1, 2, 3, 4, 5. This is the 6th time we've been to that area.
Sure, that's starting to be. Right, that's starting to be a point, and to go to the asymmetric risk, like buy some call options on BNB on Binance, short it on another exchange if you want to. There's ways to play it, right? Like personally,
can you buy BNB options on Binance?
you can buy BNB puts and calls, but obviously, like if you happen to think Binance is stealing customer funds or something, I wouldn't short BNB on Binance or buy puts on Binance, right? So the only place I know of to buy BNB options is Binance. You could buy calls on Binance and go short it on Bybit or Qcoin, or maybe there's some other exchanges. I don't know. Personally, I think Binance is, high 90% is fine. So I'm I don't
Hey
even have
Tom, real
the
quick.
call
Tom, real
options.
quick. Mike, what's your percent? What's your percent? I know Tom's like, we talked Tom, right? You're at what, like 80, 90%? Tom, Mike, what's your percentage wrong? Because like, what percentage are you wrong? You know what I mean? You got to have a percentage. Is there a percentage?
What do you mean? What percentage? What,
I
what
don't mean like
percentage?
just a kind of more an abstract question, but at least for the kind of the sake of this conversation to keep it flowing, right? Like, Tom is saying he's 80%, 90%. Like Binance is okay. Are you?
Yeah, got it.
I
So
would
here,
say 90% that Binance pays back everyone who asks for money in the next 3 months. What's your answer on that? Over 90%, personally.
What I've said publicly before is that I think Tether over 3 years has about a 10% chance of a significant depeg, and by that I mean like going to sort of under 80 cents, probably 70, 60 cents, something like that. And then for Binance, I think because I don't look at this in a month by month period. Like I look at it across a full cycle. Like I don't think Binance makes it through another full cycle with like 80% certainty that they'll have severe issues. They'll have to have a bailout, or they'll have to shut down withdrawals. I think if they have to shut down, because they've already been shutting down withdrawals periodically, if they have to shut down withdrawals for some significant percentage of their tokens, then I would consider that to be a failure. And I think that is likely to happen over the next 3 years, above 50%.
How does it not fall further if Bitcoin falls a lot further?
I think the only way Bitcoin falls a lot further is if Binance or Tether or Crypto.com or KuCoin or Gate or Nexo fail.
Disagree real quick. Disagree. Hey, can I remind everyone a trend? It doesn't need like a news item to continue. It's just a trend. I'll step back. Go ahead.
I love the chart guys, because you guys always are right about some things that are not obvious to fundamental guys, but sometimes you also miss stuff.
I missed a lot.
Because fundamentals do matter. And so like if you knew, for example, like on Celsius, if you knew what I knew a year and a half ago, you knew with like 95% certainty it was going to go down. And then by the spring of this year, you knew with 99% certainty. I tweeted in April,
but
it will go down.
That was so late. That's so
no, but
late.
it was still plenty of time. No, hold on. Hold on, Chad.
Go ahead.
I know, but hold on. It was still time to pull your funds out with 100%.
I was way out earlier. We got out in November, December.
Good.
Got
Good.
there in March, April.
I warned people in June 2021 to pull out, but I didn't say on Twitter in a tweet like, "Hey, this is going to collapse until April," which still gave you like a month and a half to pull out, because there were like 50 to 100 things that were very obviously fraudulent, and it was clear Mashinsky was going to go down hard. I think CZ is behaving the exact same way. I think it would be really naive to not think that something similar could happen to Binance. I'm not saying it'll happen tomorrow. They have $50 billion of assets to burn. They will burn those assets if they need to defend the company. That's what you need to understand. So if you don't want your assets being used in the defense of BNB, then don't leave them there.
Gentlemen, let me jump in real quick. I want to introduce another speaker. He's someone else I can vouch for, Magoo. He's another fundamental analyst along the lines of Nakamoto and Mike. Real quick, Magoo, it's great to hear you, man. Do you have any thoughts? You've been listening a little bit. Or what's going on, man?
What's going on? Thoughts on Binance specifically, or just the overall market in general?
Just flow, man. Just flow. These are friends. You're among friends. Just flow here.
So all I don't know if I'm amongst friends, but we'll see.
You're among friends. You're with Chad. You're among friends.
I'm just fucking with you. So ultimately, I think we head lower in terms of price, just because of the underlying macro that's at play here, and also the lack of liquidity. Right, a lot of crypto like lives or dies on liquidity, and like we're going into this period where we're potentially entering like into a global liquidity crisis, not just within crypto. And so I think a lot, like, and you're already seeing this with some coins that are just so illiquid, right? and there's really no buyers, right? And there's just like no one selling them because they're in such few hands, right? Like even over the last few days, you've seen a lot of DCG related coins just absolutely tank, right? And the rumor there is DCG is basically having to sell to kind of come up with some money, and there's just no buyers of altcoins in general, right? And so when you're getting into this dichotomy of like no liquidity, like these things could go a lot lower. But ultimately, as it pertains to like Binance and Tether, ultimately, I think Binance will probably be one of, well, there's a lot of people at play right now, like KuCoin, Crypto.com, Binance. Binance has like $50 billion of assets, right? So even if there is something incredibly structurally wrong with Binance, it's going to take a while for people to like completely just drain them. But Mike is hitting the nail on the head that what's more likely is that they're going to be freezing withdrawals because it's not going to be so much that it's going to be like a snap of your finger one day that they're just completely insolvent and there's no assets like FTX. There's going to be like mismatched liquidity within Binance, right? Where they're trying to juggle between asset and asset. Like this is what you're seeing in the last week with stablecoins. So Binance has this mechanism when you put in stablecoins, everything kind of gets amalgamated to BUSD, right? But in the backhand, they have their treasuries of all the stables so that if you want to withdraw out, you can get any stable you want. And they're trying to centralize kind of their trading pairs to have like one trading pair to kind of help liquidity in their exchange. And you're even seeing them having to rebalance between stablecoin and whatnot, which is causing these freezing of withdrawals. And I think ultimately that probably happens to a lot more assets on Binance as this liquidity dries up. But I'm more worried about Tether more so than Binance, just because of just the regulatory framework that I think they're going to be coming out with in the next year. The banking committee, everyone in the United States is talking about getting stablecoin regulation out the door before any other type of regulation. And just ultimately, it's not that like Tether has zero assets backing their Tether. Like that's not a reality. The question is, how much do they have, and what exactly are they holding in terms of assets, right? And then also, once this regulation comes down, are they actually going to be able to comply, even if they want to? And then you ultimately, everyone knows that at the end of the day, it doesn't really matter if you're solvent. It matters if you're liquid. And if you're basically regulated out of so many different jurisdictions around the world, you're cutting off liquidity, right? And that's just a slow death by 1,000 cuts. So ultimately, I think liquidity actually gets even more dry here, and we see all coins kind of continue to go down over the next couple months.
A lot of dead money still in altcoin projects that are eventually going to have to capitulate.
Yeah, but thanks, Magoo. By the way, I just posted to the Nest a picture with the FTX, the FTT token chart, and the BNB chart next to each other. Can anyone spot the difference? Because I'm really struggling, you know?
Well, BNB is like even like it's a little bit different than FTX. Like I'm not talking about the chart and how it's behaving, but FTT token was literally just a Chuck E. Cheese token that you used on FTT. Right? BNB has another scam going where it's like, hey, we're a smart contract platform, even though there's really nothing happening on BNB, right? And so it's the same type of flywheel scheme that they're using to kind of use for liquidity. And they're probably like, who knows how much of BNB that they're specifically holding? It's probably quite substantial. And when it comes down to it and this liquidity dries up, who the fuck is the buyer of BNB token? Nobody, right? And so, like this chart, wherever it's at today in the 200s, like it could just fall off a cliff and go to 100, right? Like within a week. The question is, does that actually matter for Binance as a whole in terms of organization and being able to kind of keep withdrawals going up, right? And it really comes down to, are Binance using customer deposits to do a bunch of other funky shit like FTX was? I don't know. I don't think even if they are, it's to the extent that FTX was. FTX was they literally had zero Bitcoins, literally zero. Like where Binance has provable, at least they have like $10 billion worth of Bitcoin. So they have a lot of assets. And so it's going to take a while for that, like, quote unquote, run on the bank to happen. I think it's going to be more of like a slow, slow process. Like you could see, even like with the rumors were leaking that the Justice Department was going to go after CZ, right? And you have doorheads like Kevin O'Leary talking, basically saying Binance is the whole reason why FTX went down. We all know that's a joke, but now they're trying to point like the quote unquote like justice system at quote unquote Binance, whether that's justified or not. But if you see like more charges or indictments brought up against Binance or whatever, you'll just see an increasing amount of bank run on Binance, right? And it comes down to how many assets they really have and how long they can withhold, right? But it's going to be different than FTX, right? Like history doesn't repeat, it rhymes. So we'll see how this plays out in the next like kind of 4 or 5 months.
Even if FTT was eventually about to fall apart, it was really CZ's and Binance's decision to liquidate their FTT position that really was the driving catalyst for the collapse of the FTT token. So yes, it is different. There probably won't be that unless there's some big player that announces publicly that they're done with Binance. But you're right, we won't probably see that or know that. So the charts are very similar, but how it plays out is going to be the same.
The big player is not another crypto company. The big player is the U.S. government. Because Binance US today took Tether from Binance.com, a very clear on-chain violation of the separation between a regulated U.S. entity serving U.S. customers, right, and a offshore entity that the U.S. government already has their eyes on prosecuting and is already in active discussions about criminal indictment. So I think, if anything, the small liquidity issues that Binance is having, not only on Binance.com but Binance US, are actually going to precipitate more DOJ involvement. So the DOJ is Binance's or FTX's Binance, right? So like when DOJ comes down on Binance, it's the same. It's just pushing the button. It's already there, right? It's already clear they're fractionally reserved. It's already clear they don't have all the liquidity and all the tokens that the customers actually believe is there. Like we know that for a fact. We know they've lent out Bitcoin. That's also factual, and it's straight from the Mazars report. Whether you believe tier 3 auditor like Mazars, it's in the report, and it's very clear that's what they do. So nobody should be surprised if the DOJ comes down hard. And the one thing I want to say again that I said earlier is that on the AMA this week, CZ was very clear that he knows the next 3 or 4 months are going to be very bad for Binance. Do you think he's saying that because he knows something about what's coming that we don't know yet, or do you think he's just making stuff up? I don't see CZ precipitating more negative sentiment towards Binance without some understanding of what's actually coming. I think he's conditioning the market because he knows indictments are coming and he doesn't want people to be scared.
It's more about the price of Bitcoin. It's about if Bitcoin drops another 50%, nothing is safe, and that's a good possibility.
Yeah, no, it is. To kind of play devil's advocate, even though I don't believe this myself, but just to add just something in here, is that we've seen this over and over again where you have these people, whether it's CZ, whether it's Sam, whether it's Barry, these big kind of massive people in the industry. They go onto TV with a position and they try to sell that position, whether they're net long or they're net short. Like I would not put it past CZ to be net short right now and to be going out and fighting the market, right? Like that's a possibility.
Crypto or net short BNB?
Say that again.
Do you mean he's net short his own token? Like he's
no, net short any token. But that's like it. Like ultimately, I ultimately don't think BNB is the crucifix, or the nail in the coffin for Binance. I think BNB could go to zero and Binance could survive depending on certain things. But ultimately, they could be just net short Bitcoin. Or whatever their position is or whatever they're doing. Ultimately, like I said, I don't fully believe what I'm saying, but I'm saying there's a possibility like all these people that go out into the market, like as whatever CZ is, he's not stupid. And for you to go on national TV and to literally, in my opinion, it looks like he's just outright clueless or outright just trying to cause confusion and panic. You got to take that into consideration. Ultimately, I do think there's trouble coming for Binance, but there's also the possibility of that type of gaming the market.
The only reason why that's even possible, Magoo, is because there is no regulation, right? Like if JP Morgan and Goldman Sachs tried to short, like they use their entire capital bases to short the American economy, like they wouldn't be able to do that. Like they eventually would blow themselves up and they would become a target of the U.S. government.
All right,
Eventually,
hang on. Do you really not believe that there was no insider trading on any of Trump's tweets around?
No, of course there was.
right?
Of course there was. That's what I'm saying.
Yeah,
What I'm saying
like-
is if a big U.S. bank, which that's all Binance is a shadow bank. They take deposits in shit coins and redenominate them into their own shit coins. That's all they are. They're just
Oh, you're just saying they have more
washing.
impact.
Oh,
Yeah, and
banks,
I'm saying
Okay,
I'm saying all I'm saying is that Magoo's whole point is predicated on us not knowing anything. There's zero transparency. There's no filings. There's no reported investors. There's no reported holdings. Like Mazars was the closest thing we've ever
Yeah,
seen
at
to like
least-
what's actually happening inside of Binance.
At least we knew Bill Ackman was net short Hilton when he went on TV and basically told us the world was ending.
Yeah, I mean they have to file a 13F. They don't have to include in those SEC filings. They don't have to include shorts. It's kind of a exclusion that the hedge funds lobbied for, and for good reason. Because if you short something, right, like you piss off everybody. There's a lot of sort of negative incentives there. But none of this should even be like we shouldn't even be able to speculate about this. For a firm that has $50 billion in assets, they should just file a regular audit report every year, like every other company of that size in human history. Period. Like if they just did that, then we wouldn't even have to have this space.
Yeah, no, that's true. One thing that I would add is also Binance could survive without Tether, but Tether can't survive without Binance. So there's that at play as well. Because Binance.
That was
12 to
literally
18
just what I was
months.
saying, Magoo.
As you see,
before
they've
you
been kind
came
of
in,
really ramping up USD, and basically kind of reducing their reserves of Tether and moving things to BUSD in their trading pairs. And ultimately, if Binance does fully divest from Tether, that's very bad news for Tether. Whereas if Tether imploded tomorrow, Binance could theoretically survive.
That point about the incestuous connection between these different firms, Magoo, is literally something I was just talking about before. I was saying that Binance and Tether need each other, just like Grayscale and BlockFi needed each other, right? Grayscale was raising assets from BlockFi customers. They were investing at NAV and then trying to sell back at a premium. Three Arrows Capital was trying to use Terra Luna to dig out of their hole. FTX and Alameda obviously were completely codependent because FTX didn't even get to the size it did without Alameda, and vice versa. Alameda was hunting, people's stops and liquidation levels directly using a backdoor, right? And so all of these interactions are toxic codependencies that ultimately cause essentially all of the firms that depend on each other to collapse. And I agree with you. Binance and Tether is a toxic codependency. It's not clear which one needs each other more in my view, but it's clear to me that without one, the other one probably has problems.
Yeah. And
how is it not clear that Tether needs Binance more than the other way around? To me, Binance actually makes money. Like, where does Tether makes what 1% on redemptions or 0.1% on redemption? I think it's 1%.
No, man,
right?
they loan out their Tether, man.
The thing is, they take in dollars and then they hold U.S. government bonds, and bonds are paying like 4%. So basically, Tether is making a.
Oh, you're right. Yeah.
Says who? This is what I mean. Like everyone just trusts what Tether's tweets is accurate. Like if you believe a word that these guys say, like they come out and tell you, like this is one of the biggest red flags over the last, call it 9 months. Tether coming out and saying that they've divested their corporate paper holdings with 0% loss over the last year is a fucking joke. If you know anything about corporate paper, even if it's short-term duration corporate paper, and you have the audacity to go on Twitter and say that you've divested from your corporate paper at 0 losses, it's like, okay, like you have to be a moron to believe that. And like,
yeah, that's
if
a
they're
really
lying,
bad bluff.
if they're
That's a
lying,
really bad bluff.
if they're lying about that, like, because like even if that is a lie, like what else are they really lying about, right? Like Tether liquidated, like pay attention here, Tether liquidated $1 billion of Bitcoin that belonged to Celsius. Please tell me how a stable coin that's supposed to take US dollars solely via wire or whatever it is to basically have a counterparty to mint Tether, how the fuck is Tether liquidating $1 billion of Bitcoin that belonged to Celsius? It's because they're also lending Tether out. And how the fuck does lending Tether out make sense for a stablecoin company? Like, that's not what their business model is. So there's some weird, funky shit going on over there that no one has an idea. And everyone's just like, oh, they tweet out a fucking audit report or an attestation, but from fucking BDO fucking Kazakhstan or whoever the fuck did it, and everyone fucking believes it. Like, who fucking really knows what's happening at these companies?
BDO withdrew their support for Tether today. I think
Oh
they
my
said
god!
as of today they will no longer work with Tether after Mazars said they withdrew their fictional proof of reserves reports from Binance, Crypto.com, and KuCoin. So
Like
there's this collective. These companies are saying these auditors don't know what they're doing. It's the opposite. The auditors are smart enough to know when they see fraud, and none of these auditors want to become fucking Arthur Anderson. They don't want to be the Arthur Anderson of crypto, where their entire firm is blown up because they basically put a rubber stamp on a fraud.
Yeah,
that's a huge point there, and let's just be clear about what we're talking about here. Like, we're talking about all this in the context of Bitcoin still being around what $17,000 and Ethereum over 1,000 and other coins with billions and billions of market cap currently. And then you see, like, what does all this mean if Bitcoin does break the support again and fall through? It just feels like, with the point earlier about liquidity and how important it is to any functional market, does any of it matter if the valuation of this continues to fall, and the realization that a lot of these projects and coins have been used to leverage bets that only succeed with significantly higher valuations? And if we don't get this, this magical pump that everybody keeps talking about when we bottom and then we kind of rip and everything will be saved, like, what ecosystem are we living in? I think we're talking about, honestly, weeks or months at max. I mean, from Three Arrows and Luna to FTX, that was like, what, 90 days, 100 days? So we have a little precedent for how much time it takes the next domino to fall.
What support are we even talking about in terms of Bitcoin? Like, I'm not a chart guy, but like, just looking at it, there's literally no support until you hit 12K.
Magoo, the support is you phone a friend and sob to them. That's the only support there is.
Well, that's what I mean, because ultimately,
Can I reset? Let me reset. When you talk about support, I'll jump in. I'm the least smart person in this conversation, which is why I'm so happy to be here. I'm Big Cheds on Twitter. If I'm on YouTube, Cheds Trading. I can vouch for every other one of the speakers. Big Chonas, a good friend of mine. Tom Dwan, excellent poker player, also a friend of mine. Mike Alfred, seems like a real solid dude. Magoo, Nakamoto. When these people like talk, I learn. I listen. I learn. I just love to be surrounded by smart people. For me, whatever, Bitcoin 12K, but like, that's not important. I love this conversation. Please keep talking. Thank you. Keep talking. I'm done. Go ahead.
So, yeah. So ultimately, like, to me, like, there's no support. We're kind of hanging out in this dead man zone, where there's like kind of a sliver of support here at like 16, 17, but then below that, it's literally like a vacuum until 12K, but really a lot of the support is at 10K. But like, if we want to talk macro and just like, because I think macro is the underlying fundamental thing that's driving this. Like, even though all these companies are blowing up, it was because of the macro that they did blow up, because of the lack of liquidity. Because, like, at the end of the day, like, when there was so much liquidity, like, these companies were still insolvent. Three Arrows Capital, Celsius, BlockFi, all those companies were insolvent the very moment that GBTC NAV went negative. And they were able to pretend to still be in business for basically more than a year because there was still so much liquidity sloshing around in the system, aka the economy and the markets. And they were still able to pretend that they were a functioning solvent business. And it wasn't until the macro turned around greatly and liquidity was being sucked up and everyone started running for the exit. And that's where When the tide rolls out, you see who's naked, right? Because when the tide's floating high, you could have everyone butt ass fucking naked and you would have no idea. But then the macro turn, tide went out, and lo and behold, the whole industry is apparently swimming naked. And then they roll over. And so we're seeing this macro environment continue of like low liquidity. The Fed's still raising, they're not pivoting. Pivot bros have been circle jerking each other for 14 months now, and they're still waiting for the lube, and it's not shown up yet. And it's probably not going to show up probably for quite some time. They're going to hit terminal. They're going to hold terminal for some time. Like, people are going to be paying. Like, when you have the chair of the Federal Reserve using the actual word pain, like, he ain't pivoting anytime soon. And so, and then you start seeing them change the definition of a pivot to who knows what. And so, like, as the liquidity continues to drain out, more and more people are going to be exposed for being either insolvent or having massive issues with their business. And so, as that continues to happen, you're going to see more and more of these companies go under, more of the bank runs happening. The Genesis and DCD saga still needs to play out. That's kind of just been in limbo, sitting there for, I guess, over a month now, with just like, oh, hold on, guys, wait, let's just wait. We'll try to figure something out. But it's still like, well, usually when a bank closes its doors, they never open them again, right? And DCG is trying to do everything it can to get some liquidity to kind of save themselves and save Genesis at the same time. But ultimately, as this continues, you're just going to see more and more people just kind of fall at the wayside here. And that unfortunately means Bitcoin and other coins go down in value because you have forced sellers.
This is an environment where the Fed has not been accommodative in over a decade. And the NASDAQ bull market has coincided with the Bitcoin bull market for the past 10, 12 years. So this is different. And we're all, all equity markets are really experience this, especially this year as the Fed has raised rates, significantly off the floor of zero, and how that's had certain effects on the market. But in that, just quick comparison between like S&P and NASDAQ and Dow over the past year is that it's, and they say in bear markets, you have the most violent bullish rips, temporary, you put in lower highs overall and such. And we've seen that in overall equity legacy markets, but we really have not seen that in Bitcoin. And that just shows the inherent continued weakness of that. We talk about, Bitcoin falling, and we have to ask ourselves, like, the overall idea of this market was to have everyone on the same page and talk a bullish narrative of Bitcoin and crypto. And that's what brought liquidity and money into the market, after the big COVID crash. And ever since then, we clearly have peaked, and that money and liquidity and valuations have withdrawn from this market. Now, people that have been in this market, like me, like Ched's, for several cycles, we've seen this before. We've seen Bitcoin and other coins drop 70, 80, 90, 95, 98%. I mean, I can't believe how much Doggy coin I had in 2018, 2019, right? Only to see it do it what it did for just a very brief moment in time. So this market and this cycle is flushing out, the people that rode the wave, and there was quite a wave. And I think we talk about who's to blame, who are the evil doers in this cycle and stuff. And we have to really be in agreement that, this is adult sports, right? We're all supposed to be over 18 or over 21 and investing our own money. This is risk, and we think about, like, who's to blame. Like, is Tom Brady, Matt Damon, Steph Curry on the same pedestal as Kevin O'Leary's, or social media influencers? I mean, isn't that the point of social media? Is to be an influencer, to be someone that people like to see in their feed? And didn't all that help the Bitcoin bull market and create the valuations that we had seen for even of a brief amount of time? And being in these market cycles, whether it's OTC or the Dow, this is what happens. We have episodes of euphoria and FOMO, and a market that just explodes parabolically, and then we have times of despair and depression, and we feel that we are still in that cycle, and where we are right now is subjective to what people really want out of this. Do we want survival? Do we want to buy the dip? Is this a positive event, or do we have other options to play out?
Well, I mean, I think, you want to scale in on Bitcoin and Ethereum, just kind of dip your toes in the market. But any other coin, it's just so risky. I mean, I think we're going substantially lower. I think we're going to be dragged down by the macro situation, as people have been saying. Magoo's been saying the tide's going out. We're going to see who's naked, and a lot of this shit is naked. I do think Bitcoin, between now and the next bull run, which I think will be in 2026, I think between now and then, Bitcoin is going to be fine. I think Ethereum's going to be fine. Anything else is just super risky.
Let me jump in, Tom. You like alts? Like, you like to dabble and stuff, Tom? Like, are there any alts you're into? Because I know you're kind of digging around, looking at stuff. What do you think? What do you think?
I'm two fish, man. I'm not gonna share
Oh,
any
come
alts
on.
except for
No,
Trump
you're
cards.
not two fish. You're
Trump
not a fish.
cards.
You're not
Trump
a fish.
cards.
Come on.
Trump cards. Trump cards.
The problem, the biggest problem with alts is just how centralized they are, and I don't even mean in terms of the technology, because they are that as well, but it comes into who's actually holding them. Most of these altcoins that are like at least the quote unquote dominant altcoins or shitcoins, whatever you want to call them, is that they're actually relatively new this cycle, and there's been no distribution of like the net ownership of said token, because they were all mostly VC backed this cycle. Whatever you want to talk about, MakerDAO, Uniswap, ApeCoin, whatever, all these AVAX, but just name your coin. The majority of those coins are being held by a very small amount of individuals, and ultimately there's no buyers right now.
Wait,
right?
hold on, Mugu. How did the retail rip if it didn't even like get distribution or retail? Am I misunderstanding? Like, help me understand. Like,
so it's called market manipulation. Like, you don't have to have anyone that's actually buying your coin. Like, look at NFTs. Like, NFTs got swapped between two people on ladder trades, and you were able to bring up the ape floor to like whatever how many ETH it got up to, and now it's just falling off of a cliff.
Any illiquid market can be moved. I mean, that's granted, right?
Well, that's granted, but that's what happened to all these altcoins. You had a few people buying them and no one selling them because they were all insiders.
Okay.
You had people like Chamath Palihapitiya and all his buddies stroking each other off about Solana and riding that wave. And there's not that many there's retail that comes in and buys. Like, that's the dumb money.
So a lot of people got that right. A lot of people got that wrong.
Won.
Go ahead.
So,
you know what, Magoo? I actually have an alt that you might like.
Is it called Bitcoin?
No, not Bitcoin, not Ethereum. Ethereum's not an alt. Rune. I think you would like Rune.
Okay, I know what Rune is. I know what Thor is. Like, I totally understand that. With you have your native swaps, basically, where you have this. It's literally, really, realistically like a delegated proof of stake nodes that are hooked into smart contracts where you can trade base layer assets and access different liquidity pools. I know all that bullshit. Like, I'm not.
You see, I told you I'd find an alt that you like.
I'm not. I don't like it, but I do all this research, so I'm not in the dark. Like, I follow up with all this shit, so I can actually have a critical thought on the shit, even though I don't want to touch most of this stuff.
Well, how about a coin that has a narrative behind it, which would be Litecoin, and it has a not very soon, but it has its own happening upcoming, and news tends to drive a lot of these pumps.
Bitcoin is hate Litecoin. It is what it is. But I thought Magoo would like Rune because Rune is like the least scammy altcoin, right? It's like one of the few altcoins that I can think of that you really need a token for, that there's a really good reason for it to exist.
The problem that I have with Rune is that the whole business model is predicated on swapping from one asset to the next, which is basically just promoting. I'll just call it. It's like a shitcoin casino, right? And it's doing it in a decentralized manner to do KYC and AML arbitrage, so you're not having to use centralized exchanges or even like centralized DeFi protocols like Uniswap, right, where they put a
I
man
mean,
in the mid.
but Magoo doesn't, given the context of the discussion that we're having right now, doesn't the idea of swapping between different chains without using a SEX, doesn't that sound like a really good idea?
Well,
I'm just saying. I'm just
really,
saying.
so it really depends on who's actually using these other coins, right? Like, so let's say you have like Ethereum, right, and you're in the Ethereum and or just called the EVM environment, right, where you don't need anything to swap already because you're just swapping in your own native quote unquote ecosystem. And then even AVAX, there's bridges that have been built where you can just swap and you have all those, I'll call them side chains, but I forget what their marketing term is, what they call those. And ultimately, it's just a bridge. It's literally just another kind of sophisticated marketed bridge. On the only thing that's added on top, like for what those actually do compared to anything else, is that you can trade, or not even trade, but you can move Bitcoin natively through those. But like that's all predicated on wanting to get rid of your Bitcoin and to get another shitcoin, right? And the problem is that, like, sure, that might be a use case if I wanted to actually use some of these other fucking shitty tokens, but I don't. Like, I understand people wanting to trade them to try to make money. Okay, that's cool. Like, trade
Wait,
charge
what
me.
else is there? It's all bullshit.
Well,
It's a trade or an investment, one or the
well,
other.
it's not an investment because it's always a trade, right? Because at the end of the day, most of these coins are marketing things that just aren't so. And like, just like, let's just look at Ethereum, for example. The reason why 99.999% of all the transactions that have happened on Ethereum in this cycle were speculative in nature is because no one's paying a $50 transaction fee to do a regular economic activity transaction. They were doing it expecting more money on the other side of a transaction, whether it was minting an NFT, whether it's doing something on a DEX. It's all speculative in nature. So, like, that's the whole dichotomy that's played out over this quote unquote bull cycle, is people just speculating and trading. And that's fine. You can do that if that's what you really want to do. But like, when we're talking about the fundamental value of being able to swap from one chain to the next, it's predicated on gambling right now, right? Because
But Magoo, you surely you've got to acknowledge that there is a legitimate reason why people might want to swap some of their Bitcoin for Ethereum or some of their Ethereum for Bitcoin. And if they want to do that in a decentralized way, well, Rune is the only way you can do it, right?
Yeah, if you want to do that, but the whole thing is reliant on, you need KYC and AML arbitrage, and you don't want to use a SEX, or you don't trust a SEX for whatever reason.
It's
But
access. Exactly. It's access.
But right
shocked.
now, where we are in the quote unquote utility of these altcoins or anything, at this point, it's 100% speculation. I'm not saying anywhere in the future that's not going to be a necessity, but the only thing that's actually enabling today is gambling, right? And I'm not saying that's like that's.
So what's the problem? What's the problem? We're all having fun.
I mean,
on sports.
No, but I'm
Gamble on
not
crypto.
saying that. I'm just saying that, like, ultimately that's what the use case is. And like, for me to be like an investor, like, I'm not really a trader, but for me to invest,
Yeah.
I need to see some fundamental value. And I'm not saying you can't make money, because obviously people are making shit tons of money. If you actually know what you're doing, you have some information asymmetry, you can make a shit ton of money. But like, that's trading, or that's gambling. Like,
Magoo, here's the thesis, right? Next cycle, which I think is going to happen, there are going to be some people who are going to want to be on Ethereum, and there are going to be some people who are going to want to be on Bitcoin, right? You agree with me that Ethereum's not going to die. You agree with me that Bitcoin's...
Gentlemen, we can both stipulate Ethereum's just higher beta, right? Can we just stipulate that?
Right, but people are going to want to swap between the two, and if you want to do that in a decentralized way, the only way to do it is Rune, right? Rune is actually like basically taken over Shapeshift, by the way. So I think there is something there. I think there are very few altcoins that aren't scams, and Rune is one of them. Another one that I've had a debate on that I think isn't a scam is Chainlink. Although Chainlink, I think, was actually a charity for the whole of this cycle. It was actually unprofitable. People who are buying the Link token were basically donating.
Big underperformer for all the other alts.
It was literally a charity. I had a debate with Daniel on that. But if you had to pick...
10x though, so that's something, but still.
It 3x'd from 2020 to the top.
But it hit $3, then it hit $50, so it did do that.
Okay, but like, it's pretty poor performance. But I think if there are two altcoins that I had to pick that aren't Ethereum or Bitcoin and that also aren't scams, it will probably be Link and Rune because they both have.
Can I step in? It's all a scam other than Bitcoin. Can we be honest?
Did you even read the white paper, bro?
Can we be honest? Can we just be honest?
I read the
Come on,
yellow
it's
Did
paper.
you
all
read the
pixels
white
and
paper, bro?
speculation.
I read the yellow paper. Like Ched's right. Like, if you want to try to get some beta and try to get some more money from trading, okay, you do you. You might win, you might lose. But like,
This is not trading. This is investing. Okay.
no, Naka, it's not. It is not investing whatsoever. Because like, if you actually were an investor and you're looking at like quote unquote the fundamentals and not like the scamonics of it and the marketing, like, there's nothing you're investing in. It's all vaporware. Like let's take ApeCoin for example. You're looking at ApeCoin. It's like, well, what are you really investing in? You're investing in something that they're promising you to be a utility token in this fairyland metaverse that they're currently building, right? Like, it's still just as bad as 2017 ICO white paper days, where it was you had a website with people that didn't even exist and a half written white paper with bad grammar in it, and people would go absolutely crazy and buy the shit out of it. Like, I'm not saying anywhere in the future that people won't be using these, but like, a lot of the marketing and like what these people are saying they are today just like isn't a reality. So like, a lot of it is speculation because there's not even enough substance there to be like a quantifiable investor to be like, I could see a realistic future where this token does this in the economy and yada yada yada, whoever the salesperson is, because there's no there right
All
now.
right. All right, let me quick reset. Big Chads, Big Chonas, Tom Dwan, Mike Alfred, Magoo, and Nakamoto, all friends. We're sitting by the campfire. We're toasting marshmallows. Mine's burnt, yours not, but we're all hanging out. Someone's got the guitar. We're just chilling. There's beers being passed around. We're all hanging out. We're all friends. I just want to bring maybe Tom or Alfred back. Mike Alfred, did you folks want to kind of jump in and kind of switch the energy up a little bit? Did you have any thoughts here listening?
I can always jump back in when Magoo's in the space because we've largely agreed on almost everything that's happened over the last 18 months in terms of the shenanigans happening in crypto and your need to skew towards higher quality fundamental things. I would say call them value oriented things versus scams and frauds and hyped stuff. So I couldn't agree more with most of what Magoo said. I wonder if we can maybe change gears a little bit from some of the crypto stuff and just talk about other investments. You know, what's going on in the bond market. You know, there was Michael Gayad was in the room earlier, and he's been one of the people who said that in a risk-off environment, bonds should do quite well. But with interest rates rising this year, you know, obviously the 20-year plus bonds were getting absolutely clobbered. They're down 35% at one point during the year. You know, the equity market has obviously been pretty volatile this year. Values outperformed growth. Small cap is getting absolutely killed. Crypto equities are getting killed, right? Like Coinbase is down to, what was it today? $33, $34 the other day. Bitcoin
brutal,
miners
right?
are trading like they're going to zero. Yeah,
Hey, Mike,
I actually think some.
Mike.
I think some of those things are going to be good values.
Is Jim Cramer going to be right in this one? Because he was bearish in Coinbase, and I wanted to go long, but
that's not.
right?
But that's wrong. That's wrong. He was bullish on it going to 400 initially. So
Yeah,
like,
This is true.
I think Coinbase is probably getting into value territory. To be honest,
I agree. I
mean,
want it to go to 20 to 25.
If you're not buying Coinbase at these levels, you shouldn't be holding any crypto. You should basically just forget crypto even exists. Because if there is another bull run, Coinbase is going probably above 1,000, right? Like, it's just like it's a free 30x now.
I don't think it's free because the bond market's suggesting that they may not survive to 2026. And so the question you have to ask yourself is, with the negative cash flow that they're experiencing now, Nakamoto, if you're right and things are going to be bad till 2025 or 2026, Coinbase needs to cut like 60 or 80% of their staff in order to stop burning cash.
But
Right?
to your
Would you
point,
agree with
the
that?
fees are such a big part of how much they need to survive. And the fees are down so much because no one is spot trading the way that they want them to.
The bond market has an implied probability of 50% of them making it to the next bull market. But it's just like such good EV, right? I mean, even if it's a 50-50 that they make it, right? you're still up so much that the EV is good.
I agree. I actually agree. I think if you actually believe Bitcoin and Ethereum are still operating in 2026, which I do, and you believe there's a regulated U.S. firm that institutions are comfortable using, and BlackRock has said they want to partner with Coinbase. If Coinbase is still around in 2026, my suspicion is it'll be significantly higher. I just think in the short term, it could actually go to 15, 20, 25 bucks.
Gentlemen,
That may not matter if it survives, right? But I think people should be aware that it could go a little lower
Yeah,
before it comes.
I guess it's one of these things where the bears think it's going to go to zero, and the bulls think they're going to buy it lower. So it
Let's
just keeps
reset. Like regulation, you're all super smart. Like clearly something's coming here in the States, right? As a result of what has happened, right?
The first thing
No.
the first thing that we're gonna see is stablecoin regulation. And I think that's actually gonna probably shake up the market a lot more than what people think. Like, because everyone's worried about or thinking about, oh, when are these going to be deemed securities or not securities, and what are we really gonna see? But like, ultimately, the U.S. government has a very big interest in stablecoins because they can get dollars to every corner of the planet that has an internet connection, and there's a lot of strategic reasons why the U.S. government wants that to happen. Well, we won't get into those now, but for that to happen, they need a regulated stablecoin industry, whatever that looks like. We'll see what that looks like, but my guess is that you're going to have to be, if you want to be a regulated stablecoin inside the US, you need to be probably like a US company, probably holding short duration US bonds that are probably held at a US institution. And if you're not doing all those things, you're not going to be allowed to be a regulated stablecoin. And that has massive repercussions because if you just look at the overall stablecoin market, you have USDC and Tether vying for the number one spot, and we all know which one of those coins is a lot more in bed with the US than not, right? Like USDC is literally in bed with Coinbase, BlackRock, Vanguard, all those literally psyop government agencies, where they've basically been given the green light, like where. Don't forget that USDC, well, I guess Circle, literally had meetings with the Fed and the Treasury back of September of last year. And instantaneously after that, they basically made the move from saying, hey, we had these assets, but now we're moving directly to short duration Treasury bills. And now it's one step even further. And it's BlackRock that's managing them in a money market fund, right? A regulated money market fund. And so I think that's the first thing we're going to see in terms of regulation is stablecoin. And everything else will be kind of worked out over the next couple of years. What's a security? What's not a security? What's a money service business? Like, what's all this shit? There's a lot, right? Because even people that are trying to get regulated, companies are steering away and they don't want to be regulated by the SEC and they want to be regulated as a bank. There's lots of different things that's happening. But ultimately, I think the stablecoin stuff, or quote stablecoin act, is going to be the first thing. And I actually think it's going to be sooner than later. I think it would be probably we'll see something here in the first quarter of 2023.
So Magoo, can I just say something really clearly to make sure I don't mince words? And that is that I think Gary Gensler is probably the worst SEC chair in the history of the United States and in the history of the SEC, right? And I think that's pretty clear when you look at the fact that he approved a futures-based crappy ETF with huge roll fees to roll those futures contracts forward every month that cost consumers a lot of money. And then they basically allowed GBTC to exist as a closed-end fund, a shadow ETF, which was literally the epicenter of all of the failures that have happened in crypto this year. So the SEC is directly responsible for allowing the grayscale bubble to blow so big, because if they had allowed it to convert to an ETF, it would have reverted to NAV, and Three Arrows, BlockFi, Celsius, Alameda, everybody else who was participating in trading that vehicle wouldn't have been able to do that. And so I think people need to be, because Gary Gensler is a political animal. He was the head of the CFTC previously. He was only comfortable with futures-based products, and because they also couldn't get comfortable around the venues.
You're a little more forgiving than me. I'm a little bit more conspiracy theorist on that one than
that's
you
fine.
are.
That's fine. But
well,
if you look at what,
let me put it in like what I think you're probably going to say, but not in a conspiratorial point of view. Regulators do not want to regulate at the peak of a cycle because they don't want to be seen as like enacting regulation and then causing and being the pin. They want to come in and regulate after the pin has already popped the market. Like, obviously, you still have all of the quote unquote views and narratives of like, this wouldn't have happened if Gary did this, or this wouldn't have happened if he did that, which is true. But what's worse, that or Gary coming in when Bitcoin's 69K and regulating the fuck out of the market and taking it to the floor? And how much fucking flack would they take then of being
It's like
you
posting a
told-
bearish chart on Bitcoin,
So
on crypto Twitter. It's like there's no good entry point for the government to reverse the laissez-faire attitude of the market, but it needed it, and I agree with you. But realistically, like when does he step in and offering a
now?
Bitcoin ETF vehicle? I don't feel was the Emerald Isle that would have saved the whole ecosystem here. This was a culmination of incredible amounts of liquidity and dumb money and access. There was an on ramp to bring funds into this thing and to derivatize them into whether it's shitcoin, staking, NFTs, all these things. And I think we're reaping the fact that the values aren't there. And now we're in a market trying to find what is the true valuation of a lot of these assets. And this
So
is going to take.
I agree with you on all of that. What I would say, though, is the SEC was doing the wrong things. They were dicking around with approving a stupid futures ETF instead of regulating FTX. FTX US was operating in the US and they did fucking nothing. Today they're doing nothing about Binance US. Binance US is a front for a criminal offshore organization, in my view, and they're doing nothing, even as they're transferring Tether around on chain to try to give that Tether back to US depositors. So
Does
what
the
the
market
fuck is
float though
what
if
the
they
fuck
do
what the
something,
fuck
Matt?
is what is Gary Gensler doing right now? Well, if he does stablecoin regulation, I'll be shocked because he needs to actually figure out what's going on with FTX and Binance.
So can I just give you guys one other point from like I'm a poker player, right? Like sometimes there's a little detail people don't look at. I don't know what I would have done or what someone should do or something like that in Gary Gensler's spot, but I think I would have guessed that after SBF blew up, someone that was head of an organization like that, it would have been normal for them to say when they met SBF or if they did or what they talked about. And Gensler never did that. And if you look at the chair of the CFTC, he was very different. He's like, here's the 10 times I met him. Like, sure, that sounds like a lot. He's like, here's why. Here's what we talked about. He did it under oath in a congressional hearing. Like, yeah, okay, good enough for me. Is there, 100 to 1, some shenanigans went on? Maybe, but like, whatever. Gensler has not said a word. That's really fucking weird to me.
I mean, that's
and to me, when you look at like his lack of action in all these other areas, like I don't know what I would have done, what someone should do, whatever. I don't try to judge that stuff. Who knows? I don't know how. The fact that he didn't come out now and say anything, I find that like a very crazy. Like I don't know why, but I hope
Because
someone
he
figures
was
it out. I'm
working
not
with
saying it's.
FTF to bring down Binance.
No, come on, that's conspiracy theories.
I don't know what it was, but I don't think there's a nothing answer there, right? It might be that one of his staff did something wrong. It might be that there's something else. It might be that he had some personal issue these months and he messed up. It might be, who knows, right?
So the
I'm not
question is that I see is
something doesn't add up. Like,
is
why wouldn't
Gary
you say?
Gensler the dumbest person that we've ever seen, or is there an ulterior motive behind what he was doing? Like, take
He
your
has
pick.
a boss.
Well, all right. So I'll tell you this. I don't think it's. If I had to guess, I don't think it's either of those. But if I had to pick between those two, I would pick the second one. He's not dumb. Like it's clear he's not dumb.
Family friends with Caroline Ellison's family, right? His old boss at MIT is Caroline Ellison's father. Like, it's so incestuous. That's why he doesn't want to disclose, because the answer would probably be, oh yeah, I had like Christmas dinner with them last year or something.
Right. Hopefully, it's just that it would look a little bad. He did one or two slight mess ups. Hopefully, it's that. But like, I don't think it's completely. The CFTC guy. I would guess there's a good chance it was completely. Even if it looks bad, it was completely above board, and that's why he just came out and said, "Hey guys, here's exactly what happened under oath." Why didn't Gensler? It's really weird. It's really, really weird.
Well, the SEC is filing suit against Sam now They waited for the DOJ to come in first, and then as soon as that got cleared, then the SEC's coming in with all their shit as well.
Right, it's like how the Bahamians were forced to arrest him, and the SEC was forced to. Well,
Now
you know what I
Sam
mean?
himself
Like,
is asking for extradition. Like he spent 4 days there, now he's asking to be extradited.
Oh, wouldn't you? Did you see the news story?
Well, that he's in basically this community living center in Barbados in like a 4-person cell. Yeah,
Is that what it is?
Bahamas.
There's a
Yeah.
buffet. There's a buffet.
Is
There's
that like in Seinfeld, like Costanza's dad in the buffet? He's preparing the food.
Yeah, exactly. He's a little soup Nazi. But no, but at the end of the day, yeah, of course you would want to get out of there, but like being that like quote unquote eager to get back to the United States kind of raises kind of eyebrows in my head at least.
well, so I'm not an AOC fan, but she seemed like pretty well researched. And if you go watch this clip of her talking to John Jay, it was like 5 minutes long.
Was she crying again?
No. Hang on. So if you watch the clip, if I had heard just what she said, I would have guessed that she was just being a conspiracy theorist, right? But that John Ray guy seems like a pretty serious dude. And if you watch his answers, it's like he was happy to let it play, right? And there's 5 House members on that panel from New York. So if Southern District was going to feed someone info, like, yeah, reasonable, they might feed one of those 5. Like AOC, I'm not really a fan of her, but she does. I don't think she's an idiot, and she does seem to do some work. And she seemed like really fucking dialed in. And she basically said, she's like, okay, so the Bahamians, when did you drop this report? And he dropped the report like 3 or 4 p.m. When did they arrest SBF? Right? And it was a few hours after. And she's like, I wonder when the Southern District made the request. And just the way she was asking that over and over, it's like the way that the government filters info into the public domain. Like, to me, it seemed like she knew something, right? There's definitely a chance she didn't. She's very conspiracy theoristy.
So I guess what are you suggesting in terms of what is she might know?
Well, no, what she was like pretty clearly suggesting, in a congressional hearing, while asking John Ray, was that there had been a request of the Bahamians earlier, and they only felt pressure once John Ray filed this thing that made the Bahamians look bad if they didn't arrest SBF. Right?
They were probably asked to do so, and this committee is going to be in the minority in a few weeks, and I think it'll be curious to see how the Republicans decide to take up this moving forward, because they're going to have, power in this say. And if there is a political, tie to all of this, it's going to play out sooner than later.
Yeah, I think they're going to put against the microscope and see if he filed charges from like a similar thing of the. And I'm not saying, obviously I would assume Gensler is hopefully better than what like is being accused here of the Bahamas stuff, right? But like, I think that same question is going to be asked of like were those charges filed for appearances?
Well, don't forget that like Sam spent so much of his time in DC, like lobbying, right? Like who did he spend the most time with cozying up to when he was basically working, for lack of a better word, working with not only the governments, the Congress and the Senate, but working with the SEC. Like he met with these people a lot. Like there's people that literally that actually work in DC and said that Sam like literally was in DC full time over the last year lobbying, right? And who was he lobbying with, right? Like who has egg on their face, right? There's a lot of political connections here. Like he's literally getting indicted for election fraud, if I'm not mistaken.
Yeah,
so there's a lot of political tie-ins here, not just like the ancestral relationships that Naka was talking about, which is true that Caroline's family, they know Gary Gensler. That's true. But like when you have this like these quote unquote oligarchs, that I'll call them that, but it's very ancestral just off the get go of how closely knit these people in Washington D.C. are and their families. But so there is those connections, but just like above and beyond that, there's a lot of political stuff at play here, and I don't know ultimately getting into like who does this hurt more, or who does this help more, whether it's Republicans or Democrats. Like at the end of the day, there is a lot of connections here and we'll see how that plays out. The thing that makes me the most curious is all of these indictments are conspiracy two. And when you have that, it's not, you don't have indictments for one people. And usually it's not like two or three people. When they hit you with like conspiracy charges, it's a very deep and a lot of people that are involved, right? And like, I want to, like, this is going to play out over a long period of time, but like, this rabbit hole is deep, my friends.
And they
Yeah,
realize that they need to do their best to see if they can preserve any capital, right? If any of the debtors and the creditors, are they going to get 10 cents on the dollar up to 30 cents? So there's incentive to see if any of this can be salvaged, because so many people are at risk and are exposed to this, and people of prominence, people of influence, friends of friends that have power. And that's what's so special about this, is everybody from a class system. This wasn't the retail person. This wasn't just the retail person, I should say. This wasn't just the unknowing investor. These were people that allegedly had credential knowledge, know-how, and were accredited, that got taken in this scam as well.
Yeah,
it was Tiger Global, it was Sequoia, it was Third Point, it was some of the best investors in the world. But I think one of the most interesting things to watch about SBF going forward is just how much he's going to go from pretending that he had nothing to do with the fraud and stealing the customer money to knowing everything. Because before he got prosecuted, he spent a week parading around in the media trying to convince people that he had no idea, that it was just a number on a screen, it was just margin and all this stuff. Guess what's going to happen once he gets in front of the prosecutors in the U.S.? He's going to tell them everything he knows about CZ. He's going to tell them everything he knows about Tether. He's going to tell them everything he knows about the exchange coordination group. The DOJ is going to have a fucking field day with that information, because they were already on the verge of dropping charges anyway on CZ criminal indictments. What do you think they're going to do once they have SBF's part of that?
Mike, what do you think about him? He's like, if, you know, and by the way, a quick reset on Big Chads. I'm here with friends Big Chonas, Tom Dwan, Mike Alfred, Nakamoto, and Magoo. These are smart folks. I'm just hanging out. Mike, he was.
I'm Chads. I'm gonna have to go. Thanks.
Hey, I'll catch you on the flip. I might do this like every weekend. I'd love to do a macro chat with smart people, and I'll invite you next time. All right, buddy?
Cheers, buddy.
Cheers. Good to see you. Mike, he's like, oh, Maxine Waters, I don't really know anything, but if you think I might be able to help a little bit, you know, gee golly, I'll show up. And I'm like, man,
I don't have my records. I don't have access to my data, but I'll try my best.
So
the weird thing is, he agreed to go to her committee and not the Senate one, when him and her clearly had met each other at least once, you know, potentially multiple times, right? And the only thing we know about his relationships in DC is that he met the chair of the CFTC 10 times. And that's like, I'm not that suspicious, because we only know that because the CFTC chair volunteered. Why haven't these other people? Why was he invited to a committee where he's met her at least once and she didn't volunteer? Right? Like, why hasn't Gensler volunteered? That's very weird. Right? If I was in those spots, I think most people in those spots would just be like, "Oh, by the way, here's the times I met this person. Okay, now here's my actions."
Every single person that's going to get indicted or going to be brought in, they are going to be the biggest rats. Like Sam, like FTX, Alameda. Like, let's not forget, Alameda was the #1 counterparty when it came to minting Tether, over 30 billion worth. Like, if any of these people know anything, and I'm not saying they do, but if they do, they are going to be singing to the fucking choir to just reduce their sentence from like 30 years to 10 years. Like, they're going to squeal on everybody.
For sure.
Not like, and that's the thing though, they're gonna try to sweep this. Like, they're gonna try to pull like the Kevin O'Leary playbook, with trying to sweep all of the affluent and like political connections under the rug, with trying to amplify external actualities, like which, like Binance, CZ, Tether. that's the way that they're going to try to play this, is sweeping all the political connections, all the Ukrainian money laundering, all the deep connections with all these people in the political class. They're going to sweep that under the rug, and they're going to amplify like the externalities of the rest of the crypto.
And this is why CZ agreed to buy FTX suddenly after fighting like a bunch of frat brothers overnight. All of a sudden, the next day, FTX was going to be acquired by Binance. I think what happened is that CZ actually thought that SPF was a little stronger. He wanted to beat up on him a little bit, but he didn't want to kill him. And once he realized, he saw the train coming down the track, and he realized that FTX was going to go down. He realized all of his dirty laundry was literally going to be put out into the public, and he said, "Fuck, I need to buy this thing and try to hide and sweep all the bullshit out of the way," and then he couldn't do it.
Do you think?
No, come on. He would have done it if SBF had like nuts on him. Why wouldn't he come up with the $8 billion? He could obviously come up with $8 billion.
Because
right? If
he
SBF
knew
actually had the nuts on him, he would come up with it.
No, he wouldn't, because it's the same reason why when Coinbase was approached the weekend before that CZ even actually made the offer, the offers and the talks were actually going to Brian Armstrong as well. And Brian Armstrong made it sound like that their hands were tied. His words, not mine. It's like, we were approached and we couldn't do anything because our hands were tied. And that to me smells like they were contacted by government agencies.
And at the same time, Kraken got contacted by Kraken got contacted by law enforcement at the same time as Coinbase, because they actually froze FTX related accounts at the same time at the behest of law enforcement. So of course the US regulated entities were all contacted at the same time. That's what CZ is worried about. When he was in the AMA this week saying bad shit's coming, it's going to be a bad 3 months, he knows for sure that all of this was happening on the back end. He agreed to acquire FTX only because he saw that if it went down fully, that for sure all this stuff was going to come out, and he thought he could put a stopgap in it. But then he looked at it and he realized literally this fraud that's inside of FTX is worse than the fraud in Binance. Like, he's like, our shit's bad, but your shit is worse. We can't even tolerate it, even though we know that you going down is going to potentially take us out too. That's what happened. I'm 95% certain that's what's going through CZ's mind, and that's why he's been behaving so weird for the past month.
It was easy for him to make that offer.
For sure nuts on him, he would come up with $8 billion. Come on.
The reason why they didn't want to is because the amount of law enforcement investigation that was going to be tied up in FTX, regardless if they bought them out or not. And you don't want the FBI, the Justice Department up your ass when you're trying to buy them for $8 billion. Like, that's not worth, like, if you could even 10x that, because it's just not worth it to be buying a company that's literally being federally indicted left, right, and center.
And at the same time, Binance was already under. They were already under federal investigation. Binance was already under federal investigation.
Real quick,
but I don't think they would have known they were getting indicted at that point. And
no,
I think
they
that
knew.
if they had
They
gotten
knew.
the bailout,
Coinbase knew. Kraken knew. And,
I don't think that's true. I think
no,
they
they
knew
did.
about something.
They knew.
They knew. I'm telling you, I think they knew about something from a different government agency. Because from none of these sources you've heard, I heard that a different government agency gave pressure to that deal. And I'm not going to like say which, like we're on a public space with 1,000 people, but like
no, it's just the four of us. We're camping. We're hanging out. It's marshmallows.
My marshmallows are fucking burnt.
But my guess is that had that deal happened, that these indictments and shit would have never happened, right? I think that stuff only happened because customers got rugged.
Oh,
well, but it would have happened either way, because Binance wouldn't have been able to plug that hole without taking more money from their customers to plug it.
But so SBF has been taking money for a year and a half, and no one indicted him, right? It's only
because that's the way these frauds always go down. These companies can operate insolvently for 6 months, a year and a half. Crypto.com is probably insolvent now. BlockFi and Celsius were insolvent a year and a half ago, right? And so, like, FTX was insolvent before. They were insolvent probably by spring of this year, and so Binance can't plug that. They don't have $8 billion of unencumbered capital.
And so let me just explain. Let me not explain it, but FBF have used the term "you've won" multiple times, and that is probably one of the only times that FBF has been honest over the last 3 or 4 weeks, is by literally showing that what was actually going on. Like, this is a little bit of, like, not anecdotal, but like kind of extrapolating. But there was whatever government agencies or whatever, there was a battle going going on between FTX and Binance. Like there was an active investigation going into Binance for a long time now, and the reason why Binance and CZ actually attacked FBF and FTX was because Sam was actually in DC bad mouthing CZ, literally tweeted out, "Oh, can CZ even go to DC?" Like basically saying and calling him a criminal, and that he'd be arrested if he went there. And he was going to DC and trying to lobby regulations that were favorable for FTX and not favorable for Binance, because ultimately Binance is like the biggest player in the market, and they've been there because of the unregulated fashion, and FTX was trying to create a regulatory moat. And so this was the fight that was happening, and this is why Sam uses the words congratulations or you've won, they won, because Sam was trying to literally attack Binance any way they can. And
Yeah, but it was more specific, Magoo. Talk about what happened with Voyager, right? Like I talked about this earlier. You weren't on the space yet. If you want to be really specific, Binance and FTX were competing for the Voyager bankruptcy estate assets, right? And SBF won because he contacted the Committee for Foreign Investment in U.S. Assets, CFIUS, which is a nefarious organization that basically within the U.S. government that stops M&A transactions involving like China, for example, right? And so he got them involved and said, look, CZ's a Chinese company and CZ's a Chinese person and they're going to take these Voyager assets and it's going to be bad. Like you should give those assets to
yeah,
us.
it's the same shit that fucking Kevin O'Leary is still fucking puppeting
Correct.
on fucking in the hearing. Literally
And
saying
the crazy thing, it's partially true in some ways. It's not, there's nuance here because it's not entirely true, but it's partially true. But it didn't matter because it pissed off CZ and CZ said, fuck you, SBF. If you're going to bring in the U.S. government to block me from getting access to this liquidity, the real battle here, Magoo, is over the very small amounts of real liquidity that are actually left in this ecosystem. And when these companies go under, they want the BlockFi deposits. They want the Celsius deposits. They want the Voyager deposits because everybody's trying to bolster their own balance sheet. SBF was basically insolvent and he wanted to steal essentially the BlockFi deposits, the Celsius deposits, the Voyager deposits, and Binance wanted them more because Binance also needs liquidity because they're already experiencing liquidity issues.
Go ahead.
So I
And-
agree
and
with
that-
almost all of that, but I want to give you like one small bit of pushback. And so I didn't hear this from anyone Binance side or anything like that. But I will give you one little bit of info. I heard from very credible places that what pushed CZ over the edge was Sam was shopping around in DC, that CZ and Binance were willingly evading Iranian sanctions. And I happen to believe that probably wasn't accurate. Not saying that there wasn't some amount.
It's literally already been reported that it is accurate. If you read the Reuters story, they've sourced specific situations where Iranian National Guards members use Binance to launder money. Like this is proven.
No,
this is
I'm
not
not-
this is not even
Of
skepticism anymore.
Disclaimer,
course there's been-
real quick. Can I have Big Chaz disclaimer? I have no idea what everyone's talking about, but I'm just glad to be hanging out with my good friend.
yeah, once you mention the words Iranian, you instantly get flagged.
So of course there's various amounts of laundering for big money crypto spots, any exchange that's unregulated, probably even the regulated ones, but those less, right? And Binance being the biggest, of course there's amounts, right? There's a big difference from political, but also from legal and optics and stuff like that, if it's willing and not, right? What I heard is that SBF was shopping it around, or SBF or FTX or something like that was shopping it around that it was willing, right? Now,
Yeah,
I don't know.
That's on the record, and like whether they're doing that or not, like.
No, I'm saying I heard this before FTX went bust, right? Like,
that was
what
the
pushed
whole Iranian story. That's literally, I remember hearing that story in 2018. Like, because once those really hard sanctions went on Iran was literally using crypto to keep their economy alive in the face of sanctions. And it doesn't take you rocket science to figure out that they're doing stuff through Binance. But like, ultimately, at the end of the day, whether Binance is or is not working literally directly with the regime in Iran, like we know for a fact that FTX was working directly with Ukraine, right? Like all of these places are acting as middlemen for massive government money laundering operations, whether it's Iranian, whether it's Chinese, whether it's American, they're all being used. Like, do you remember how the EU was literally days away from instituting massive crypto sanctions and regulations before the Ukrainian war. Then the Ukrainian war happened, and then they put it on pause. And then you've seen all the fucking crypto flow into Ukraine, whether it's through donations, whether it's through whatnot, because they knew what was going to go
So
on, and they needed that to happen.
let's ask ourselves the question here about like the aftermath, right? Like we're talking about what's happening now, and that's fine. But like, what is the aftermath of all of this, and how can people that want to be investors, and how can people that want to be traders, right, still be part of and participate in this market? If we have exchanges that we can't trust,
Jonas, what's the on ramp? What's the on ramp?
well, that's what I'm asking is like, how can people be positioned for, oh, I think we're close to a bottom, or I think there's value here. I think the market's oversold. How can people, how can the everyday investor be in a position, right, to take advantage of this in the coming months and in this 2023?
So
we're weeks away from ending this year. How can the average person position themselves to benefit from
yeah,
this?
so what you're basically asking is what counterparty can you trust to be able to facilitate what you're insinuating is
Doesn't have to
being
be
able.
a specific party or counterparty, but the actual, like, I can own crypto on my own ledger, right? I can own my own keys and be an investor that way. That's hasn't changed in this entire broad market.
Real quick, hey folks, real quick. This is Big Jonas who introduced me, Big Cheds, to crypto. Go ahead.
So my overall question really is, and this is kind of, there's no right answer, obviously, but like we're talking about all these things that are happening, and I think there's still, this is like what the end of Act One potentially, right? So if that's the case, and we spend the next half a year or so, all these things happening, these dominoes falling, what really is what people probably are interested in is how can they've been through this altcoin run and the NFT run, and that they kind of understand what can happen when these charts pump. But we've seen people lose their investments not because they made a bad trade, because they had their money in something that
The
was
wrong place.
the wrong place. So
So
where do people go from here?
So honestly, the easiest thing to say, and I know it's been said a lot, but like, not your keys, not your coins for everything,
Not
right?
your keys, not your cheese.
Yeah, because at the end of the day, like, let me talk a little bit of anecdotal as well. Even market makers right now in the industry don't trust anybody, and you've probably noticed that across even all the exchanges, liquidity is very thinly traded on open order books today. I'm not talking about derivatives, but actual spot action, is because all these big market makers got caught with their pants down in all of these places where they shouldn't have been and holding a lot of amount of liquidity, and they're trying to use their capital in an efficient manner, and the only way to do that is by housing it at the custodians or these exchanges that you're actually making the markets for. And even the market makers are pulling back, and they're not basically keeping their capital or their coins on exchanges right now. And ultimately, the end user shouldn't be as well. Like if you want to trade, you don't have to hold your shit there. Like, you can only bring it in for that, like, literally day that you're actually needing to trade, and you've ultimately reduced your counterparty risk if you're just moving it on and off, right? Sure, you need to be very well versed in basically your own storage and keeping it secure that way, but that completely de-risk you in terms of just holding your capital somewhere while you're waiting to trade it. Like, so ultimately, like, not your keys, not your cheese. And like, if you at this stage, especially at this stage, for the next 6 months, you probably shouldn't be holding any of your assets at any completely unregulated exchange, whether it's Binance, whether it's KuCoin, or even with a crypto.com. I don't even care if it's the most regulated fucking company on the planet. You probably should not be holding your shit there for the next 6 months while this shit starts to fucking play out.
How can you have a bounce? How can you have a bounce if you can't even like put a nickel in play? I don't get it.
You guys just told us that we're not going to bounce. We're going to 12K. We're going to 10K, right? Like, the fundamentals and the technicals will align on this, because there's no reason for Bitcoin to go up when there's this many bad actors that are doing incestuous deals in the ecosystem. It's basically a giant self-referential Ponzi scheme where Tether Binance, Crypto.com, right? Gate, all these companies are basically sharing a balance sheet. There's no real capital in the ecosystem, and there's no capital coming in from outside of the ecosystem. Goldman Sachs is not going to put $3 billion or $5 billion into the ecosystem in its current state. So you actually need to see more of these bad companies like FTX blow up. If they don't blow up, there's no fertile ground to build the next bull market. So I agree with Magoo 100%. You need to self-custody your assets, and you need to play defense fundamentally. You don't need to be playing offense right now. You need to play defense.
Mike, you're not a technical analyst, but like if I put you to it, right? What's the higher low in Bitcoin, right? 3K low, 69K high. What's the higher low?
87.50 to 11.5.
I mean, that's totally reasonable. That's like trading like a normal asset. You know, people have to get with the program. Like Bitcoin, just because it did, I'll shut up in a minute because I love what I'm hearing. But, you know, just because it did what it did in the last 13 years doesn't mean it's going to do that in the next 13 years. You know, we're seeing the weakening signs of a weakening longer-term trend that may eventually consolidate and break bullish, which is great. But we need to kind of give it a little more time. I think that's reasonable what you said. And again, real quick, I'm a big Jonas, good friend, Tom Dwan, a buddy of mine, Mike Alfred Magoo. This is an awesome conversation. This is wonderful. Keep it going, guys.
I'm now going to be known as Big Magoo.
Yeah, I'm Big Alf. But I think, look, to your point though, Cheds, like there is their generational buying opportunity coming. I think in the next
Whose generation?
our generation. It's fucking our time now.
Well, that's the thing. The person that bought in 2020 and sold in 2021, that was their generational moment, right? So
yeah,
is this for 2030, or
no.
is
This
this
is
a quick big move? And if Bitcoin is Bitcoin the best vehicle to find that move?
So it comes down
The
to your time
diminishing
preference.
returns.
So like if you're a trader and you're looking and you're trading the 1 minute chart or whatever, I don't even fucking care what you're trading. It comes down to your time preference. Like, and ultimately at the end of this decade, we all know where the governments are going. They're going to devalue the currencies. That's the only way and the only option they have. And
Pay off the
so
debt, right?
yeah, at the end of the day, like my time horizon in terms of investing is 10 years when I'm looking at Bitcoin specifically. Do I think Bitcoin is going to be higher in 10 years than where it is today? Yes. How much higher? By probably a factor of like 50, if not more. Just because I know where macro is going and how much they have to devalue the currency. The United States has literally like $200 to $300 trillion in unfunded liability. They're not taxing that; they're printing it. And that is like the whole reason why Bitcoin was quote unquote discovered or invented was to kind of mitigate that for the common person or for people in general to
Was it
actually
though? Was it, or was that just what we've been talking about? Like, I
no
agree with
so
you that was a hope, but the hope has turned into the biggest Ponzi scheme of our lifetimes.
no, but that's you need to be very, very specific when you talk about Ponzi's and scams. Crypto is 100% Ponzi and scamonomics from inception to today. Bitcoin is not. Like this is the whole thing. People like to lump crypto in with a hole and throw the baby out
It's
with
the
the bathwater.
scarcity. Does it boil down to scarcity?
Yeah,
It,
does that mean anything anymore? Does 21 million will only be 21 million? But hey, you can fractionalize a Bitcoin to point zero 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 zero. It's
but
That's the
that's
really
pizza.
not.
That's the pizza thing. No, it's censorship resistance. It's decentralization. It's the fact that miners have to deploy real energy in the real world to secure Bitcoin, and the other coins don't.
because at the end of
They're literally just games. They just if you have more coins, you make the rules, right? It's
because
just
at the end of the day, this is where kind of a lot of the marketing and in the shit that's happened with shitcoins is they actually try to claim that they're decentralized, and in reality, even the most decentralized shitcoin is incredibly centralized compared to Bitcoin.
Yep.
Because we're going into quote unquote whatever you want to call it a fourth turning or whatever, but the trust is lost in the system. Not only the externality of trust between sovereign states not trusting each other, and also the internal trust within sovereign states of the citizens not trusting their government. And at the end of the day, the only trustless thing is Bitcoin, because at the end of the day, that's the only thing that's really decentralized. because everything else is extremely centralized, not only on a technical level, but in every single way you can imagine. And do you think, like, just take this example? Do you think Russia is going to allow their economy and assets to be put onto the Ethereum blockchain? No, like Ethereum is completely co-opted by the United States, and that's not me saying the Ethereum's not going to be used. It's basically saying that it's been co-opted by the United States and the United States interest. You can say that's bullish or bearish, but that's the reality. Whereas Bitcoin hasn't been co-opted by any sovereign state and can't be, at least up until now. And at the end of the day, like if you're living in a trust, like a world where no one trusts each other, the only like means of quote unquote transactional trust has to be on a trustless network, which is Bitcoin. So
But
like
does that mean that the value of a Bitcoin needs to be $17,000 right now? Like, I agree with everything you're saying, but
So
who sets that that's the true value of something which
the
costs
market,
less to produce it,
the
but it
market.
costs less to produce?
So remember back in 2015 when Bitcoin fell from $1,000 high in like Thanksgiving timeframe in 2014 all the way back down to 200, right? That was the generational buying opportunity because nobody cared about Bitcoin for a period of time. I think we're getting back to that now. It's just the new floor is 10,000 instead of 200, and the
And
next
this,
run is to 200,000 or 500,000 over 5 to 7 years, right? And
Yeah,
even if
wait,
it's
wait, whoa, wait,
even if it's only a 20x, even if it's only a 20x, it's still a
No,
lot.
next high of the bull market's about 50K.
Yeah, with your technical analysis, but this is why there's a market
It
because
needs like
you
5
might be
years.
right.
Got to
You
take
might
like
be right.
5 years to shake it out. Come on,
You
let's give
might
her time.
Cheds.
Give her
Cheds, you might be right.
time. Give it time. Let it grow
You might be right,
naturally.
Cheds. You might be right. I
so
actually
Bitcoin at
really
50K.
respect you a lot.
Bitcoin.
ultimately, I think the halvings are going to mean less and less. Like not only like mathematically that's true because the inflation rate of how many are being brought onto the market
That's
is
a
getting
big deal.
reduced.
The math of it is true.
The halving is getting kind of less important, and Bitcoin is really kind of morphing into like a real macro asset where it's actually moving in tandem with the economy. Like this is the first time that Bitcoin's ever done that. Mind you, this is the first economic downturn that we've had in the last 12, 13 years. And Bitcoin, just remember what Bitcoin was doing in 2017 when the markets weren't doing what Bitcoin was doing. Obviously, this time around is a little bit different, but like it ultimately it doesn't matter to me where Bitcoin's going in the next cycle because like I literally remember when Bitcoin was 80 cents and I remember pumping to $1,200 and then I remember it crashing all the way to $120. Like it's done this so many times. Like people that are only been in this market for so long are like shocked, right? Even people that have been around 2017, they're shocked of like the volatility. But like this is going to continue to happen. Like sure, as the asset gets bigger, these peaks and these valleys are going to get more smoothed out, but it's still going to happen. Like to me, like I don't care where Bitcoin goes in the next cycle. I care where it goes in the long run, and it all comes down to your time preference, right?
And how do you
Ultimately,
play it? Like, how do you play that next cycle? If Bitcoin
well, so
can
that's the whole.
do
That's
100K, doesn't that mean that a basket of alts have done another 100x or 200x
no. That's
move?
so that's the whole. That's the whole thing of thinking that backwardized models are going to be continued into the future because. Like at the end of the day, you have to look at fundamentally how these things are actually being valued. Like, because people just like, well, this is higher beta, so it's going to go up a lot more. Well, you have to explain to me fundamentally why that's going to happen because ultimately, all these alts eventually will start to get valued by fundamentals and not by speculation over the long period of time. And when I look at it as an actual investor, I look at Bitcoin at being the only fish in a $300 trillion potential market. And I look at some of these other altcoins and there's many fish in a lot smaller pond. Because like, let's be completely honest. Like even if Ethereum doesn't implode on its own weight because it's a horribly engineered system, let's say Ethereum literally goes to its fullest potential, its glass ceiling is theoretically roughly around the same market cap of one of the biggest tech stocks that's out there because it's literally a tech play. Ethereum's not money. It's a smart contract platform. And at the end of the day, it has a glass ceiling, especially now it's been co-opted by the United States. So like even if you look at it and say, wow, Ethereum is going to have a market cap 3 times as high as like the biggest stock on the Nasdaq. Okay, that's like a 3 or maybe a $5 trillion market. And you're like, okay, but it has competition, so they're all vying for that type of market. And at the end of the day, Bitcoin is in a completely different world by itself because of the technical fundamentals of what Bitcoin actually is versus what people say altcoins are and whatnot. And what at the end of the day, it's going to be that monetary premium asset that literally is competing in like a $300 to $400 trillion market. Like, it
Sure,
makes
but
no sense.
fundamentals and value are two separate things. Like, I agree with you that the fundamentals of Bitcoin being as unique at it as it is are true. There are amazing cases to be made, but the reality of what we just went through is that stuff that was not Bitcoin, and it doesn't have to be the coins. It can be the NFTs. It could be the staking, right? Produced for a time a significant larger delta of investment
That's a frame.
return
That's a
based on
frame in
paper.
time. So that's a frame
Yeah,
in
yeah,
time.
Kathy Magoo. The correct way to talk about this is to talk about Kathy Wood and point out that she dramatically outperformed the S&P for a period of time and literally gave it all back because she was taking advantage of cheap money at a very specific idiosyncratic time in history to make money, not using fundamentals at all. And that's possible. You can go to a poker table or a roulette table tonight and put $1 million down on black and hit 3 or 4 times in a row, and you think you're a genius, but it doesn't actually mean that there's any real expected value to that strategy over a long time. That's Kathy Wood. That's altcoin trading. The thing about Bitcoin that's different is that it's very clear that Bitcoin has value in 5 or 10 years because it's just an alternative to the existing fiat system. It's an alternative to money printing ad infinitum to infinity, where you just inflate the value of everything, right? You print an infinite amount of money to dig out of the debt.
Isn't it just another bet among just like varied degrees of risky bets?
Bitcoin? No.
Yeah, I mean,
Bitcoin's just base money. But at scale, I think it's just in a portfolio. Yes, I put Bitcoin in a portfolio at say 20, 30, 40%.
That's
and then I put
high.
value.
That's pretty high, right?
Yeah, but the other part of the portfolio is high yield value equities trading at a low multiple with high cash flow, like we've talked about, Cheds. And so it's basically a 60-40 portfolio with Bitcoin on one end serving as like the replacement for traditional equities like the S&P, and then on the other side, high yield equity, well vetted high yield equity serving as the bond portion to generate all of the.
But isn't its value what the next person will pay for it, and not?
No.
Scarcity I feel that scarcity is kind of out the window now, and
that's not true. Can I explain why? Can you let me explain why it's not true? I'm on the board of a Nasdaq listed Bitcoin miner called Iris Energy. We literally build out large scale facilities all over Canada and the U.S. and we plug in ASIC machines to generate hash rate, and the Bitcoin hash rate has gone up in a straight line up into the right. Even during this downturn, the hash rate has continued to explode higher.
Explain what that means technically?
What that means is that essentially the security, right, the budget, the energy, the real world infrastructure that's being devoted to Bitcoin is increasing even as the fiat price is falling in the short term. There's this positive divergence between people who are making long-term bets on the infrastructure and the security that backs Bitcoin, right? Because you can't just create a Bitcoin out of thin air like you can with Ethereum or Binance shitcoin 1, 2, 3, right? With Bitcoin, it's algorithmically generated, all entirely on chain, and the only people who can do that are people who have access to these large-scale infrastructure facilities or mining equipment, right? And so that requires you to have access to real-world transformers, energy resources, right? You have to have buildings, you have to have land, right? And so it actually ties into the real world. This is one of the biggest problems systematically with crypto today. 99% of crypto does not have any connection with the real world economy. Bitcoin is the only asset in crypto that actually has direct connectivity to the real economy because you have to own energy assets and energy connectivity in the real world in order to actually mine Bitcoin.
So there's a cost to create Bitcoin.
Correct, and it's a huge defense mechanism.
There's a premium above that cost, which is the current valuation of Bitcoin. And is that true? Like, there's a cost to create it, and then there's the premium, which is why Bitcoin
that depends on how you value it, right? Like, if you want to value it through that lens and through the cost of what it actually costs to create said item, that's one way to value Bitcoin. But like, to kind of piggyback on what Mike's saying, one of the biggest disservice that Satoshi ever did was naming Bitcoin the asset the same thing as the network. So there's Bitcoin the asset, and then there's Bitcoin the network. And the fundamental value that Bitcoin the asset actually derives from is from the fundamental use case and ability of Bitcoin the network. And Bitcoin the network, and what value does the Bitcoin the network that has? It's the biggest, literally the biggest computer network on the planet that is literally securing it in a trustless fashion. So like at the end of the day, you have to bring this back to what money is and what hard money is and what draws people to certain types of money. And having a system that is censorship resistant or censorship proof, decentralized, nobody is in charge, that adds massive fundamental value to a network where you can use, where no world government can tell you or stop anything. This is why Bitcoin's a world asset, is because no individual sovereign state can imputate on it any of its own beliefs. It's its own thing that's completely decentralized, and that's the value. The value is that somebody in Iran who's literally under sanctions can do an economic transaction with someone in Antarctica. Like, that's the whole value proposition.
Then
That
how come a year ago it was 70 grand and now it's
because
17 grand?
because people who like to quote unquote financialize things have literally speculated on it. Like, this happens with all the assets, right? People who trade charts, people who want to speculate, people who want to make fiat, they speculate and they overshoot every single time. They're like the Federal Reserve. They literally overshoot, and then it literally comes back down. It all comes down to speculation, and then it coming back to the real world value of what something is. Not even just in Bitcoin and crypto, but in every asset. Like, at the end of the day, even Warren Buffett said, in the short run, equities are a voting machine, but in the long run, they're a weighing machine. And so right now we're seeing this decoupling of going away from the voting machine, which is the speculators, and going closer to the weighing machine on what the actual fundamental value is.
Big
And
Chungus, you were onto something with your energy cost though. That is like a true floor, because it's a true floor based on thermodynamics, right? And physics in the real world and the real cost to generate things in the real world. And Bitcoin is the only asset in crypto that has that. Magoo's right about the network too, right? Like, if you want to know how to value Bitcoin, look at network growth over time. How many wallets hold X amount of Bitcoin? That's straight up and to the right. If you want to understand the security of Bitcoin, you just look at the hash rate over time, right? That's straight up and to the right. It doesn't depend on price. Remember, price only matters if you care about converting Bitcoin back to US dollars. And the US dollar system is quite volatile because they print increasing amounts of money some years. Some years there's a recession, and so they print more. And the other years there's a boom, and so they raise interest rates, and they say we've got to bring inflation down. And so they're constantly manipulating the inputs that run the economy. Bitcoin doesn't do that at all. Bitcoin's just algorithmically derived, right? So the amount of Bitcoin that are printed this year, it's basically whatever is 900 a day, right? It's six and a quarter every 10 minutes approximately, going to 3 point whatever it is, 1.25 in the spring of 2024, and then it does it again every 4 years. That's very confusing to people because they're used to the Fed press conferences where some random old white dude basically comes up on stage and basically manipulates the market using a set of words that were pre-scripted to signal certain actions about what they want the economy to do. Bitcoin doesn't do that at all. Bitcoin doesn't give a fuck about any of that. It just prints new Bitcoin every 10 minutes. It allows you to transact with anyone in the world without any government or counterparty interference. And there's no liabilities.
And one of the other things that's completely goes over the head of a lot of today's finance guys, VC guys, is because they're trying to value Bitcoin in the lens that they've tried to value other assets and other companies that's come before it, looking at earnings, looking at different metrics. But at the end of the day, you have to remember that Bitcoin is really trying to be money. And what is money, right? Like, what has drawn humans and human civilizations to use certain things as money, right? And we call those hard money principles, because at the end of the day, yeah, there is some sociological component to every single money that's ever existed in human history. And one other person is willing to have to buy this for this amount of thing. But at the end of the day, if there's no fundamentals behind things like that, like the tulip mania. There's no fundamentals on how tulips were trading, and it was truly just based off of someone willing to pay more. But with Bitcoin, the reason that people are drawn to Bitcoin is because there's actual hard money principles, which are fundamentals that are in immutable principles predicated by the network. And that is what's drawing the social aspect of people into wanting to own Bitcoin, because it is exuberant of literally hard money principles, where anything else is not a monetary asset. So a lot of people have a very hard time at trying to value what Bitcoin is, because they think it's a technology, they think it's an asset, they think it's a company, all these different things. But at the end of the day, Bitcoin is money. And people we've lived in a world where we haven't had real money since probably anyone in this room has been alive. And people
I
don't
still
know.
don't have real money. When does that come?
Well,
It's regional. It depends on the country.
but
Okay.
If I can interject here, so the
Oh, by the way, real quick, let me
eight.
reset, Matt.
Go ahead, yeah.
Let me let you in.
Sure, Chad.
Matt is a valued contributor to the space. I've been on spaces with him. Again, I'm with my friend Big Jonas, Tom Dwan, hanging out in the back room. A buddy of mine, Mike Alfred, Magoo. These are all smart folks. This is episode 1 of Macro Chat with Smart People. I'm gonna do this weekly. I'm like, wait a minute. I don't know why I haven't done this before. I know so many smart people. I don't have to do anything. I'm just sitting here. It's brilliant. So, okay, your turn. I'm done. Go ahead.
So it's not my work. It's actually an excellent piece by Alex Gladstein. But if you look at the countries with the highest per capita Bitcoin adoption and crypto adoption, but Bitcoin adoption, eight of those countries are on the top 10 list for IMF funds, for IMF monetary relief. So what does that tell you? So whether the people realize it or not, Bitcoin adoption is highest where your local currency, your local money is the weakest. Like that's incredibly bullish. That's incredibly interesting. And countries like you've named some of them, Argentina, Nigeria, Iran, Turkey. I mean, on and on and on. Not tiny countries too. Nigeria is going to flip the U.S. in population, and they have one of the youngest populations by 2050. Turkey is no slouch themselves. So, I mean, yeah, it depends. It's regional. If you're in the U.S., yes, you enjoy a strong dollar relatively, but the vast majority of the planet does not live within the U.S. borders.
And at the end of the day, we all like, no one can guarantee you that the US, or I mean, that Bitcoin is going to go up in value, but everyone on here can probably guarantee you that the US dollar is going down in value to actual relative things, right? And so this is a dichotomy that we live in, where the underlying money supply, it doesn't matter if you are in Argentina using the peso, whether you're in Venezuela using the bolivar, whether you're in Costa Rica using the colone, whether you're in Mexico using the peso, wherever you are in the world, the currency is dog shit. Because, and some are more dog shit than the other, is because we moved away from hard money principles a long time ago. We moved to fractional reserve banking. Then we went directly to a fiat standard, and that's why people don't understand or fundamentally understand the value proposition of Bitcoin, is because they've lived in a world their entire life where they've been using money that had literally no principles behind it. It's all a belief system. Like the US dollar is a belief system because someone says it has value, because whether the United States has the ability to print more of it or tax its own citizens, or it has a massive aircraft carrier fleet that it could just blow up everyone else on the planet. But fundamentally, it's all coming down to a belief system. And that's how you see when countries finally go into a hyperinflationary period, whether you look at Venezuela, whether you look at Cuba, whether you look at Turkey, whether you look at Lebanon, at the end of the day, it never comes down to an eventuality of a math equation of like, wow, they've printed too much money and then it just goes. No, that happens, and then all of a sudden there's a snap of a finger where that belief goes out the window, and that's when hyperinflation starts to kick in. right? Because at the end of the day, there's no fundamentals backing these currencies. But that's because we've been living in this quote unquote fiat world for quite some time now. But when you actually look a lot further back in human history and you look at the money that other civilizations actually used, whether it was bullion, whether it was coinage, whether it was seashells, whether it was massive granite rocks, whatever it was, is they had some hard money principle associated to those things, like these big
Then why
granite.
isn't that a bullish case for gold or more precious metal
Okay.
assets?
So the reason why it's not a bullish case for gold, like there is an eventuality where gold has some use case because it's tangible and in your hands. But if you're bullish on human civilization, and we've moved away from quote
What
unquote.
does that mean? What does that mean? If I'm bullish on human civilization, what does
What
So
that
am
let
mean?
I
me
anti-meteor? What
explain.
does that
Let me
mean?
explain. So do you
I
believe
hope
that
we're
the
all bullish. I hope we're all bullish on human
this is what I
civilization.
mean. This is what I mean. So at the end of the day, we're moving out of an analog world into a very digital world. Gold had defeated itself because we moved human civilization to a digital realm. And you can't transact in gold in a trustless manner that's even remotely efficient in a digital age. That's what gold's underdoing was, is because you couldn't virtualize it and move it in a trustless fashion. Like you could put gold on a blockchain, but there's no point in that because you have a centralized entity. It's like, well, why even bother doing that? And so ultimately, the reason why I say if you're bullish on human civilization, meaning we're not going to get hit with an asteroid, we're not going to get hit with a solar flare, and human civilization is going to continue on the trajectory that's been going in terms of advancement and digitalization. That's what I mean by if you're bullish on human civilization. And so when you have that, you have Bitcoin that literally emits hard money principles that gold have as well. Gold has some of the same principles, some of them not so much, but Bitcoin has those principles too. And those aren't just made up principles. Those are principles that are basically cemented by the network. The network makes those principles a reality, and how strong that network is and how strong the defense of that network is really important, right? And so that's what's actually keeping these principles into the network, which basically give Bitcoin those hard money principles. And then it literally fundamentally attracts humans to it. Humans were attracted to gold for more than just because it's shiny. They were attracted to gold originally because they could use it in different fashions. They could break it up. They could do all these different things with gold. And it was somewhat rare, and it was tarnish proof, and it actually lasted, and all these other things. Those are reasons why people started using gold. And the reason, like, there's plenty other things through human history that they use too that emit some of those same characteristics. And Bitcoin is literally the perfectly designed hard money principles in a digital era.
Can I
So
step
there,
in, reset real quick, quick? Mr. Alfred, you're gonna leave soon. I wanted to offer a heartfelt thank you for offering your thoughts. I hope you will join us. I think I might do this kind of a weekly chat. Did you want to say anything before you step away?
Yeah, I just want to say thank you to everybody who's on here, Magoo and Tom and the folks that were here earlier. Obviously, Matt as well. Thank you, Jonas. This was an incredible conversation. I think people need to be very careful about leaving their money on KuCoin, Crypto.com, Binance, Nexo, Gate.io. It's not a joke, right? It's not a test. If these companies survive, great. Like nobody wants them to go down, but they're behaving, in my view, in a very nefarious way. Binance in particular has no CFO, they have no auditor, they have no domicile, they have no board of directors. They're operating as a giant unregulated shadow bank. They are commingling all the capital that you put in there. And while they may have most of the capital you think they have right now, when you go to ask for it in a year, they may not have it in the same denomination that you originally deposited. And certainly if they get indicted with criminal indictments by the DOJ over the next few months, which seems quite likely at this point, given what's going on with FTX and their involvement in that. So I just want to warn people not to say, hey, let's all pull our hair out and run out of the building because it's on fire necessarily right this moment. But if you're not aware that there are risks in Binance, then shame on you if you lose all of your capital over the next year. So don't let that be you.
I feel super depressed. Tell us something good. Give us some like good vibes here.
Buy some Bitcoin between here and 78.50 if we get there. Put it in cold storage, hold it for 5 years,
Yep.
and then I will pay for your dinner at Masa in New York if you're successful in buying a Bitcoin and putting it in cold storage.
Mike, what's your favorite music? Give us something. Give us something.
I love Led Zeppelin, Houses of the Holy. I know this is an unpopular opinion. A lot of people like 1 through 4, but I think Houses of the Holy is an exceptional album. Rain Song in particular is incredible. It's like a symphony. So anyway, I would highly recommend, focusing on Houses of the Holy when you review Led Zeppelin's work.
I ask you that because we need to humanize each other. We're not just people arguing for one side or another. Like we need to just avoid the urge to pit ourselves as combatants. Let's just all be.
Love you guys, and I want crypto to win in the long run. I think Bitcoin is going to be fine, but I want the crypto space to be built on better foundations in the future, not fraudulent criminal organizations that are based offshore. So if that makes me, less human or whatever, that's fine. If I'm a robo cop and I'm actually able to save you from losing all your money in Celsius or BlockFi, I'd gladly give up my humanity in that context to save you money. But I hear your point. Love all you guys. I'll let you guys finish the conversation. Have a great night.
Take care, bro. Hey, I wanted to bring in a new voice. Someone who's joined my spaces before, Avid. Did you have any kind of thoughts here?
Yeah, well, I mean, can't top Magoo when we're talking about macro and some of these other topics. I just wanted to quickly flash back. We were talking about Coinbase. Someone was talking about valuations. Are they low? One of the things I like to put in perspective here is a lot of Coinbase's revenue, I'd say like a majority of it, comes from trading shitcoins. So given what's happened with FTX and all the pressure to regulate these securities, we'll call them, if the hammer does come down, a significant amount of their future revenues could be impacted by that. So I think you got to take that into perspective when people say like, oh, well, they made all this money last cycle, they're going to be super lucrative in the future. Well, that may be the case. I think there's real risks around what's there to be traded because a lot of their business model, again, is trading shitcoins. And then the other thing I'd say is like, I don't disagree with anything Mike Alfred said about Binance and stuff, but I think Tether's like big fucking elephant in the room. Magoo was talking about that earlier. Totally agree with him on that. I think Tether's super sus. And there's also other more sketchy exchanges, in my opinion, like crypto.com, which, I don't have evidence of this, but I suspect that they were putting funds in Luna and Anchor Protocol to generate yield. They had a yield product that paid out like 15% or something like that. And then when Luna and Anchor went bust, they suddenly stopped paying. So
I was told it was risk-free.
Yeah, I just think that and I'm not saying Binance doesn't have risks. I think that there was a lot of good talk around that, but I think there's also these other super sketchy exchanges that haven't been around for that long and they haven't demonstrated like that they can run the business. Like Binance has been around for a while, so just wanted to throw that in there. But of course, I'd love to listen to Magoo spit some more facts on the macro topic.
One more. Let me add one more. Wabi,
Chance.
you want to jump in? You go, Jonas. Hang on one moment. Wabi, what do you got? I get one. I'm trying to add a little more spice. I'm cooking. I'm here in the kitchen. I'm throwing a little more spice. King Wabi, you want to jump in? You got anything real quick?
I think he's still connecting.
I don't even see anyone up on stage.
Yeah, he's not up yet.
Chance.
Yo, Jonas is the other boss. By the way, let's quick reset. Big Jonas, who introduced me, Big Chads, to crypto. He's a good dude, longtime trader. I'm honored to have him. What would you like to say? Go ahead, good sir.
Couple thoughts about the exchanges. Coinbase, any OGs out there that used to trade on GDAX back in the day? Coinbase was my original on-ramp to crypto. Okay, when there was Bitcoin, Ethereum, and Litecoin were the only assets that were available on Coinbase. I learned to trade Bitcoin. I learned to get wrecked on Bitcoin, liquidated, and I would use that as my proxy for many years, 16, 17, 18, 2019. And then things began to change. They began to add altcoins to their portfolio. It was mentioned that so much of their revenue, right, is altcoin fees. How many of us are aware of the fees, right? Market maker, market taker, limit orders versus market orders, such a big difference in fees. And for a while, they were a casino flood of money coming in. People didn't care what the fees were. They wanted just to market buy or market sell, and Coinbase would find a way to take a significant chunk of that. So you fast forward to right now, where there's so little liquidity, so little actual retail trading, and of course their fees are so low. In the meantime, they built out this very large infrastructure. How many times did the Coinbase ecosystem crash, right? During high times of Bitcoin volatility, everybody freaking out, which they justly should, right? So they built up their infrastructure to a level of usage that currently isn't being needed right now in this current space. So they built out for a Bitcoin crypto ecosystem that we might not even see till 2025, 2026. And it was floated the possibility, can they even survive given their stock price? Now, of course, how many times in Bitcoin and crypto's history, right? How many mega bounces have we seen in these bearish times? The 2018 bear market, right? Produced significant 100%, 70%, 60% Bitcoin pumps. Can you imagine Bitcoin pumping right now to $32,000? Right, but that happened like 4 or 5 times
It's
in
not
the
happening
previous
right
bear
now.
market.
No, it's not
Exactly.
happening right now. It's not happening.
Exactly. So this is very different than what we've seen in the past. Now, we can cycleize this based on the one known event that happens every 4 years in Bitcoin, which is the halving. And we have history that says, well, there's a bottoming kind of before, and then right after there could be another dip, but more or less the bottomings are within
What if it was all one big cycle?
What if it was? Well, what if we just finished our wave 5 of the super cycle,
Can I
and
jump
we are
in?
in a protracted new bear market? Well, there's always a B wave, right? There's always a counter rally, right? That brings in new money and gets people excited, only to crush their dreams once again. But maybe we're still early for that. And if is the question, is Max Payne still to the downside, or is Max Payne pumping to the upside? And really stressing out people that feel like they don't want to, they want to stay in the sidelines. All right. And then the overall emphasis of all that is, what's the on ramp that people can truly be reliable with,
Yep.
to bring fiat and convert it to crypto, and then try and do a actual trade, right? Try and catch a bounce, try and catch a bottoming, and not freak out or to feel uncomfortable that maybe they do a good trade, but their funds will get fucked because
Hold on, Magoo.
the passage to get them onto the crypto ecosystem is fraught still with tremendous perils. And that's why you can't find a bottom in this market until a lot of this stuff is wrung out.
Quick reset at Big Cheds. I'm with Bichonis. I'm with Magoo. I'm with Matt. I'm with King Wabi. I'm with Avid. Man, it's great to be here, folks. It's December 17th. If you're on YouTube, check out Ched's Trading. Anyway, I want to bring in a new speaker. It's just like a casual, weekend conversation. I'm suddenly realizing I know a lot of smart people, and if I bring them together, maybe we can have a interesting conversation. Wabi, did you have any thoughts? I just wanted to kind of spice it up a little bit. You were patient. What did you want to say, King Wabi?
Yeah, it's great to be here, brother. I saw you on the space earlier, tuned in a little bit, but then got some tacos at Moe's. I feel great, man. How are you guys doing today? Magoo, what's up, Magoo? It's been a couple of months. I've missed you. I see Avid here. He goes on the spaces sometimes. I see Matt here. He's been a long time friend of mine for about a year. Well, my thoughts, man, as far as Tether goes, I know Naka had mentioned that there was someone that was trying to depeg Tether, but the thing is, like, that one address, even though he's using like over $1 billion to try to do it, like, he's losing money as that whole thing is trying to unwind. But I don't really think anything's going to happen to Tether for like at least another 5+ years, to be honest. I kind of consider Bitfinex, the people behind Tether, as kind of like the mafia of the entire industry. But, I'm not that knowledgeable to, go on a rant about it. I just know that they've been a pretty big, important player for a number of cycles now. And I know Jonas, what's up, Jonas? It's been a while since I've seen you up here. As far as Max Payne, my opinion is essentially taking interest rates back to 2008 levels, which I believe is about a little over 5%, keeping them there for at least one quarter, and essentially round tripping crypto back to 2019 levels.
Years, because what's happening now is just low volume, low liquidity. This is what happens every year as we approach the holidays into Christmas, and you're going to see liquidity dry up, that week after Christmas and pre-New Year's. But once we get into 2023, which is like 2 weeks away, I think we're going to see really what this economy, where this market truly is. And I think the volatility is going to be epic. Now, as traders, we like that. We look to position ourselves to take advantage of these huge swings. But I think that's going to tell a lot about where we truly are and where the market thinks we are. And in that, I think there could be a good opportunity when the dust settles and when this potential big capitulation event, which I think people have been expecting all year that hasn't happened, may end up being, a true event.
Go ahead and jump in, Wabi.
Yeah, I'd just like to raise my hand, not only to show respect, for the people up on stage, but also to wait patiently. But Big Jonas, I want to add something to what you said. Lately, I've been brushing up on my macro skills. I want to be like Matt. He's a very smart individual. Pleasure to be here on the same stage. One thing that I've been tracking is the Harpex shipping index, which essentially it tracks prices in the charter market for container ships. And if you look at that chart, it's headed straight down back to the 2018 levels. And also, when we take into account the Fed pivot, this bear market reminds me a lot of the dot-com bubble. And if we look back on prior rate cut cycles, with quote unquote pivots, that actually occurred in early 2001. And if you look at the chart in 2001, it didn't necessarily have those aggressive bounces that you saw after the peak. I mean, if you look at the price action this year, the S&P and even the Dow Jones put in multiple 20+% rallies, sometimes even outperforming BTC. So there's something to be said about that. But at the current moment, I relate to something that Cheds has said last month in regards to certain tweets put out at the current moment. Those aren't things that you see at market tops. You don't see people talking about, oh, I'm going to withdraw everything from exchanges and put it into fiat. I don't even want to hold BTC. I don't even want to hold stable coins. I just want to put fiat back into my bank account. Those aren't things that you see at market tops. These are things that you see when we're approaching extremities. So
it's pretty bad, right?
Yeah. I remember, Cheds. You're one of the only people that I actually have on notifications, and
I feel bad for you, bro. I put out all sorts of stuff.
it's all good, man. You're an individual that puts out quick and concise information for the individuals that don't necessarily have the luxury or the patience to stare at a chart consistently. So yeah, good to be here, man.
Thank you.
Good to be here.
How I try to approach it. Thank you. Appreciate that,
Yeah.
bro.
Yeah, Jonas, going back to GDAX, so one thing I wanted to say, that one other reason I'm bearish, I was talking about how, a big part of their current business, or their, recent business, a lot of their fees came from shitcoins. I'm just, I guess, disappointed that they haven't really invested in the Bitcoin ecosystem, right? Like, you see exchanges like Kraken, which is integrated Lightning Network. And if you rewind back to 2018, Coinbase wasn't even batching transactions. They were straight up spamming the network. So, you asked the question, how are people going to get in? It's that's a good question. But, even though Coinbase maybe is the most regulated US exchange, I don't know, maybe Gemini is more regulated because they have the New York bit license or whatever. I just don't, just mentally, they haven't really been the greatest actors in the space. And even though they got all this money and went public, they haven't really pushed the envelope. You log into their website and it's literally marketing you the most recent random token. That's just complete bullshit.
So let me.
Who got rich off
that's
the
Brian
Coinbase
Armstrong,
stock, right?
So ultimately,
Brian Armstrong and all the insiders.
So
Exactly.
ultimately, yeah. ultimately, even Coinbase. So a lot of people, especially retail, they only see Coinbase in the light that they log in and that they think that's what Coinbase is. Coinbase has been divesting a lot of their exposure and their revenue from moving it away from retail and moving it towards institutions. So, yes, in previous times, all the money that all of these exchanges have made are from the shitcoin casino trading venue, quote unquote, avenue. That's where all of them made their money from. This is going to, a lot of people won't like what I'm about to say, but crypto being a retail driven phenomenon is dead. That is in the past, and all of the money that is going to be made from these exchanges are not going to be from retail. It's going to be from institutions, and not only that, the price action is only going to be dictated by institutions moving forward.
So
Retail
volatility trends down. Volatility trends down.
over time, yes, long horizon time, it trends down for certain assets. Obviously, some assets that are still scams or they're going to be more volatile because, well, going to zero is going to be pretty volatile. But at the end of the day, most of the revenue going forward is going to be from institutions, and you've seen Coinbase. If you want to look specifically at Coinbase is moving like literally at the beginning of this cycle, like 90% of their trading volume was coming from retail. But now I think it's down to something like 60 or just under 60%. And they've been focusing a lot on, I don't know if you probably don't know, but there's a product called Coinbase Prime, where it's mostly institutional driven, and it's a completely different suite of products, completely different legal terms, completely different everything.
What's
Because
different? What's the biggest difference? TLDR it.
well, the biggest
And
difference is
fully backed insurance.
well, no, it not only is it backed by insurance, but the TLDR. If you're a retail Coinbase customer, you're an unsecured unsecured
Bingo.
debtor when you deposit your money. Like you literally put in one Bitcoin, you have literally just signed away legally your rights that one Bitcoin. And
Is that same
Coinbase
on Prime? Is that same on Prime or?
no, it's there. No, it's not. It's
No, that's what we're
institutional.
saying. Yeah,
It's so
100%
so
insured.
yeah. It's not only is it insured,
Fuck
but
is
it's
that? What is that? So what is that?
Magu's about to cover it.
yeah. Let me cover it. And so ultimately, institutions don't want to be dumb, like don't want to be dumb. Retail's putting their money on Coinbase, and it's not your money. It's literally when you go to a bank and you put your money into a bank, you're signing your rights away from this money. Institutions aren't dumb, and so Coinbase is offering a different product altogether. If you put your money in Coinbase Prime, or they call it Coinbase Vaults as well, and Coinbase goes under, it's still those institutions' money. It's not on
So no,
Coinbase's balance sheet.
so Magu, how does that square with like the whole like 50% on bonds or whatever? Like that makes sense to me because I'm a chart nerd.
So the whole reason why Coinbase is trading at or their bonds are trading at 50% or 50 cents on the dollar is because there's nothing stopping them from putting more senior notes on top of you, like in terms of
What's a
debt.
senior note? Explain a senior note.
So it's who has liquidity preference when it comes to basically an insolvency or a Chapter 11. Who gets paid back
Bondholders.
first? Yes. And so, like, if you have that debt, there's nothing stopping Coinbase from putting people ahead of you in that queue if they go under. So that's why the debt is trading at 50
Ahead of
cents.
retail. You say ahead of retail or ahead of whom? Ahead of
Ahead
whom?
of retail, yeah.
No, no,
Ahead
no.
of
So
Okay.
not
anyone who
only
has a Bitcoin on their exchange. The bondholders get paid out before you ever see a dime back.
yeah, so not only that, but what I'm saying is why the debt is even trading at 50 cents is because they can issue more debt on top of you and give them liquidity preference in the easiest way I can say it.
I see.
And
They
so
can
you
expand.
can be so you can, even the bondholders can get rug pulled by other bondholders that are going to be put on top of them with
They're getting
liquidity
diluted,
preferences.
yeah.
Yeah,
Yeah,
exactly.
to raise money. So what Coinbase has been doing to raise money, they haven't been issuing more shares. They've just been issuing more bonds, like Magoo's saying. That's why the original bondholders are pissed, and their bonds right now are trading at 50 cents or worse on the dollar because they keep diluting the bondholders.
Then no one's made money in the Coinbase equity except Brian Armstrong and the people that had
Gold.
shares
Yeah, and the Goldman
before
underwriters of the
the
IPO.
IPO, right? The underwriters and stuff. So
Oh yeah, 100%. That why do you think that Coinbase chose to go their IPO directly to market and not go through an investment bank? Is so they could dump instantaneously on
exactly.
retail, and why there is no stipulations on liquidity lockup. So usually when you go into an IPO offering that's done with an investment bank, there's lots of stipulations for investors not being able to dump their shares for a certain amount of period after they go public so that the investment bank can make their money first. But when you go directly to market like Coinbase did, there was none of that. And where insiders could sell instantaneously. And that's why you've seen the price went from 400 to literally $30.
As
It's
well
just,
as the price of Bitcoin topped pretty much at the Coinbase
well,
IPO.
yeah, because that was all speculative in nature, right? Like the reason why Bitcoin topped was because Coinbase was IPOing. Like it's back in 2000.
Nope. It was Matt Damon.
Well, Matt
that
Damon
was a whole
and
year
Kevin
later.
O'Leary. But
Yeah,
that's the, remember 2017, guys. Remember
Magoo, it's Calvin O'Leary. Get it right.
sorry,
yeah,
Calvin
right.
O'Leary. But let's look back to 2017 with the CME launching futures. Was it a
Same week.
coincidence
Not
as
top.
well when
Not
Bitcoin
top.
The
topped
top.
as well?
Yep.
Yeah, it
Right?
was not top. And
Yeah.
just a quick point about CME futures. Just from a technical standpoint, I'm a follower of the BTC exclamation point chart on TradingView, which is the CME futures chart. And the point that was just brought up, 2017, the launch of this particular product literally marked like Bitcoin 20K. There was a gap, the 4-hour chart at 13.8 that was open for a full year. And when we were at $3,000 Bitcoin, I'm like, oh, there's no way this gap at 13.8 will ever be filled. And what, 7-8 months later, Bitcoin shot to 14K. It filled that particular
Don't we have
gap.
a gap at 10K?
And I was amazed, and I will always be a believer that the gaps in this chart get filled. There's not only a gap at 10K, there's a gap at like 9K, at 7K, and
The gap
there's
in your
even
teeth. There's
a
a gap
gap
in your
at
teeth.
30,
Gap in your mouth.
in the 3K area as well. Now, there's also gaps above the current price at 25. I think there's one at 32. But the point is that there is, from a technical standpoint, we talked about like there's nothing at 16K or 17K
Correct.
historically that Bitcoin, other than a couple wheels in 2020, from a historic point, from a VPVR standpoint, shows that there's any meaningful stability, liquidity, or support in this
Demand. Just look
area,
for the word demand. Look for the word demand.
or demand. So that's the word. So where is the demand? It's like,
12K.
okay, are we kind of now? This is the question we kind of talked a lot about this evening, is about what is the track for Bitcoin. We I think there's agreement that can we rip the Band-Aid off, right? If we had some big crash tomorrow where Bitcoin in a 24 or 48 hour event can drop down to 12 or 10K and then have a V bottom with epic volume behind it, I think the market would feel more comfortable as that being put in a local bottom. But the grind down,
No,
which I think is more of a Max Payne probability, is probably where we're headed, where we have these false little pumps here and there, and we continue to grind lower. And a lot of that has to do with people just not wanting to let go of the dream, right? They want to let go of the possibility that this has kind of changed their lives, and that they remember what their accounts used to say, and the wealth they had for a moment, on paper, on their phone, and the baller status that became. But it all was not just Bitcoin. It was the ecosystem that provided all of it. And you can't just, start that up again tomorrow. It took years to get that roller coaster pumping enough to create the event that we had seen in 2021, and we might not see that again for such a long time. The market can be insolvent and irrational, the market can be far longer irrational than the average investor
So
can remain solvent
what
and patient.
one of the someone told me something like maybe 4 weeks ago now, I think. Yeah, I guess it was 4 weeks ago. He's actually in the audience. Rock Mafia was telling me that in Miami, in LA, the bar scenes that people were actually like promoting like ape ape NFTs inside of these nightclubs, of promoting them and using them and like literally trying to sell them in the club, because there's a lot of quote unquote like backdoor deals with these NFTs, and I literally didn't believe it. And so I flew to Miami and actually went to some of these clubs and like seeing what they were doing with these NFTs in these clubs, and it's just like they're like living in a shadow of what like these NFTs were at the peak. And like there's so many people that hold some of these NFTs that are trying to sell them to you. Like, it is unbelievable. It's hilarious. Like you go into a party, and there's like literally like projectors of like fucking bored apes for sale at the club, and they're using these like as marketing things. It's like it's like I couldn't
That's so
believe it.
desperate.
Like someone told me I didn't believe it, so I went there and it was true. I was like literally flabbergasted. I couldn't believe that it was true.
Well, it's an
Magoo,
example of the excesses
Magoo,
that we've just been through in this market, and that excess has to be flushed out, and is still worth billions and billions of dollars.
I'm gonna. You inspired me, Magoo. I'm gonna take the train down into NYC. I want to see for myself.
I literally didn't believe it, and so I
Magoo,
stopped off in Miami, and
Magoo,
I literally crapped my pants when I seen this.
Magoo. So Magoo, was that you who rubbed the Solana sock on my chest during the Solana store event in Miami? Was it
That wasn't
also
me.
was it also you who was in the bathroom during the event saying, "This is what I'm talking about. That's how you throw a Web3 party. Let's go."
Bro, I'm jacked to the tits.
It's like, Mugu, I had a question for you, brother. You brought up Coinbase Prime and institutions and all that stuff. Do you think a model like that could be used, like for the next year and moving forward? Sort of like, if I'm retail and I want to use Kraken or Coinbase or Binance, if they survive, which I think they will, do you think there has to be some sort of like institutionary involvement to make sure nothing shady is going on? Because
Yeah,
that seems
we
like
just
a
went through
good
a full
model.
cycle where we literally had an unregulated market, and look what all these fucking morons did with it. They literally created like Ponzonomics. They created like criminal activity. Look at FTX. Do you want that to repeat again? Like I don't.
Yeah, I wouldn't just blindly follow the Wabi where the institutions are putting their money. Like everyone from, Sequoia to Tiger Global to Larry Fink and BlackRock had money in FTX. None of them were smarter than each other. They were just aping in because someone else
So
before them aped in.
let me spread a little bit of alpha here when it comes to institutions. A lot of the institutions that people were like, oh, they're here, they're here. Like you have the VCs, you have like the hedge funds, you have some of these other institutions. Those are like the dumb institutions. Like, and I'll just say dumb for like not wanting to go into like a 10-minute speech of like why they're dumb. But ultimately, the people that got into this cycle were people that take the most risk, like the riskiest hedge funds, the riskiest VCs who are already the riskiest and some of the dumbest
Fortune
money.
favors the brave.
No, it does, but obviously, unfortunately, there was no Mel Gibson in this cycle, and they all got absolutely fucking steamrolled, right? And when it comes down to like the institutions that everyone's like, oh, the institutions are coming. It's like fucking Paul Revere. The institutions are coming. The institutions are coming. They never actually fucking came. The ones that actually mattered. Ones that are like pension funds, annuities, sovereign wealth funds, like the ones that actually have capital. Like you think like Sequoia and Tiger Global that they have money, they are poor compared to the real institutions that you want to come in. And these real institutions won't come in until it's actually regulated. These institutions would rather lose out on all the opportunity and take a zero on not being able to get in than taking an investment and getting rug pulled by FTX.
So
Do you know?
Bitcoin is not ready for prime time yet, is what you're saying.
No, or they're just literally building their own, and they don't want any exposure to any of these sketchy third party exchanges
so
like
so
Fidelity.
next cycle you're going to be buying your Bitcoin probably off fucking Goldman Sachs, JP Morgan, Fidelity, Franklin Templeton, some of these asset managers that.
Yep. I mean, you already buy half of this room probably already buys their Bitcoin from Citadel. They just don't know it's owned by Robinhood.
That too.
Yo, Magoo, I got a question to follow up on the Coinbase Prime thing, and given that Cheds is a trader and he sounded a little stressed out when you were talking about how risky it was, is there any exchange that has a setup to where not for necessarily institutions, but for people where they can not be unsecured creditors? Where like
Yeah,
if you put
so
your
I believe well, this is very specific because a lot of exchanges, even Kraken doesn't want you to hold your money on Kraken because they know it's not only a liability for them, it's a liability for you. And so they're not set up to actually have a situation, I'll call it a situation, where your stuff is secure, right? Because at the end of the day, legally, um, at the end of the day, if you want to hold your money at an institution, you need to make sure that it's segregated on blockchain and that it's insured and you're not a debtor, and if they go bankrupt it's still yours. So things like trusts, right? So you see a lot of people, they structure their custody business in the United States as a trust. And what that means is that even if the underlying company that manages said trust goes bankrupt, those are not assets on their balance sheet, and those are yours even if they go bankrupt. And it's not like FTX where you're an unsecured creditor. The problem that for retail is that's a very costly mechanism to actually have and operate, and it costs a lot of money to ensure that you have it. And so like this is why I'm like not super happy like for retail investors, is because retail investors by the very definition of retail don't have a lot of money, and they can't afford some of these prime brokerages and these custody solutions that institutions can, and they're stuck putting their shit on Coinbase as an unsecured debtor, or putting your shit on Kraken and being an unsecured debtor. Like for most retail, this is sad to say, but if you're a retail, the best thing that you can do is not hold your shit on any exchange, because you're unsecured. Like you're an unsecured debtor. Like if you want to trade, like if you want to make a trade, move your funds on and move your funds off. Like especially like
Yep.
at the end of the day, if you can get pretty quick finality of doing some things, right? And like it's even better if you're doing it with derivatives, because all you have to do is have essentially either you're doing puts or you're doing calls or whatever type of derivatives you're doing, and you have to you buy said calls and that's it, and you have the premium, and all you have to worry about is, well, if that whole fucking exchange goes down. I don't know how you trade,
But
Chad.
your Bitcoin's not at risk. Yeah.
Yeah, it comes down
right.
to like what you're trading, but that's the sad part about retail, is that there is not really going to be a good solution for retail moving forward. It's the same thing like a bank, right? Like if you put your money in a bank, the only reason why it's secured is through FDIC insurance, right? Which is like just a bigger balance sheet waiting in the wings to support an insolvent bank, right? And it's only up to $200,000. Like if you put $1 million into a bank and it goes bankrupt, you're not getting that full $1 million back at all,
Well,
right? And so,
it's
Well,
two fifty thousand, but that's not the point. Like most of that isn't really an issue in the banking system right now. FDIC was an issue in 2009 and 10 when those banks, were failing, but it's not one of those things that is really a big player in the market. The notion of like only have a $250,000 in this bank because it could fail, and I think
yeah,
people feel
but
very
no,
comfortable
no,
having
two
millions
per
in some of the big
person,
banks in
but
America.
times that by how many customers? Per person, sure, but times that by how many customers? And if it's stocks or equities or assets, that's 500,000. That's 500,000 per customer.
Yeah,
250 for cash,
Magoo,
500 for assets.
the issue I have is, I agree with what you're saying. Like if you buy options, like that your exposure is limited because you're just buying the option. You don't have to own the underlying asset. But the thing is like there's not really any like U.S. customers. I mean, we don't have those options available to us, right? Like you'd have to go to something like Binance or some sketchy offshore exchange, because
What
it's
about
not
you
like
got the
Coinbase will sell that
CME?
shit.
The CME is 5 years old now.
Yeah, but the
You got the
CME
CME.
minimums are massive. I think they are launching
Oh,
like minis,
are they?
but still, like that's not something like a regular retail does. A regular retail person doesn't go to the fucking CME to trade futures. Do you know what the minimums are to trade Bitcoin futures on the CME? Like this is the problem with this is the whole problem with like retail versus institutionals. Like institutionals have enough money that they can actually pay for these products. Like I'll give you a few dollar numbers when what I'm talking about here. To be a customer at let's call it like let's look at a couple different custody solutions that exist out there. You have Gemini, one of the oldest ones, and they charge basically basis points on holding your underlying assets, and you could be paying up to 40 bips per annum a year to basically store your shit there in a very secure fashion, in a legal fashion as well, even if they go under. Then you go look at people like BitGo, who's the biggest custodian in the entire space, and you're paying literally thousands of dollars a month just to hold your shit there. Like it, because that's how much money it actually costs operationally to be able to service you away, not only operationally but legally in a secure manner. And that's why this is very like super slanted to institutions, because a retail's not going to be spending $3,000 a month at BitGo to have their shit secure, right? They just don't have that money, right? And so they're stuck throwing it on Coinbase as an unsecured debtor. I'm thinking it's safe, but then they're super exposed to realistically Coinbase going under. Whereas Coinbase Prime, if you're paying the bips or whatever it is, I can't really talk about Coinbase Prime specifically for cost, but at the end of the day, you're going to be paying a significant amount of money to hold your assets in Coinbase Prime. Retail can't do that. They don't have the money, right? And it's just kind of like an operational thing and also like a legal thing, to where retail is going to be left holding the fucking bag. And that's why retail really needs to be holding on to their own keys. But this is really troublesome for quote unquote traders, because you have to have some capital on some exchange if you want to be trading, whether you're doing margin trading, collateral posted, or whether you're doing buying puts or buying calls, or even theoretically writing calls, right? Then you
And
really
exchanges
need.
don't want that. Exchanges don't want people to hold their own coin,
No,
right?
because it's liabilities, right? It's liabilities for both sides. It's liabilities for them because that means that they theoretically have to pay you back because you that's your stuff, and also the liability for people that are doing it, because like you have no recourse if that company goes bankrupt, because those
So it's
decisions.
the question about investment banks versus banks, right? And like the big thing about what created the GFC, right, was about banks became investment banks, and then they over leveraged and they got screwed because they were overexposed.
So
This is the
that
same thing. How can we have faith in exchanges where they're also acting as
so you
investment
don't you
banks at the same
can't
time?
you fundamentally can't, and this is why you've heard certain regulatory people, and I say that they want to make sure that custodians and exchanges are not the same thing, meaning that custodians are not the same things as like exchanges or futures or whatever. They want to legally separate those, so those quote unquote other, there's basically walls between them, so they know that you're not trading against your customers, you're not using your customers funds. Like there's a reason, even in like the normal TradFi universe, where you have separate custodians and then you have prime brokers. Like you have a completely separation of concerns when it comes to those things. But right now, crypto, it's like you go to one firm and they're like, oh, we'll offer you everything. We'll offer you custody, we'll offer you futures, we'll offer you derivatives, we'll offer you spot trading, we offer you yield, yada yada yada. It's just this big melting pool of just like eventual fucking fraud. And because there needs to be regulation to separate those things. Like right now, in the current dichotomy of where we are in lack of regulation, if I was a retail investor, I wouldn't be putting my money on any fucking exchange. Like the only people that should have any resemblance of any type of confidence that they're safe are institutions that are literally paying out their ass for that type of security. And that type of security is you're holding your assets in probably a company that's a trust that has segregated wallet addresses itself, and that even if that company goes bankrupt, you're fine because it's a trust. And then they can't use those assets to get swept up in a Chapter 11 to pay creditors. That's the whole fucking thing here. And the only people that can even claim that are probably Gemini Custody, Coinbase Prime, BitGo, Anchorage, and there's a couple other smaller ones, but those are the main ones that offer
But
that
not
type of service.
GBTC.
No, GBTC as well. GBTC is a trust.
Yeah.
And
look how expensive it
DCG
is to
could go
run that.
bankrupt,
Yeah.
and GBTC is fine because the way how it's legally shut up.
Unless they have to liquidate it to pay off.
No, they can't. They can't. That's the whole misnomer that DCG can try to liquidate it because it's a completely separate entity as a trust. And they can't just literally just liquidate it because they
why is the
need it.
discount right now like 50%?
So the discount is for two reasons. One is because they charge an annual fee on the underlying value of the Bitcoin in there and not the underlying price of GBTC. So realistically, the fees are like per annum. So you have
you're
like
always paying more expensive.
So you're always
price.
paying more to hold it, and then two, you have essentially like probably the backwardation of like where the price of Bitcoin is actually going. And don't forget, the reason why it's so negative is because DCG is in such financial trouble, and the number one holder of GBTC is DCG, and so they're out to the market having to sell it because they need that liquidity and that money. And there's just no buyer. So they're forced to sell into an illiquid market.
Do you think there's going to be a point of value? Just like, I mean, I know it's not like the normal stock out there, but it's an on-ramp. You don't have to buy Bitcoin to own a piece of, have your skin in the game in the Bitcoin market to own GBTC. Anybody can buy it on the OTC and so is there a point where it can be a good trade again?
So the only time it will become a good trade again is when the DCG issue is solved and when Bitcoin has bottomed. That's when it's a good trade. So like if you time it perfectly and you literally buy GBTC on the very tick of Bitcoin's bottom, then not only are you eventually going to get the workup in the negative NAV, so let's say it's 50%, you're going to make that 50%, plus you're going to make the money that Bitcoin is going up as well. Like Grayscale's GBTC will eventually be converted to an ETF. The question is when.
There's so many different ways you could screw that trade up, though. There's no guarantee that DCG, especially after the events of 2022, there's no guarantee that they're the first ETF that even gets approved.
Yeah, exactly. That's what I mean.
They could easily get leapfrogged by some of the
So
older.
let's say
players.
you buy it today, right? And you're like, oh, I'm getting a deal. I'm buying my Bitcoin at like 50% off. So I'm buying Bitcoin here like at like 8K or whatever it is for the NAV value. And then Bitcoin goes actually down to fucking 8K. And then fucking DCG is forced to sell the biggest stake of GBTC on the open market. You would get absolutely fucking roached. So it all comes down to timing. And you could really fuck it up if you're bad.
Just so those who don't know what we're talking about, GBTC is a stock ticker symbol. It's what it actually is a longer story, but from a pure trading perspective, it bottomed around $5 at the COVID crash lows, hovered around $8, and it ripped to about $50 or $60 at the highs. And it was used as an arbitrage where people could basically buy it, lock a period, and then were able to sell it at a premium to Bitcoin. The premium flipped several months ago from a positive to a negative. And if it were trading at, net asset ish minus roughly the 2% of Bitcoin, it would be around $15 a share right now. And it's hovering around $8 or $9. So there's a reason for why it's such discounted as it is. And it's ties to the overall parent company that more or less controls it. is having issues in itself. So there are derivatives that we can trade Bitcoin, and not just Bitcoin itself. There are stocks like the miners, Riot, Mara, other ones, Can, other, that come to mind that were amazing trades, right, during the 2020, 2021 bull market that even had exponentially bigger move from a stock perspective than a lot of the altcoins. And they have basically done that full trip, right, from where they were, pre-COVID-ish, around the COVID crash, to the huge pump, and now they're literally back to where they were. So they did the full round tripper, and that's where, as somebody who's been in this market for several cycles, I begin to perk my ears up about, we're back here at the beginning. Are these levels that are attractive to me as a trader, as an investor, to put capital in? But the question is that, we won't know the Bitcoin bottom until probably a year potentially after it actually happens, right? How can you confirm a bottom until we have so much separation from a particular price point? And the notion that I hear a lot in these spaces is that the next bull market, right? We're so close to the next, bull market, and that has to do with the pivot, right? The pivot notion of the Fed, that at some point they're going to do a 180, right, and be accommodative, cut rates, and buy bonds, and potentially in the future they may have to be that. They may have to do that, but I don't think we're anywhere close to that kind of.
They're not going to be accommodative when inflation's 2.1%, like 230% over their target. Like that's not like the pivot bros. Like pivot bros need to
going
take
the
their
right
hands out of their pants.
direction. You're totally right. We went from 7.3 to 7.1. The market ripped for a moment, right, and then we saw what happened the preceding 3 days after.
Yeah,
It gave back all of that big push.
Play that forward. What if we kept still dropping? I'll grant you. What if we kept dropping at half a percentage point on CPI inflation month after month? How many months are you still going to have to take till you get anywhere close to 2%?
We won't hit 2%. We won't hit 2% in 2023. Won't hit 2%.
Right. That's what I'm saying. Talking price is fun, but max pain is not a price. Max pain is time. And Magoo remembers this well. 2014 was down only, and 2015 was just dragging ourselves along at the bottom of Bitcoin price for a whole year. It was 2 years of pain. And okay, in 2022 that was down only. I would love if 2023 was just literally just bottoming, but I mean, you got to prepare yourself for the time factor.
Yeah, because everyone's been calling a pivot for almost I don't even know how long now, right? Like whatever the terminal rate is, I've been saying this, whether it's 5%, 6%, where it is now, they're not gonna instantly just go, oh, we're at 5%, now we're just cutting it the next month to 3%. Like that's just not fucking happening, because inflation would shoot right back up. And a lot of remember, the Fed started actually moving almost, I don't know, call it 9 months ago now, and inflation's come down literally 2%, 2% over the full time that the Fed is raising rates. Yes, it takes a while for these rate hikes to actually be baked into the economy, but you could actually even say that Biden's draining of the Strategic Petroleum Fund has actually been a pretty big factor in why inflation has come down as much as it has. And that's already half empty, right? And we're going into winter. Inflation is so much more sticky than what people think it is. We can get it down to probably 5 or 4%, but to get it below there, that's where you're gonna have to have this massive period of low growth because rates are massively high. And people are not taking the Fed for their word. They think that the Fed is going to capitulate on their 2% target, and they're just well, it's 4%. Let's just give up. No, they're not going to. They're going to hike, and then they're going to hold it until we're in a recession, and then the recession is going to bring deflation to us, where it's going to be an inflationary story, and then it's going to turn to deflation pretty fucking quick. And it is going to, even with deflation, it's going to take a long time to get back to 2% year over year inflation. It's
Sure, the best case of the Fed's actions are actually a worser case for the economy. Right? they'll be able to slow down the rate of inflation by slowing down the growth of the economy, which in itself is basically taking money out of the economy, which is a bearish thing.
They
Less money in the economy, less money the consumers have to spend.
they need people to lose their jobs. Like, one of the reasons why this inflation has finally grabbed a hold and actually was persistent and not quote unquote transitory is because this is the very first time since I've even been alive that wage inflation is actually grabbed on after corporations have actually hiked prices due to base material costs, is because you were in this dichotomy where, because before, normally wage workers and people were like, well, give me a raise, and the corporations were like, well, go fuck yourself, we can go hire anybody else. But this is the first time where actual workers had the power in their hand, because unemployment, or because employment was like anyone could get, no one wanted to work because there was free money, and they actually had power over the corporations for the first time in a long time, and the corporations had to buckle and pay them. And I don't know, I run a team. I hire people all the time. The wage inflation that's happened, and even in the last year, has been fucking insane. And that is what's driving a lot of this structural inflation. Obviously, the shit in Russia, in Ukraine, and kind of like the breaking down of supply chain 1.0 is a structural reason for inflation. But wage inflation is the number two thing on why inflation's so fucking
Bingo.
sticky. And
Yep.
the Fed needs you to fucking lose your job to be able to get inflation back to 2%. They can't say that, but
Hey,
that's what they're
hey,
actively
Jay
doing.
Magoo,
Jay Powell straight said that, Magoo.
I do have some things to add, which perhaps can give a narrative um, of CPI, at least coming in the second half of the year. And a few data points is, the Fed funds rates to lower services and PMI. If you look at the interest rates of where they were in 2007 and when they cut, that's essentially when CPI started going, heading lower. And also, the 2-year annualized growth rate and the U.S. output per hour of all persons is at an all-time low, and that also could add. And also, the tightening of bank lending standards compared to the S&P also puts a downward trajectory. And of course, the HARP shipping index as well, which has pretty much been down only, and reached that blow off top late last year. So,
Look at the manufacturing
M-
data as well.
yeah. And
Magoo, I
Magoo,
think
I
you're
do
hitting.
have something to ask. I know I haven't said much up here, but I want to take advantage as much as possible. So, when we look at this year, quantitative easing stopped in March, right? So, is there a case to be made that, given that it does take at least 2 quarters for monetary policy to hit the economy, you think that all the money that the Fed printed, at least for the 3 months out of the year, was then priced into, that 9% CPI? And because we started QT in June, it's only now that we're starting to see the effects into the economy in regards to a lower CPI number. And I want to make things clear, like, I'm still completely new to this. I've only been learning for a few months. So I know I'm getting a few laughing signs, but hey, bro, it pays to learn.
Well, ultimately, a lot of the data, like, to really simplify this, a lot of the data that the Fed looks at is backwards looking, and that's why they were late to realizing that inflation wasn't transitory, and also why they're going to be late to the story about tightening too much, right? Like, this happens over and over and over again. Like we've known, like, the housing market has come down quite a bit even since the summer, but a lot of those numbers haven't even, like, worked their way into CPI. And even, like, when the Fed does interest rate hikes, at the end of the day, it takes a while for it to actually work its way into the economy and work its way through. And we're going to start seeing, like, the accumulated effects of all the QT and the rate hikes start showing in the economy here relatively soon. But by the time that actually happens, they would be over tightened, and they will cause a recession
Yeah,
essentially.
and Magoo, I
Yo,
know you want
Magoo,
to say. Magoo, this is the last thing I'll say.
Magoo,
Uh, Magoo, I know you also said something about like the jobs market. Do you think there's also a case to be made, given that small businesses and their hiring plans are back to pre-COVID levels, perhaps that can also contribute to the wage inflation situation that you're talking about. And when it pertains to housing, where are people going to go? Like if they sell their house, where are they going to store that wealth? They have nowhere to go, and it's definitely not going to be oil. So I
Well, let
think
me
like
respond to you, Wabi, because I actually have an answer for your employment question. I think
okay.
a thing that people miss about the COVID situation with employment, because sticky wages is a big component that the Fed was concerned about. Like Jay Powell came out and said that several times. Um, so one of the dynamics people aren't like really paying attention to is there was an accelerated retirement during the whole COVID thing. A lot of people who had been working in their jobs 30 years that they got, they were replaceable. Like I saw people who were 30-year employees get sent home. And so then when they got called back, some of them said, fuck you, and they walked, right? And so, like Magoo said, in the past, these companies have been able to just bend people over and just take whatever they want. It's like, oh, you want to raise? Fuck off. We'll hire someone else. Whereas now the job market has kind of changed. And so this sticky wages that resulted from this, where companies just had to shell out the bucks to get people to show up to work and do jobs that they paid significantly less for in the past. All of a sudden, they're having to pay people who are less qualified even more money, and and then the businesses, like all of a sudden, businesses have to raise their prices. So this stuff cascades from the wage issue, right? People demand more money, and that stuff works its way into goods. So you were right in saying like stuff does take time to hit, but I think that like people miss the employment part of this. And this is what Jay Powell says. Jay Powell came out and says like, yeah. Like they don't give a shit as much, I think, about the number CPI as much as they do about like the jobs, right? When they see that there's significant amounts of firings and layoffs and stuff, that's when they'll probably chill out.
It's
I mean,
because they don't want a repeat of the 70s where they took their foot off the brake too soon and inflation ramped right back up to be even more. And so to actually put your foot on the throat of inflation and kill it for once and for all, you need to actually create unemployment, because that's what really stops it in its tracks. And that's what they have to do, because if they take their foot off the gas right now and go back to quantitative easing and reducing rates, inflation will probably pick right back up in a couple years and be right back up, because we're living in this new world of like the supply chain 2.0, where there's structural inflation everywhere, and there's going to be everywhere for the next decade. Like, I don't get into in-depth macro
I
conversation
think
about.
even more than employment, right, is the housing market. I think the housing market has been the biggest driver of the inflation, the wealth effect, right, created by people that were either owned a home that was, two, three, 400,000, that is now or was 800, $900, $1 million in a matter of years. There's still a significant amount of wealth and wealth effect still in housing. And yes, certain markets in the past year have fallen significantly from their extreme, insane highs. Austin, Tampa, Vegas, Miami, parts of California, Sunbelt. Okay, those have come down. But I look on Zillow, I see what the market is, and the higher end market is still trying to grab onto these valuations that they're still hoping for, and until the excesses of that part of the economy get wrung out,
Not even just the high end, Jonas. You're totally on point. I
yeah.
posted something to the Nest that I tweeted out in June, and it's literally a clip of Powell in his presser talking about how they need to reset the housing market.
100%, 100%.
And it just came out, I think, last month that the average home in the United States requires over $100,000 of income. So you're getting this point where I think the housing market's highly underrated. People aren't looking at it. I've been watching it because I'm trying to buy a home, and I'm sitting there with two tech incomes in my household, looking
How
at it
about
like, what the fuck? This is way too expensive. So how's the average person gonna afford a house? And when they realize that that's out of reach for them and everything's been inflated to the max, like this is where people get pissed.
Let's
So I
don't
think the
forget
Fed,
that
Dude,
don't forget that Blackstone just closed the the withdrawals of their REIT. Like it's gonna get bad quick in real estate. Even worse in other countries than the United States for other technical reasons with term mortgages and whatnot, and not variable rates. Certain
I
places
had a
around the world,
mortgage
but
broker call me this week, just like trying to con me in, saying how it's the best time to buy and I should buy, 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 buy. And I was laughing my ass off, talking about like how the market's just starting to cool a little bit. And it's like the desperation on his voice was palpable.
well,
I've never heard of
Just a quick
realtors
roundup
cold
on the
calling.
housing.
That's a switch. Yeah.
Well,
Just a quick
he
thing
heard
to
from the
kind of tie
realtor
up.
I was working
Guys,
with, right? Yeah. So
guys,
Yeah,
isn't there a case to be made though that as far as home builder sentiment, that it's essentially lower than it was in 2007? If we look at the 2-year change in the NAHAB housing market index, we're essentially like 10% lower than where we were in
But the
07.
big difference between then and now is that we had rates peaking then. I remember because I did a mortgage in 2007. It's like 5.5, maybe we peaked around 6%. We're already above 7 now, and you have to ask yourselves, what is a housing market with a 30-year, conventional over 8%, right? Now, I asked my mom this in the early 80s, right? And she bought my childhood home with like a 14% mortgage, right? So no one in this generation, let's say under 45, has really experienced a housing market with a mortgage higher than 5.5, 6%.
So,
So
Yeah,
we're
but it's not the
we're
percent.
Jonas,
It's not
so
the percent. It's the how big of a portion of your annual salary
bingo,
that
it's the
is.
payment. It's the payment.
bingo,
Yeah.
bingo.
right.
Payment.
What was affordable of an $800,000 house was that I can do it for a 3% mortgage. I could afford an $800,000 house in a good neighborhood, a place you want to raise a kid. Now you have an $800,000 house with an 8% mortgage, and that monthly payment now is double what it was, a year or two ago. So yes, these are things that will uh, housing, which is, I think, what the Fed, partly needs to do by keeping the rates high. And we, I think, as a populace, need to come to the fact that we will be potentially entering a fair market mortgage environment when with these high mortgages. So what needs to break first? Is it the mortgage rate, or is it the actual selling price of the house? And there's a battle happening right now. People who are investors during the past few years are very hesitant, right, to fire sale these homes. But they're going to have to make a decision sooner than later if they can't rent them for their monthly nut, which is happening. And because you're seeing the rental increases are slowing, even though they've been, pretty high the past 2 years. And until we begin to see inventory come on the market, which really hasn't happened yet in the levels we had seen previously, you're just not going to see that. The market's still tight because
Jonas,
inventory is tight.
So let me
Jonas,
let me just let me just share some information about some of that math. So I posted it in the nest as well, but in January of 2021, a 30-year mortgage rate was 2.65%, and the average home price was just over $400,000, which equated to a $1,300 monthly payment. Today, yeah, a mortgage rate at 30 years, even at 5.5 or 5.78%, and the average home price today is 570,000, and that would basically bring your payment to $2,700. That's more than a double, right? Assuming 20% down, you need to fall 52% for the same monthly payment. So, like, to me, it's obvious what's going to happen first. The housing prices are going to come down before the rates do, right? Like, just for more context, from 2000 to 2022, the median income in the United States increased by 82%, from 41,000 to 76,000, while the median home price exploded 220% from 127,000 to $407,000. Like that, so that is basically an index of telling you how unaffordable or how more it actually started to cost to buy housing relative to your wage, right? And then the very first thing I posted is just a chart of the United States single family home mean price, like the mean price, right? And like it is literally so far out of trend. Like it's simple math. Like that is
But why
simple
is
math.
that? The single family home is not bought by the single family anymore. It's bought by investors, right? It's bought by conglomerates. So that's what's changed. Is we had we come through a time period where people with just a little bit of money could buy homes at such a ridiculously low rate, and the Fed kept their foot, on the gas in terms of that for way too long. Kept housing. That's what spiked housing. Because why not? Why wouldn't I lock up a house at 2.75% for 30 years and
Well,
then
because everyone was
rent it
told up
out?
only too, Jonas, right?
Exactly.
Everybody,
So
like,
That's
I
what
talked to
happened in
people
2007
at,
too.
yeah,
and
people
that's
at the
why
top, like last
the
year, were just,
environment of that unwinding needs to begin to take effect. And the moratorium on foreclosures, which was put in by the government during COVID, that needs to lapse, countrywide. If we had
yeah.
that erased and we had allowed the normal foreclosure process to take place, we'd be much farther along in this process right now. But now we have this backlog of people that really should have been foreclosed on months ago that just haven't been yet, and will be eventually, and we just got to
Yeah, it
pull
was a
that band-aid
political
off.
thing there. They didn't want to be
100%.
seen as, they didn't want to be seen as letting people be out in the streets. But what that happened is, I totally agree with you, that compounded into the real estate market. And to Wabi, what Wabi was asking earlier about home builder sentiment, the reason home builder sentiment is ass is because they can't buy anything for a reasonable price to build on it and sell it because nobody's buying it. It's like, if the values come back down to reality, home builders will be able to turn a profit. But as is, it's like they're trying to buy stuff that's way overpriced, and then what? They're going to be in the hole. You wouldn't spend a bunch of time and money building something to sell it for
And
less.
there's people kind of stuck in the middle right now, right? Who put deposits down maybe like 6-8 months ago on houses, on spec homes that were to be built, right? And now they're on the fringe because they have their deposit, but they can't get the rate anymore that they thought they could do like 8 months ago. And now the economics of buying that home no longer work. These are things that need to get cycled through the system and the market. That's why I think the Fed, as was said earlier, it doesn't want to repeat its previous mistakes in the 30s, in 1937, and in the 70s, where we had the double dip recession, right? So the only thing to do is just to continue to put pressure on this economy. And if they have to continue to raise rates, maybe they'll do it at 50 basis points or a whole string of 25s into 2023, 2024. They're still going to QT. They're still going to try and take some of what they've bought, right? They're buying Apple bonds, right? I mean, come on, they bought so much stuff to prop up this market, and just real quick on the valuation of the market as a whole, how much of the market is valued in Apple, Microsoft, Tesla, Amazon? Yes, these companies have had drawdowns, right? But Apple is still worth $2 trillion, and I think
That's going to be the signal to me when we go for the next leg down is Apple. When Apple finally
Yep.
breaks kind of where it's in the trading range and it starts to go a lot lower, like COVID level, like stuff. That's where we're headed, right? Tesla's already started its decline down. Probably we'll see more downside, but some of these big companies, like just the biggest one, like Apple, it still has a lot to come down in terms of valuation, because this year's earnings projections, like all the analysts are projecting like 2, 3, 4% earnings growth. Like we're not going to be in growth territory very soon. We're going to be literally in negative growth territory for a lot of these companies. Like Apple moving its manufacturing from China to India, like that.
that's a big
Bingo.
deal.
Yeah.
That's a big deal.
Huge cost. Huge cost. Exactly. Like
Matt,
waking up when Apple's what? Yeah.
oh, I was gonna say, speaking of China, wouldn't this whole situation be fixed now that China's been officially reopened?
No,
And,
No.
yeah,
China's literally in a massive fucking recession right now. China's number one asset, which is its real estate, China's real estate market is actually one of the biggest asset markets in the world. Like it's like hundreds of trillions of dollars worth of value or supposed value. It's literally imploding. Like not even figuratively imploding. It's
Yeah,
literally imploding. Like they're
yeah,
literally blowing up buildings
yeah.
because no one's paying for them. Like
Yeah,
Ghost cities and
Magoo,
stuff too.
so
Magoo. I saw a portrait of China's industrial contraction, when it pertains to cement production, and essentially, like it does paint a picture that the Chinese aren't exactly gobbling up things like oil or steel,
no,
or lumber or
they're in
copper.
a massive recession. They're
Yeah,
literally in a
yeah.
massive recession. So this is if you and your friends aren't talking about peak China, you don't have the right friends. Because China for the last 20, 30 years has been literally the growth engine of the entire world. Because they were eating up all the raw commodities to actually grow and take their literally country from rice paddies to a first world country in the last 25 years. That's not the case anymore. China's not the growth factor. Their population's on the decline now. They're literally their markets are imploding. Like China's peaked, guys. Like this whole nuanced story of like China's the next power to rival the United States is
Ray
literally
Dalio
it's
opium.
Oh,
literally
they're
made
toast.
up. It's made up to give the United States a quote unquote imaginary enemy because China has reached its peak and you're going to see for the next 20 years China in decline, not in growth. And that and ultimately one of the biggest economies in the world. And if it's doing this, that's very deflationary for the world economy, right? And all these countries are also pulling their supply chains and their manufacturing out of China for national security reasons. That's structurally inflationary, right? Not only is it structurally inflationary for everyone, it's bad for China, right? And so I think China has probably reached its peak for some time, and it's not going to be pretty for China.
And
Yeah, and
what do you think?
they just reopened, but they're about to. I mean, I'm already seeing stuff about how they're having medicine shortages, and it's like basically they've been trying to pull this zero COVID for so long,
Why,
and like
why do you
the
why
whole
They
thing's falling
quote
why do you
unquote
think that why do you think that they've been trying to do this zero COVID thing? Do you think it's
to
because it's
cover up
actually
the
COVID?
whole. Yeah,
It's to
no, to
cover up
cover
the
up the whole.
collapse of their country and to cover up their shortages of water. Like their water table in China is fucked. Their resources are fucked. You won't hear this because people like they keep an iron tight fucking wall around China. But at the end of the day, COVID, the zero COVID policy had nothing to do with COVID and had everything to do with controlling its populace.
So
And
bring this back to America. How does all of this affect the American economy? How does China's situation right now have an impact? And not
well,
about stocks and stuff like that. I mean, no, like the Babas and
so it's a
stuff.
global recession. So at the
Yeah.
end of
in a
the
weird way, it kind of helps. It kind of helps what needs to happen because, yeah, let's just say China had completely reopened and was booming. That's hurting, bringing down inflation. That's hurting, bringing down the price of energy and assets and equities.
so
China. Go ahead.
ultimately, in the short, it's bearish for the global economy. Long run, it's bullish for the United States. It's and to kind of dive into that a little deeper, you have the number two economy in GDP terms in a massive recession in a very tightly woven supply chain, a global economy. That's going to create a global recession, right? And that's not even talking about Europe in a massive recession or about to enter a massive recession. Um, the world of the past where individual countries can have recessions without having knock-on effects of other countries is kind of over with how interconnected the global economy is. And when you have massive countries like China in a massive recession, people like Russia in a recession, Europe's going to be in a recession, it's going to come home to roost in the United States in the form of a recession. The only good news on that is the United States is the best positioned to come out of it. But in the short term, it's still bearish.
Is China's recession, though, the recession of manufacturing or the recession of their own consumer not being able to drive their market and
Both
therefore our market?
both
It's
and the
all and
speculation with their real
demographics.
estate.
Yeah, what people waking up and realizing, wait a minute, my entire real estate retirement early portfolio
What
is
what
just
if
paper gains and
what
Fugazi.
what if I told you that 45% of China's GDP is real estate? And what if I told you all of that real estate is ghost cities with people trading them like Pokemon cards? That's what it is.
Pokemon cards did pretty well at some point.
No, but what I'm saying is, do you have these ghost cities in China where nobody lives in them and people are just buying and selling them as like literally trading cards? And that's what's kind of brought up the valuation of China. Like that was the whole CCP plan of basically creating economy on building. Like there's a reason why they build all these roads, all these cities, all these buildings, because it's like Fugazi GDP, because you're building something. But at the end of the day, there's no fundamentals behind that actually adding GDP in a longevity terms in terms of the economy. And so they were just building and pretending that, oh, hey, this is GDP because we're building. And then it just turns out that nobody was actually living in them, because most of their country lives in like this is going to sound bad, but most of the people that live in China live in the 12th century. And they couldn't actually afford these.
Well,
And
Evergrande,
well, and
remember
I can,
Evergrande?
but I can
Evergrande
legally,
Group was
I
the
can
second
legally
largest
sell
property
you,
developer in China.
right?
And you know what just happened.
Yeah, but I can legally sell you an apartment, or even an apartment complex that isn't even finished yet, or hasn't, or technically hasn't even broken ground. I can legally sell that to Magoo, and he can resell it again. And
well,
then if that's legal, then I'm not even incentivized to
So
ever
they
finish it.
were
What's the
doing a
point?
Ponzi scheme. So what they were doing, these builders, like let me give you a quick story on Evergrande. What they were doing is they were using the next site's pre-orders to actually fund the current site's construction. And that they got backwardized really quickly, and they just leveraged it even more by starting selling even more future lots and taking that money into finish other jobs. And then people finally realized, hey, I ordered this house in 2018 and it's not even been built and it's 2022, and people started being like, hey, where's my money, can I get it back? And then it just all started crumbling down. And like that's China's real estate market in a nutshell. And 45% of China's GDP is based off of their real estate, and their real estate's literally imploding, hence here vis-a-vis peak China.
This is Big Jonas here. I'm talking about some really interesting stuff here with some friends tonight. This is Big Ched's Twitter Spaces. Big Ched's may have gone to bed, but we're going to keep this going a bit longer here. We got a couple more requests here, so maybe we'll bring on a couple new people who haven't had a chance to speak yet and see what some of their thoughts are. I'd like to invite D++. He is connecting right now, and if he wants to come on and ask a question here to the group, and we have a few more people that like to ask some requests. So kind of anything goes here on a Saturday night. D++, please unmute. And what's on your mind tonight? D++, go ahead.
Hey, D.
Oh, hey, sorry. I was double dipping Bitcoin Clubhouse and Bitcoin Twitter. Apologies.
No worries. Well, what's on your mind tonight?
Oh no, I'm all good. Like I said, I was in the middle of another Bitcoin discussion, so forgive me. I actually forgot I was in this room.
No worries.
How's that?
Any thoughts about anything? You got anything to say or?
No, just checking out Noster, and
Run a damn relay, D.
no, I mean how much storage would you need, honestly? Like so much, like just to run a relay.
Yeah,
insane amounts. But so far so good. I think I like this a lot better than I like the Mastodon model.
But what if we just run light relays or full relays and leave the archive relays to AWS?
Matt, you're
I'm running-
confusing me, brother.
I'm running a pruned relay. I pruned it down to 3 gigs.
There we go.
Guys,
Just the current state,
Bitcoin,
not the forever state.
Is this Bitcoin DeFi, bro? Where can I lock up my Bitcoin, use it as collateral, borrow against it, get paid for
BlockFi.
that?
I heard BlockFi is a real good place for it.
Celsius has got you, man. Celsius has a token.
Is it manageable to bridge BTC to AVAX? I'm a huge proponent of AVAX. So
yeah,
how about
totally
Sergio?
doable.
I heard,
Sergio,
yeah.
you got any thoughts tonight, Sergio? Sergio, please unmute and what's in your mind?
Okay, yes. Think you're calling me. Okay, I was wondering. I mean, I understand. We all
Oh,
understand. Hello, yes, we all understand.
Sergio, hold the phone a little bit away from your face. It's really loud.
Okay. I thought it was too short. Okay, we all understand all the macro situation, the Federal Reserve, and everything. I was trying to see from if there could be some other, let's say, some positive outcomes that could come, for example, from a major adoption from a second or third world country where all these other currency that are not the strong US dollars or euro that are going to face significant problems. And if not the country, at least the population. What if, I don't know, large parts of Africa, South America start to massively go into Bitcoin? This is going to be to create a scarcity and then drive the price up, for example, or maybe.
So that's a great question, and something that we kind of touched on earlier, right? How do you get this mass adoption, right, to create um, enough of demand, right, to drive prices? And you ask yourself, it's like, what is the catalyst for either thing? Like, I think it'd be great to bring people that are unbanked, right, especially in third world nations, especially in Africa, into some sort of a banking ecosystem. And crypto can definitely be a way to do that. You know, get everybody a cell phone, get everybody a wallet, and some sort of an onboard, right, that they can feel some sort of trust. But what becomes the next like catalyst? Is it them using Bitcoin as a transactive, right, to be paid, using it as commerce, using it as a medium of exchange, or is this just another like are we expecting them to be investors? You know, so there's such a great use case, right, for the what Bitcoin can do. It's a provable uh, medium of exchange, right, a transaction thing. But it's something that, you know, I wish I hadn't spent a lot of my Bitcoin over the years. I wish I had kept all of the Bitcoin I had at some point, because at some point it was a great trade and not necessarily the best, you know, thing as to use as a transactional medium of exchange. So, like, what is the promise in the future? Does Bitcoin need to be more of a valuable asset to bring people to it, or does it need to be pushed as the best chance to bring a medium of exchange to the unbanked people of the world? That's for anyone.
Yes. Yes. Ultimately, it will do both, and it happens in a certain sequence, right? At the end of the day, um, people are not wanting to actually spend their Bitcoin today because it's literally at the beginning of its monetization phase. And people are like, well, why should I spend my Bitcoin when ultimately I believe it's going to be $1 million a coin? Let's just say $1 million for lack of a better word. And let's say I'm not giving a time horizon, but let's say Bitcoin's going to $1 million that they believe. Why am I going to sit here and buy a TV with Bitcoin today? And then that will be the ultimate regret of my life. Like, and I literally have a plasma TV in my basement that's probably worth over $500,000. Like, it's things like that, and people don't want to lose it, right? Because plus it's also like taxable. Like, if you're a law-abiding citizen and you're sitting on Bitcoin right now, and you use it in a transactional manner, you're having to pay taxes on that, right? Like, that is quote unquote a taxable event, right? And so people are not wanting to spend it, at least in the United States. And that's why you're actually seeing it being adopted more as an actual peer-to-peer payment system in other countries, because there's no capital gains in like Nigeria or like Argentina or wherever, right?
South
And
Africa.
South Africa, wherever they're using it, right? But ultimately, Bitcoin is going to get to this point where it stabilizes as an asset and it monetizes. I don't know where the end of the road is for its monetization, but it will get there. And then it will be relatively stable, and people will be more willing to use it as an actual transactional currency, whether on base layer or whether on Lightning. But if you want to look in terms of network security, right now it's actually more beneficial for the network for you to hold your Bitcoin and hodl it to increase the scarcity in the open market, so the price goes up. Because right now, when you have block subsidies on the chain, it is more incentivized for the miners, for those people to hodl to increase the US dollar denomination of the block rewards. But as those block rewards get diminishing returns as each halvening happens, these miners actually are going to start wanting people to actually transact with it, to actually create scarcity not only in the Bitcoin asset, but scarcity in block space, which will then vis-a-vis increase the networking fees that you're going to have to be paying on the network that the miners are going to be mining on top of the block subsidies. So, like, even on the security model, Bitcoin's actually incentivize the security for hodlers today. But then as we move into the future, the security is going to be predicated on the spenders as well.
Magoo, can I say, let me just say this publicly, man, because this is one of the only opportunities that I get to say this. Magoo, I'm one of your biggest fans, brother. Honestly, I've been a fan of yours for months now, and something that I'd like to do outside of this is, perhaps host you and also Matt on a maybe like on a Bitcoin Christmas special sort of space, maybe on Thursday, Friday, or not this Monday, but next Monday. I honestly love it. And yeah, I want to say it because I know both of you guys' DMs are turned off. So I guess this is kind of
As
like
long
a
as it's
proposal. It's a
as
proposal
long as
from
it's not 2 a.m. or my wife will kill me.
no, no, no.
But
It'll be early. It'll be like 7 p.m. Eastern time if that's a good time for the both of you.
all right, we'll talk
Yeah.
offline. Let's talk offline. Inside joke there too.
Yeah,
So
Matt, one
just
time.
to kind of bring it all back here, just we're talking about ecosphere, where Bitcoin is headed next year. A lot of interesting ideas, basically, about the macroeconomic structure that we're facing, and I think as we kind of end up the year in 2022, right? And we think about where we started this year from a valuation standpoint, and from kind of like the hope, right? Kind of like the idea about every year we can grow and expand this market and this ecosystem to where we are now, where we're under a $1 trillion market cap, a lot of implosions of big players, a lot of trust lost, a lot of money lost. How do you stabilize a market like this where not only trust is lost, um, but the whole, like, we're talking about two things, talking about the business side of Bitcoin, right? And then we're talking about the fundamental promise of what Bitcoin can be as a tool for society in the future. And we try and wrap those two things in a value, right? Um, so I guess my kind of broad question is that what do we expect in 2023? Do we expect more of what we've seen to continue? Just a lot of these shoes that continue to drop in the market, a lot of this bullshit that we're basically seeing continue into 2023. What can really stabilize this market? Because I feel like people kind of ignored the story of Bitcoin and just looked at this as terms of a way to get rich quick, and a way to take an easy journey through investing
So
in the course of a
I
month or a year. So where we headed in this next year that only starts from 2 weeks from now?
I've got a quick thesis on that. So I don't know if it's in late 2023, mid to late 2023, or early 2024, but as soon as the US Fed signals we are no longer tightening monetary policy, we are pivoting to debasing your currency. We're going back to good old debasement. You see assets across the board find their bottom, and some even rip. You will. As soon as all the smart money realizes, wait, the Fed just told me my dollar will guaranteed be worth less this time tomorrow or this time next year. Good. buy it all back, buy bottoms in.
And they do that.
That's
why?
the problem.
Why are they
We
doing
can't promise you when in 2023 or if that's 2024, but like everyone understands that when the Fed goes into debasement mode, and when your central bankers and your central governments decide that, okay, you know, we're going back to easy spending policies, everyone understands the game that year after year, your dollar bill will be worth less. It will buy you less, guaranteed, year after year after year. So what are you going to go and buy today to hold on to preserve your value?
I got one for all the degenerates in the audience. Let me call it a Matthew McConaughey idea, a brilliant idea. Not only a brilliant idea, an amazing idea. Ultimately, the Fed will pivot. Who knows when? But I think what we're going to see is we're probably going to see contagion continue and the price of Bitcoin to continue to go down. But when the Fed signals that they're done raising rates, that's not a pivot. When they signal that they're done raising rates and they've reached the terminal rate, you're going to see a knee-jerk reaction in risk assets to go up. I don't know in terms of how big an up move we're going to see, something that's not small and can't be ignored, because people are going to think what Matt just said is happening, when in reality, they're going to think it's back to the regular playbook of just devaluing currency, and they're going right back to like zero rates, and they're going right back to QE. And that's going to be the knee-jerk reaction trade. A lot of things go up. Like you could see Bitcoin go up 20, 30, 40% when that happens. And then ultimately people are going to realize that they're not going back to that status quo of what we've enjoyed for the last 12 years, and that they're going to hold the terminal rate where it is for 7 to 8 months. And then you're probably going to see it drag right back to where it bottomed. You probably see a double bottoming effect happening there.
What is the catalyst for the Fed to do that pivot? Is it inflation number? What in the economy is happening for them
in a
to make that
recession?
choice?
A recession.
So it's a recession from a numbers standpoint, 2 consecutive quarters of negative GDP, or is it
No,
worse than
no,
that?
you can't. No, no. That's
unemployment.
too late. That's too late. So by the time that we finally officially get quoted in a recession, it's not going to be until like June, because they're very backwards looking. So what you're going to see is you're going to see unemployment numbers actually start ticking up, and you're going to see the Fed acknowledge that and them say that we're in a terminal rate. And that's probably when we actually are in a recession. You won't know this until probably 4, 6, 7 months out. But that's when you're going to see Bitcoin's going to be at the bottom. But when they stop raising rates and acknowledge that, hey, we're done, there's going to be a knee-jerk reaction that this is really bullish. But if you look back historically, whenever the Fed stops that, and they actually pitch really bearish for assets. So I think the knee-jerk reaction is going to be like degenerate long, like, oh, we're back into this whole fucking dichotomy of like zero rates and endless money printing, and then it's going to spike. I don't know what the biggest percent is going to be. Like you could see Bitcoin up literally 50% when the Fed says, okay, we're done raising, because that's going to be like, oh my God, the pivot's here, guys. The fucking pivot bros are here. Our pants are off. We've been waiting here for 6 months, 8 months for someone to jerk me off. Pivot's coming. And then things are going to go fucking ballistic. And then people are fucking going to realize that, one, the Fed's not pivoting, that they're holding rates even for probably a long period of time. But then they also are going to realize that we're in a fucking recession. And so you're going to see it fucking trade all the way back down to where it was.
Yeah. Basically a little repeat of 2019. Have a quick look at 2019 and that famous 2 months where Bitcoin literally put in a 4x and then slowly bled back down. But you could still say, well, the bottom was still in late 2018.
No doubt. That's excellent ideas there and information. And I think that's
we can kind of agree that the Fed is driving this market. Drove it all the year this year. Every FOMC, every what's called what do you call it? Like every time that Jay Powell had his major event, these were pivot points, right? In the market, you can see it. Everything there was a rip and a dip. So it's the Fed driving this thing, and yes, we have history in 2019, the taper tantrum in 2013 and 14, the glitch that I think Trump called it in Christmas 2019, where the Fed tried to kind of do a little QT happening, and the market kind of had like a mini crash, right? And it was able to recover. You could argue it was tax harvesting, just end of year stuff, but the resilience, I think, right, like of the market absorbing the Fed's increases and some of the hawkish chatter from some of the Fed speakers, like do you think Jay Powell wants the market to rip all these times? Like, I think
No, he's
exactly.
extremely disappointed when it's rips.
Yeah, exactly. So his rhetoric, he's realizing, has not been helpful and has been either misunderstood or just overall misconstrued, and that's why I think, as you said earlier about how they don't want to repeat the mistakes of the past. I think they're kind of continuing to keep their foot on the throat of this economy as best they can in 23, and they feel that they have running room with rate hikes and with quantitative tightening into the strength of this economy. And until we start seeing real change in the labor market, which we haven't seen yet. Exactly.
Yep.
We're still seeing the rates at 3.5, and continuing claims are still low, relatively speaking. And it's one of those things that in the labor market that it's kind of like a little bit at first and then kind of all at once. Like when the floodgates begin to open and big corporations really start to announce mega layoffs, 10, 15, 20,000 here and 20,000 there. I think that's when you really start to see that they're having a major effect on it. But right now, labor market is strong, and the labor market is able to demand a much higher wage than they've been paid literally for the past 20 years. And frankly, it's making up for the underpayment, honestly, that they've had to endure over these years. So it's a balancing, right? It's trying to find that kind of perfect equilibrium.
Ultimately, the Fed's trying to thread the needle between a depression and hyperinflation, right? And ultimately, they're going to put us into a recession. But then as soon as we enter a recession, that's where they're going to start easing again. Because if they keep rates that high throughout the recession, then that's going to cause an outright depression. So ultimately, the Fed will pivot. The question is when they will pivot. People have been saying they're going to pivot next month. I don't think that they're going to be actually reducing rates until probably the summer, when we're in the middle of a pretty bad recession.
What does a bad recession look like?
A bad recession, you can look at it as there's different types of recession. There's like unemployment recession. There's like earnings recessions. There's a lot of different types of recession, and ultimately, a bit of everything. You're going to see unemployment tick up. Like the Fed, if the Fed's seen unemployment today at 6%, they would be totally fine with that. Like, so do I think unemployment is going to go up to 6%? Totally. It could go even higher than that. But I'm totally expecting to see it at 6%. Could you see earnings growth a recession? Yes, totally. I could see earnings growth going down 10, 15% for some of these biggest companies, right? And we still haven't even seen PE adjustments come into full swing. Some companies are still trading at the dumbest PEs of
Tesla.
Literally the history of all PEs. It's still like ridiculous, right? And so you're going to see earnings growth come down. It's going to be negative. You're going to see unemployment go up. GDP is going to go back to being negative again, and not just negative because inflation's so high, because GDP numbers are based off of gross domestic product, which is adjusted for inflation. And you're going to see us getting down to like 4% inflation in 2023, but you're going to see even like weaker growth and being in like a real recession across the whole board. You're going to see the housing market continue decline in a pretty big way. Like, it's not going to be recovering here. It's just going to continue to go down. Housing will be the last thing that bottoms, right? The first thing that bottoms are risk assets. The last thing that bottoms is unemployment and housing. So realistically, the stock market normally bottoms 6 months before the housing market bottoms, and the equities bottom 6 months before unemployment peaks. And so you're going to see things like Bitcoin and risk assets bottom first. It probably while inflation or while unemployment is climbing up. And then you're going to see probably equities probably bottom a month to 2 months after that. And then you're going to see probably 4 or 5 months after that, real estate and unemployment peak. And then you're probably going to start.
Can the housing market bottom with rates being very high, relatively speaking?
Yeah, because you wash out all the speculation. And so ultimately it will bottom because housing prices need to readjust to where rates are. It's just that takes a very long period of time. Like, so let's say they stop raising rates tomorrow and the 30-year mortgages are going for what, like 6% or whatever like that. It takes a long time for that to be baked in to bring the houses and the monthly payments into alignment. And so they will bottom, they will equalize to where it needs to equalize, whether that's 20% down from here or 30% in different markets, even with them just holding the rates at where they are. And then you're going to see housing finally bottom, probably when they actually pivot, which I think will probably, if you want to look at the Eurodollar futures they're predicting the Fed will pivot in June. And so you could see housing probably bottom going into, that's kind of cyclical for real estate as well. And that's like best case scenario, in my opinion, is that everything real estate bottoms next summer, entering just before the summer hits. Like, it could be a lot worse than that. Like, some people are predicting like crazy Doomberg crap in terms of how bad it's going to get. But ultimately, the Fed is only going to let it get so bad, because don't forget, if we enter in a massive recession and start having 2, 3, 4 months where you have deflation and not inflation, if you have like a negative 0.1 inflation month over month, that will bring down year over year inflation so quickly. So if you have like February, March, April, May with like a negative 0.1 inflation, so you have 4 or 5 months of deflation, that will bring inflation probably from where we're going to enter this year at probably like 7%, where you could be in June and July where inflation is probably closer to like 3-4% if we enter that big of a recession. And then that's when the Fed will be like, okay, we've got inflation down to 4% and the rates are at like 5%. So as soon as you see inflation below where the terminal rate is, that's when you can actually start to expect them to pivot time.
Let's bring it
Guys,
back to
100%.
Bitcoin for just a moment. Can Bitcoin separate itself from this macro environment we're talking about?
No.
And can
Quick
it?
answer,
No, they're
No.
all correlated assets. No, there is no safe haven. Like, you can't hide in a barrel of oil. You can't hide in the property value of your house. You can't hide, unfortunately, in the price of Bitcoin. Like, everything is affected. It's all the same world economy.
But the good news is, I think Bitcoin will be one of the assets that actually bottom the first, and when we actually come out of this, will be the one that rips.
Yes, agreed. Like, they saw.
It's interesting.
I mean, how many times, because people learn. People saw what happened last time, and the time before that, and the one before that, and like.
So ultimately, at the end of next year, I wouldn't be surprised if the Bitcoin prices are like $35,000, which is in today's terms is like 100% rip from here. So we could get down to 12K here in the next month or two. But when we actually enter the recession and leave the recession and they start cutting, like some of the smartest people I know think that they're going to have to probably cut 100 basis points some point in 2023. So that will probably mean starting in the summer to the end of the year, they'll have to start cutting. Like I could see Bitcoin recover to the point of being at 30K by the end of 2023, which I get I guess in crypto terms, 100% upside from here is like nothing burger, but it's still something. You're going to see a
Yeah, we don't know where that bottom was that got us to 30K. So it could be something.
So
That's what
guys,
I mean.
so guys,
Well, and that's the
essentially,
conundrum of the dollar
Yeah.
cost averager, right? Can you buy Bitcoin now if you believe it will eventually one day be worth, let's say, over 50K again? You know,
Well, this, yeah.
or do you are you in so much pain if you bought at 16 and then it comes to 10? Are you upset that you bought at 16? Are you excited that you can buy it at 10 now?
Well,
Well, I
this
mean,
is
if you're that short term, I got a question why you're in Bitcoin at all. But for myself, every time I see Bitcoin put in a new lower price, a new lower low, I just reset that clock in my head that says, okay, give me at least 6 months minimum for it to work itself out and to solidify any potential new bottom. You just got to reset that time expectation clock in your head, because as we see, the longer Bitcoin trades at whatever price level, the more entities or big holders, the FTXs, the Celsius, Voyager, Lunas, you name it, the more people, all of a sudden the bodies float up to the surface like, oops, we can't manage our books. We don't know how to balance a balance sheet, and they start capitulating and going under. So, keep resetting that clock in your head, that timer in your head every time Bitcoin does set a new price, because there's no guarantee.
Yeah, and that's why it was interesting with this, most recent pump. I saw all the Moon Boys out on Twitter celebrating, trying to like dunk on people, like, oh, bull market 25K. It's like this people aren't patient. Like you got to remember, like these bear markets are painful, and everyone's waiting for the V bottom for it to just bounce. I totally agree with what you said, Matt. Like for me, I've been like pretty much risk off. I haven't even made any trades for a while because it's just like every time I'm like, okay, it's kind of solidifying. We just like nuke lower, and so I'm like waiting patiently. You can't get so excited that every bounce you think it's over. So it's going to be a lot more pain and a lot more time, I think, before we actually get. Who knows?
And that's
Again,
the
I said earlier,
realization that you have to face is that
we've never spent 155 days below the 200 week before. Like this is
it's true.
uncharted
We've never
territory.
broken previous all-time highs either. So this is a bear market that we've never really experienced before. And I think people are trying to come to grips with that fine line between, I want a dollar cost average. I want to have skin in the game, but am I prepared to dollar cost average and then have to buy again at another 50% haircut potentially in the market?
Let me just speak to how smart money and institutional money thinks about this. In a completely non-religious way. Like even myself being like a Bitcoin maximalist, and like everyone's like, oh, it's always a good time to buy Bitcoin, yada yada yada, DCA, blah blah blah. Institutional investors would rather miss the first 30 to 50% of a run of an asset than to just try to catch the falling knife. Like if you're just looking at this in terms of the trading aspect, you should never ever try to catch a falling knife, because you're not trading on any fundamental, any technical, if you just try to catch a falling knife. Like it just happened. You're just taking a chance and you're gambling, right? What institutions would rather do is they would like to see a formation of a bottom, and things to actually bottom in it to actually start trending up. Like this is the whole idea why some people don't trade assets that are below the 200-day moving average, right? It has a lot of other things that go into that first, and then at the very end, it's just technical, right? And so institutions would rather see a bottom be hit and then a trend reversal to actually start, and it to break certain key technical levels again on the upside before they even think about buying it. And they're totally okay with losing out on that upside from the bottom, because they've probably traded it so many times in their career where they thought it was a bottom. And what Big Jonas was saying is that they buy it, and then you take another 30-50% haircut, and then you're really underwater, right? Because a lot of these institutions live their life one quarter by one quarter, and their performance is rated on a quarterly basis. So like they can't take that risk of trying to catch a knife and being underwater for even 1 quarter, let alone 2, 3, 4 quarters, right? And so it's a completely different mindset, right? Like obviously, if you have like this nuts of a literally like I don't even know what like your nuts are massive, and your time horizon is very long, like you're a low time preference individual, and you are a Bitcoin maximalist, and and you're holding this shit for 10 years, then you have no problem trying to catch a falling knife because like even if you catch it and then it goes down another 50%, you just YOLO in even more money. And you just keep on doing that and doing it and doing it. And then in 10 years, you're like, ha ha ha. Even when I caught the falling knife and lost 50%, I'm up 10,000% since then. Right. Like, so that happens eventually within Bitcoin, like every 4 years. Like it might not happen the same way because of things that are happening. But ultimately, like personally myself, I believe by 2030, 2032, Bitcoin is going to be trading at $500,000. Right. And so it comes down to your time preference. Like, so if I buy Bitcoin here at, I don't even know where it is, 16K, and then it just gets cut in half and goes to 8K, am I crying? No, right? Because I'm not trying to trade something, and that's not my trading capital that I'm using. And I just got it halved, right? Where I'm just buying it and holding it for 10 years, where I don't even expect to actually pull money out. So it really depends on your own personal circumstances as well.
At the same time, I also, I agree with what you're saying, Magoo, but for me, like I have a long-term outlook, but I'm trying to get the most Bitcoin as I can. I'm not trying to catch the exact bottom, but when we're in a straight downtrend, like be patient. Like the greed of catching I don't know. I just think that like the greed, there's two ways to look at it. Some people say, "Oh, you're greedy. You just want cheaper. You just want to buy cheaper." And those
No, it's
same
called
people
being
will,
smart.
but those same people will say like, "Oh, you can buy it now because you don't know because it could go up," which is like just the same. It's like the other side of the same coin, right?
The way that I look at this, and I've held on to Bitcoin for more than 10 years now, and I'm I guess in a lucky situation where like anything can happen. I really don't care at this point, and that's kind of like what you get. I call it the Zen zone of holding Bitcoin for so long that you've been through so many cycles that like it could tank like 80% and you're still up quite a bit, and you're just like nonchalantly not giving a fuck. I know a lot of people can't do that, but even this past cycle, literally the last time that I put fiat into actual Bitcoin, like new fiat into Bitcoin, was March of 2020. Because the amount of times that I've seen these cycle plays out, like it's literally almost like I know what's going to happen, right? It's happened so many times that like it just continues to happen. And March of 2020 hit, and I was like, wow, this is the capitulary. This is probably close to the bottom. Put some fiat in. And to be quite honest with you, any of the new fiat that I'm putting in literally is like peanuts compared to my stack, like overall. So like it's not even that big of a deal if I'm DCing or not. But like I seen March of 2020, I'm like, okay, I'll throw some fiat in there, and then I didn't buy all the way up because I'm like, I knew what the cycles are and I knew it's going up. And then I actually started this cycle. I took 10% of my stack and I just sold some at 64K, and then I used that. I've been using that 10% stack for doing trades, even though I haven't literally traded. I literally just sold 10% at the top and have been holding that in cash since, and I haven't bought in any, and I don't plan on it until a lot of this gets flushed out, because like at the end of the day, um, ultimately, like I made I guess a wise decision to sell some at 64K. But like even if Bitcoin like doubles from here and goes to 30K, I'm still up like double. If I buy at 30K and buy, I would still have double the amount of Bitcoin that I sold, right? And so I'm much more happy just to let it play out and actually confirm the trend reversal, like you're saying. But ultimately, like it's still like overall like super net long Bitcoin, because like when I sold 10% at 64K, 90% of pretty much my liquid net worth was still on Bitcoin. So obviously going down still like chopped a couple zeros off of my net worth. But that 10% stack now is, I don't want to give an exact number because some math guy would do the numbers, but it's worth more than 10% of what the stack was, right? And so I'm in this place where I can just let the trend reverse and just buy in and still end up with a lot more Bitcoin than I sold.
Yeah, exactly. You're maximizing, your return on your assets.
Yeah,
That's the thing.
mind
Like,
you, also like a little bit more detail. Like everyone who's like having and holding Bitcoin, like literally when it was at 64K, like 99 point, like I think it was like 99.4% of all my liquid net worth. Actually, not even my liquid net worth. 99.4% of my net worth was in Bitcoin because I literally was mining Bitcoin when it was like 80 cents. And so at the end of like as time goes on, you might start with Bitcoin only as a small part of your capital, but as time goes
Yeah,
on,
it just becomes
it just
everything.
becomes a massive thing, right? And so I just de-risked a little bit because at the end of the day, like, and I don't do any leverage trading, but at the end of the day, you need to put yourself in a situation where you're not leveraged to the point where you have to sell Bitcoin. Like you see so many people get in this where they're thinking they're going to go so long Bitcoin or even short Bitcoin or short any asset that they get so exposed to the leverage and they think they're going to make it and then it turns on them and then they're actually forced to sell an asset that they truly believe in. Like that happened to so many people this cycle with Bitcoin. They got absolutely either rugged or they had to sell some because they weren't expecting Bitcoin to be this low for this long and they needed money to actually live their lives, right? So like you need to be like smart with it to hold the perfect amount of Bitcoin that you can and actually still be relatively safe, like in terms of like having your life secured, like by living it, right? Because like if you have 100% of your net worth in Bitcoin, unless you have a very large substantial amount of money in Bitcoin and you don't mind losing like 10 million, $20 million a day, you need to be very smart with how much exposure you have.
Yeah, man.
That's a great point. That's a great point. Hey, this is Big Jonas here. We're having an amazing discussion here. Big Cheds is probably passed out at this point. I'm pretty confident on that, and I'm about to do the same. So I guess we're going to keep this thing going because we can't really turn it off, but I'm probably going to tap out the next few minutes. Magoo, Avid, you guys are still on, so you guys are more than welcome to keep the conversation going as best you can. I'm sure at some point Cheds will awake and see what the deal is, and probably in the space. But this has been a great time for everybody here. Really appreciate all your thoughts and support and your ideas here, and we'll definitely have to do this again soon. So,
yeah, no,
keep going if you want, and just
I gotta tap out too. We've been going for a couple hours here at least, maybe 3. I don't even remember. Time flies. But I got to tap out here too. But it's been great talking to people, even people with different kind of viewpoints. It's always good to kind of stimulate the little brain cells.
Magoo.
Same.
absolutely,
Appreciate
brother.
it, Big Jonas.
Appreciate it. It's all stuff tonight. Absolutely.
Magoo, before you go, would you be able to redeem my proposal to you, Magoo?
What date did you say?
We can do Monday, Tuesday. We can do Wednesday or Thursday because I know Friday is like the day before Christmas and not many
Oh, this
people.
week? Like what? Like at night?
No, no. Like maybe 7 p.m. Eastern time, or my bad, 2:30 p.m. Eastern time, if that's all right.
Later in the day would be fine. I'm usually busy during the day. Um,
Okay.
uh,
How's 7 p.m. Eastern time? Maybe
that
for
could
Thursday.
work. That could
That
work if we have like a time period. Like what? How long are you thinking for? Like an hour, two
hour and
hours?
yeah, like hour and a half. Like that's a sweet spot. If that's okay, Thursday.
On Thursday. Let me see here. Let me just pull up my calendar. Yeah, let me send you a DM, but I think that should work.
Okay.
Let me see here.
Miss D plus plus, if you'd like to join as well, that would be great. I heard you speak last night talking about the smart contract developments on Bitcoin, and I'd really like to chat about that. I don't want to take too much airtime on the space.
Yeah, thanks for the kind words. I appreciate it.
All right, buddy. This is Jonas here. Have a great night. And this might be just spaces in the ether here, but
Jonas, I think you're able to make someone else co-host to bring up other people and stuff.
Are you offering?
Yeah, I'm offering. I could do it.
How do I do this? I can mute you. I can remove you. I don't know how to make you host.
If you click, crap, I don't even know because I know as host you're able to, but
He
co-host.
can't. He's a co-host.
Yeah.
Co-host can't make
Yeah.
others co-host. That's not how it works.
Yeah.
Yes, I am powerless. Yeah.
Big Chad fell asleep, man.
I was talking to Ted earlier. He's like, I think I had a little too much wine tonight, and I'm like, don't pass out on me. And he's like,
Man.
I'm good, bro. And then I'm like, are you there? Are you there?
Dude, he's one of the most intelligent individuals in the entire space, man. I enjoy coming on here.
Yeah, listen, we're just a bunch of guys and girls, and I think I mean, it's all about perspective, right? There's a lot of people that enter the space no more than a year ago, no more than 2 years ago. I heard about Bitcoin in 2013. I bought my first Bitcoin in 2016. I know Chad like got him into this in like early 2017, and we have been trading, OTC and stuff since 2008. So this isn't our first rodeo. I think it's about relative perspective, right? If you're new to the market, if you've only known Bitcoin over 20K, if you only known, even if Bitcoin wasn't even a part of your bull run experience, what if you were just like in altcoins or NFTs?
Yo, let's
He's
chill
up.
out, yo.
He's up. He's up.
Yo, I'm
Big
gonna
Chad's
chill. I'm
up.
gonna tease up. I think this is pretty chill. It's been a lot of fun. I'm gonna tease up. This is more than what was expected. Nothing was expected. What was delivered was a great conversation. It's been a wonderful time. I want to say thank you to everybody
Put it to
for
bed, Chad. Put it to bed.
investigating, for investing, for hanging out. Just a lot of fun, really, folks. Thank you so much. I really want to say thank you. I just want to say thank you. So, thank you for hanging out. Thanks for being there, and I'll catch you next time. All right.
Peace out, everybody.
Peace out, folks.
Have a good
You're
night.
a legend. You're a legend, Chads. Thank you.
Thanks, guys. Peace out. Peace. All right, that's it. That was funny. That was like a super marathon. Twitter Spaces. I'm glad we did that. Folks, thank you for joining. Thanks for hanging out. I've been wanting to upload this conversation for a while, and I'm glad I did. So anyway, folks, thank you so much. I will talk to you soon. Big Chad's out.